market that has actually been pretty bearish for the past several weeks. So, of course, if Ukraine ceasefire does happen, that's a little bit bearish for oil. Gaza ceasefire has held, but of course, this Houthi US conflict could turn the tide on that. And on a much larger basis, it's been the tariff wars that the US has entered, which is killed the animal spirits in stock markets, again, something you were alluding to earlier, and caused quite a lot of downside in investor sentiment with regard to the US economic outlook. And that has been bearing down on crude prices. But again, as I say, the latest development is the US attacks on Houthi targets. And let's see how that pans out.
Hi, Vandana. Good morning. I'm just curious about how much of a premium you are ascribing to geopolitical events then. And in that price of close to $71 to the barrel for Brent crude, how much is on account of this geopolitical tension? And if that does cool off, do we then see, and also potentially therefore, the implication there is that Russian crude once again finds its way into the market, above board, shall we say? And so from that perspective, you could expect a further downside pressure on oil prices. So I'm trying to understand how much you're ascribing to that and what the base assumption is for crude prices going forward.
Indeed. Yeah, those are great points to talk about. So let's talk about the Red Sea. What is the current, what is at stake? What is causing, let's say, a little bit of uptick in geopolitical risk premium in crude this morning? So as far as the Red Sea is concerned, because of the Houthi attacks which have been going on for over a year on mostly Western ships, US affiliated, European and Israeli affiliated ships, all of these ships have been staying clear of that waterway in any case, right? Over the past more than a year. There has been a ceasefire in Gaza since January between the Hamas militants in Gaza and Israel. And the Houthis have toned down or suspended their attacks on ships in the Red Sea since then, but that hasn't resulted in ships returning to the Red Sea, the Western affiliated ships. So it's not really supply flows through the Red Sea that the market is looking at. What the market is really concerned about is, could this now lead to the US and Iran on the precipice of a war? And if you recall, last April and last October, we were in a similar situation with regard to Israel and Iran. They launched direct military conflict attacks against each other, and that led to quite a spike in crude premium. So I would say, do keep an eye closely on, how this Red Sea pans out. The US has pledged that it will continue the attacks until the Houthis promise that they will not attack ships in the Red Sea again. And it's a tit for tat battle. It could continue escalating before it calms down. I do feel, however, that the geopolitical risk premium in crude as a result of this is going to be limited. As I mentioned earlier, the outlook with regards to global oil demand growth, also because of the sluggish Chinese economic momentum, is quite weighing quite heavily on crude, which is why we've seen Brent go down to 6-month lows in recent weeks. It's been flitting very closely around $70 a barrel. With regard to Russia, I do expect some sort of a ceasefire, 30-day ceasefire, to come into effect. I don't expect that will have any further impact on crude sentiment. Russian crude and refined products are already out there in the market. So we've seen them reroute the crude flows to China and India. That is not going to change. So in general, downward pressure on crude, I do expect that to continue.
Yeah, all right. Thanks so much for joining us this morning and for that perspective. Pleasure, as always, having you on the show.
Thank you.
All right, let's talk about what happened on Thursday. It was a truncated week, and hopefully you had an amazing Holi celebration. You had the equity markets end in the red on Thursday, and foreign institutions once again selling, and quite a bit through the week. But on the last trading day of the week, they sold about 800 crore, thereabouts. on a net basis. Domestic institutions buying to the extent of 1,700 odd crore rupees. I missed the AMFI numbers, and there were a few key takeaways from that. We'll talk about that, I guess, or you probably have heard commentary on that. Let's talk about what happened on Thursday, though. The benchmark Nifty 50 was largely unchanged during the week. Broader markets continued to lose ground. On Thursday, the PSU banks were the top performer. The Nifty 50, the Nifty Bank continued to trade well below all of their key moving averages. If you're talking about the 200-day, the 100-day, the 50-day, or even the lower numbers that are all below those key moving averages. On Thursday, though, you had realty, media, auto, IT, pretty much across the board underperformance. PSU banks and banks were resilient. 10 Nifty 50 stocks at this juncture currently trade less than 5% above their 52-week low. And interestingly, IndusInd Bank is not one of them. It has gained about 11% from its 52-week low, which was hit in trade yesterday. But there is, I think what you're going to talk about, Neeraj, is the potential for upside from this point.
Well, I think it's hazardous to talk about potentials for upsides or maybe even downsides at the current levels, because most people have gone wrong. So I remember we spoke last week that 22,200 to 22,700 seems to be this classic range at which the market is somehow wedged into.
And we're bang in the middle of that.
We're bang in the middle of that. So, but it's a good start today, right? By the way, just before we get to trade setup, the small interesting thing that I noticed when Tamanna spoke about gold as well, I was researching this over the weekend. ETF flows into gold are down 47%, and yet gold is at all-time highs. Yes. I mean, overall, thus far, YTD, ETF flows are down 47%, and yet gold is at all-time highs. Smacks of governments going out and buying gold, right? What other thing explains this? Because the retail consumer is not buying gold as much. But, so that was the interesting piece.
So you've obviously seen more years of this than I have, but then
I've heard to say I'm older than you, but okay.
I mean, someone's just had a big birthday and is trying to feel younger. By the way,
belated happy birthday.
You guys are wondering where Alex was all of these days.
Okay, that's one interpretation. I'm not going to change that. But so if you have yields coming off broadly in the US and you have the dollar cooling off, that's positive for gold, and that has played out.
Yeah, but my limited point is, sorry, just not too much on gold, but just this, that it usually doesn't happen that gold is at all-time highs and ETF flows are down 47%. So there is an underlying current. By the way, we might try and do a show on gold as well at some point of time to try and help people. But anyways, the trade setup. So the markets were okay. Small caps down 3%, and FPI is offloading about 30,000 odd crores from the market last week as well. So not particularly pleasant from that perspective, which is why this range is so important. DIs are buying, but we are not exactly saying hunky-dory buying out there, leading to an impact for the market. So that's part one. And when I look at market-wide, like the BSE 5000, somebody just did this analysis over the weekend, majority of the stocks are still trading below their 40-week EMA. So the buying current isn't quite there. And odd pharmaceuticals, aerospace and defense have stocks above their 40-week EMA, but not too many sectors. So the undercurrent is very, very weak. Very likely this might be a rally that gets sold into, let's see, China has a different kettle of fish, but India still facing issues. And I mean, keep an eye out. Today, some very interesting moves might happen into stocks which are actually opening up. The anchor books are opening up as well. So we might see some activity there, particularly. So the Vishal Mega Marts, Sai Life, and One Mobiquick, wherein the anchor book opened on Friday or Saturday in the March 15th, or Inventorist Knowledge Solutions, or International Gemological, IGI, which has been consistently hitting those lower circuits. So some anchor book opening there might have activity in these stocks, but otherwise, very difficult to call out serious activity. We're not seeing that consistently as a trend, unfortunately.
Volumes have been quite tepid. What has been dominating is everything around. Right?
And narrative is building.
Narrative is building. I think what's important is that so IndusInd Bank is something that we covered so closely, but I think it's important that the Reserve Bank of India came out over the weekend and said, don't worry, your deposits are safe. And this is something that we've been telling all of our viewers. We've been getting a lot of calls about it. Your deposits are safe. So, BFSI one to watch out for. I think IT as well, Neeraj, I would add. IT could be back in focus. NASDAQ recovery has been good. Even a Tesla has recovered from where it got hit quite badly. So that would be another thing to see. All right, let me talk about stocks that are on my radar. First is SpiceJet. So the promoter has sold 1.15 crore shares for 45.34 a share. He sold another 1.47% stake so that entire stake is for 52 crores. Promoter holding has now come down to 27.66% from 29.13%. The reason has not been disclosed on exchanges yet. Why is this a concern? I mean, in a time like this, when market mood is not great, promoter sales will not be looked at too positively, which is why I'm giving this a thumbs down overall. In September last year, remember, SpiceJet had raised 3,000 crores from investors. The QIP issue price was at 61.6, and now the promoter selling at 45.3. So 6 months after you've raised money at 61.6 rupees a share, you are selling your own stake at 45.3 per share. That's 26% lower than the QIP price. And at that time, you had the Goldman Sachs, Morgan Stanley Asia, Nomura Singapore, Tata Mutual Fund of the world coming into that fundraise. So watch out for SpiceJet. Was doing okay in Thursday's trade, about 6% down, but over the month has been in the positive. Let me talk about Colte Patil next. Colte Patil, some reaction has already come in after the Blackstone news. That's why you saw that spike intraday. But I thought it was an interesting development. So why is it in focus? Blackstone will be coming in and buying 40% stake in the company in 1,166 crores, the value of the deal. I thought it's interesting that a Blackstone has come in with such an aggressive interest in a real estate player. They've announced an open offer to buy an additional 25.7% stake. In the open offer, they will acquire 2.3 crore shares for 759 crores. It'll be priced at 329 per share. That's a discount, of course, to the last CMP. There's a preferential allotment as well at 329 per share. And their entity basically is what BREP Asia 3 will be buying 14.3% stake and will acquire this deal. So you already had a stock close which was higher on Friday, but I think you can expect a bit more coming in from Colte Patil, which is why a thumbs up on my list. Patanjali is the third one. This is on a note. Jefferies has initiated a buy on Patanjali with a target price of 2,050. I thought that's interesting. They say the company is now going beyond edible oils. They've evolved into a diversified consumer franchise, scaling up organically and via acquisition of margin accretive portfolios from the parent at attractive valuation. They see focus on distribution, premiumization and brand building. They expect Patanjali to deliver near double-digit top-line growth along with margin expansion. So those are the top three, 1 thumbs down and 2 thumbs up.
All three are actually thumbs up on my list. And we've been speaking, at least before I left, we were speaking about air traffic. And I don't think we've spoken enough about the airports, because ultimately that is a natural corollary to air traffic, because you had GMR Airports that reported that it handled as many as 10.1 million passengers across airports in the last month, and 12.9% increase over the year ago period. Domestic traffic rose by 13% year over year, and international traffic by as much as 13% year over year. So we should be talking about GMR airports or infrastructure. And of course, I think Neeraj is going to talk about Adani Enterprises as well, which houses the airports business. Zydus Life Science is also a thumbs up. It has gotten a US FDA approval for a tablet that treats irritable bowel syndrome. And this is something that had an annual sales of $243.7 odd million in the US. It's a positive. Of course, pricing pressure and the overarching issues that pharmaceutical companies are facing in the US continue. But this is incremental revenue generation for the company and therefore a positive. Brigade Enterprises, there are a couple of announcements for the company. It has launched a premium residential project in Bengaluru with a revenue potential of 380 crore rupees. And there's another launch that the company has done of 2,700 crore rupees, Brigade Eternia in Yelahanka in Bengaluru as well. Eternia, by the way, has 1,124 residential units with a total built-up area of about 2 million square feet. The project launches are positive, remember, because the management has spoken to us after the third quarter results, where you had soft revenue as well as soft pre-sales, which is a key measure for real estate companies. And what he had mentioned is that it was an account of launches being stuck because of pending approval. So the stock has been under pressure, so has the pack as a whole, but it could get a breath of fresh air, if you can call it that, in trade today?
Breath of fresh air. Watch out for this one. Well, by the way, speaking of airports, I'll watch out for Adani Enterprises as well today because I believe Gautam Adani reviewed the Mumbai airport proceedings and it opens in June. And
Navi Mumbai Airport.
Navi Mumbai Airport.
Yeah.
And that's housed under Adani Enterprises. So keep an eye, Adani Airport Holdings. So keep an eye out for Adani Enterprises, could be an interesting one to watch out for. But so aside of, okay, let's put it, this is one of the 4 stocks that have taken the liberty. But the key 3 other ones, GR Infra Projects has bagged the NHAI contract worth 4,262 crores. That's a large contract, spread over 3 years, of course, but large one. So watch out for this one. Could be active in the session today. Shilpa Medicare could be buzzing today. There are 3 companies which have gotten this US FDA quote-unquote approvals or no 483, so on and so forth. Alex highlighted Zydus. I'm highlighting Shilpa Medicare because the company's Raichur unit has successfully completed its 2nd consecutive US FDA inspection without any observations. So Shilpa Medicare is the 2nd one on my radar. And from a clutch of brokerage notes, there is Cantor Fitzgerald on Adani Green, Adani Power, there is DAM Capital on Ambuja, there is HSBC on Tata Motors. I have chosen Jefferies on JSW Energy. They have maintained the buy. They have hiked the target price to 700 from 680. The current price is 514. They say the power demand 6% growth visibility is in place. The net debt trajectory will improve post FY27, and they forecast a 36% EBITDA CAGR in FY24 to 27 and 24% EBITDA CAGR over a 6-year period, FY24 to FY30. So keep an eye out for this one as well. By the way, the week-on-week power demand consistently for the last 9 weeks has shown an upward trajectory. Keep an eye out for the power stocks.
I'll add one more and leads well into our next conversation, which is Infosys. Might not have too much of a reaction, but I thought it was interesting. They've settled 6 class action lawsuits, which were against their US subsidiary for about $17.5 million. And this was about a cybersecurity breach that had exposed the data of 6 million people in November 2023. So they've finally gone ahead and settled it. But the broader conversation we're having is on the IT pack, and Moshe Khatri, MD, Equity Research, IT Services and Payments at Wedbush Securities with us this morning. Moshe, pleasure to speak with you as always, right here on NDTV Profit. What's difficult to figure with Indian IT companies right now is it the best bet, or is it going to be a pack which is the worst hit considering all things that are happening? Let's just start with your overview of how you're looking at Indian IT companies right now.
I would say in general, I think it's a great question. I think we're in a very tricky kind of situation now, just because we seem to have another full start for this year. Remember, we've had 2 consecutive years with relatively kind of, flattish growth for most vendors in the sector. We started the year with a euphoria, believing that we're going to have some sort of a go back to normal spending environment. So far, it seems that, the general atmosphere, given the tariff situation, is more cautious than anything else, and that's why demand seems patchy. It seems that budgets have been approved, maybe with some sort of a delay, which means that the year is back and loaded, especially for discretionary spending. And you do have some companies that are doing better than others. Probably companies that are focused more on the cost takeout part of the business. Some of the tier ones that are based in India. Companies that go to market a bit differently, performance-based contracting, look at Huron, they're going to grow 10% this year. Companies that have a Latin America exposure on the digital side, Globant, 10% growth. So it's really mixed across the board. And I think that's why you've seen a pretty significant correction in the multiples for the sector year to date.
Okay, so let me get more specific, Moshe, in terms of what is happening in the United States right now, blowing hot, blowing cold on tariffs, uncertainty about how that's going to translate for the US economy. Is this a headwind right now for Indian IT companies?
Absolutely. Uncertainty is not your friend, especially if you have to make decisions related to discretionary spending, if you have to make spending decisions related to large contracts. All this historically has, has been impacted in times of uncertainty. I think that's what the market tells you. The market doesn't like to see this uncertainty, and therefore you've seen this massive correction in PE multiples year to date for the sector. And it is ironic because the budgets are here, but at this point, there's a lot of caution in terms of spending it.
Okay. Hi, Moshe. Good morning. In the next set of results then, based on what you've told us so far, and assuming that the base case is that we're looking at a flat 2025, what would you be, what are you building in as a key negative and a key positive? What would put a smile on your face and what would cause you to frown?
I already have a smile on my face. Look, as I said, this is a very dynamic situation, and especially when you're dealing with tariffs. And it seems that a lot of those actions that are taken by the administration regarding tariffs seem to be more of a negotiation tactic than anything else. So if things get resolved, I would say things can really turn on the upside. That's why I call this a very dynamic situation. If the uncertainty continues for the next 6 months, I think that will impact growth for the space. So it's really dynamic and things can change very quickly. And, what we have seen in the past was that some of those negotiation tactics did work, and ultimately the parties reach an agreement. And once that actually happens, you can turn the spending kind of flow back on. And that's why it's so confusing in terms of what to do in this situation for a lot of vendors in the group.
Moshe, just wondering, for a sector wherein the debate is around whether there could be a few percentage points uptick or downtick versus consensus, and which has underperformed the broader indices now materially for the last 24 months, and one which is impacted massively by Trump tweets, if not the US economy, why invest at all? Why not wait for the dust to settle, the trend to begin, re-emerge, and then go out and buy?
You know what they say, sometimes the fear factor creates buying opportunity. And I guess a lot of this really depends on how are you looking at this from a 6 months perspective, from a year and a half perspective. It really depends on your investment philosophy. I don't think the March quarter is going to be spectacular. And as it is, the March quarter is not a great quarter for the industry. But post the March quarter, it'll be interesting to see if visibility changed, because ultimately for a lot of companies, they'll have to start providing guidance for the fiscal year. And so we'll have to wait for a couple of weeks to see where this is going. But, fear creates an opportunity. That's usually the case, right?
Just one point. I know you don't want to go to stock specific, but I'm just wondering if there are any favorites that you see from the Indian IT companies. Would they be on the large cap or the mid cap space?
Typically, companies that focus on the cost takeout part of the business are the large caps. So the way I see it, they seem to be probably better positioned than some of the others. They do have some dependence on discretionary spending, but not a huge one. So even in this environment, you can probably argue that they seem to be in a better shape. But having said that, even in their case, there could be some issues in terms of decisions on large contracts. As I said, uncertainty is not your friend when you're going through that process. But they seem to be in a better shape than some of the others, the way I see it. And as I said, there are some outliers, companies that are still growing 10% in this environment. I mentioned Globant, I mentioned Huron, and then the other one that is doing even better is a company called Grid Dynamics. So you have 3-4 companies that are doing better than others. And then, as I said, you have the large cap tier ones that should be in better shape than others as well.
Moshe, thanks so much for joining us this morning, and hopefully that smile continues to remain on your face the next time we speak.
For all of us. Thank you.
Thanks so much. All right, we've got more stocks to talk about after this very quick break, so do stay with us. In the meanwhile, we're still building up to a very positive start to trade at the start of the week.
very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Back with India Market Open right here on NDTV Profit. Now, for the whole of last week, we spoke about how IndusInd Bank necessarily and rightfully was the big talking point. It was in focus the whole of last week. It witnessed a sharp correction. What has happened with the, development since is the key question, because there is some, I wouldn't call it a relief, but if anything, some positives that have come out as well. Let's assess from Vishy if indeed these are positives. He joined Vishy Vishwanath Nair, our banking editor Johnson, to recap the action that transpired over the week and the weekend in particular. Vishy, good morning.
Good morning, Indra. So, what started off with a sort of an innocuous announcement by the Reserve Bank of India to give a shorter extension to Sumant Katpalia, the MD and CEO of IndusInd Bank, then sort of snowballed, because just days after that, the bank came out with a clarification that about 1,600 odd crore worth of discrepancies were found in the bank's trading books, because of which the bank had to take this entire hit during the Q4 results. Now, since then, of course, a lot has happened. The stock has lost about 30% value, market cap in just that 1 week. What happened on Friday, however, was that the exchanges put in the IndusInd Bank stock on additional surveillance measures. This is the stage 1 of the additional surveillance measures that are applicable on IndusInd Bank. So what does it mean? Essentially, there's a margin rate which is about 100% that has been applied on all trades. The daily price band is about 5% for IndusInd Bank, and the shares are subjected to heightened scrutiny by the exchanges. Now, it's interesting to note that all of this followed a bunch of disclosures by the bank, and then more questions that were being raised, and of course NDTV Profit has been raising those questions. Over the weekend, the Reserve Bank of India came out with a clarification where RBI said that the depositors of the bank do not need to actually worry, irrespective of any speculative reports that might be coming out about the safety of the deposits. Depositors need to be sure that the bank is on firm footing and that it will continue to be so far. They have not found any issues for depositors to worry about. What the RBI has also pointed out that the bank's financial health remains strong. Interestingly, one line that was that caught my attention was the Reserve Bank of India telling the depositors that the RBI has directed the bank's management and its board to implement any remedial actions and make adequate disclosures to the stakeholders in Q4, that is a current quarter. Now, there's about 15 days left in this month, and that's when the bank has to implement any kind of remedial measures that might be. The bank has, of course, appointed an external auditor, and what our sources are telling us is that by the end of this week, the bank should receive the report from this external auditor, and depending on whatever comes out, the bank will have a plan of action in place, which it will then implement. But interesting to note that the bank has so far been claiming that it did all these disclosures on its own accord, but the RBI is saying that they had directed the management and the board to make these disclosures, Neeraj.
Vishy, I think it's interesting because since the bank has been given till this quarter to clean everything up, could we expect more announcements?
It's likely that over the course of the next 2 weeks, you may see some more announcements. Of course, the bank itself had said that there are more details to be disclosed. At this point in time, we do not know, for example, who is responsible for this gap in the balance sheet. That point of the news has to come out. Then, of course, the bank has to unwind any existing internal trades that might be there on its balance sheet, which is what caused this issue in the first place. The bank's senior management has come out on that analyst call on the 10th of March and said that we have unwound all internal trades, but what does that mean and whether that actually has a bearing above the 1,500 crore that the bank has disclosed as a financial impact, whether any more such impact is pending or not, that all of that clarification is likely to come in. So we will watch this very closely for the next 2 weeks to see what disclosures the bank is going to make to the market.
All right, Vishy, thanks so much for wrapping that up for us. Key stock to watch today. It's on the watch list as well, by the way. Let's talk about the key levels that you should watch out for in trade today, and some of that you'll take, of course, from the latest cues from the F&O space. And Puneet joining in to tell you about that. Nifty very close to that 22,400 mark, and we spoke about the broad range for the benchmark in the recent past. Puneet, what stands out?
Well, thanks for that. So, definitely the Nifty March futures are down by about 0.4%, specifically seen at around the levels of about 22,444. As you rightly said, very close to the 22,400 levels. We've seen an increase of about 0.6% in terms of open interest when you look at the Nifty 50 futures. When you look at the Bank Nifty futures as well, that's also been a very interesting trend. Trading at a premium of about 99 points, we've seen, roughly an increase of about 1.2% in terms of the open interest for the Nifty Bank futures. Specifically, it'll be interesting to see the Nifty open interest, distribution as well. We've seen maximum call options specifically roughly around the 23,500 levels, while seeing a lot of build-up in the maximum put option interest around, the 22,000 mark, and that's the spike that you're seeing, the big red spike there specifically in terms of open interest distributions. When also you look at some of the key stocks that will be in focus in terms of open interest gainers first, we've seen some kind of a short build-up in stocks like PB Fintech, Ramco Cement after that, news of the Tamil Nadu limestone tax, as well as Titagarh Railways, while just seeing some long build-up in stocks such as CAMS, as well as Solar Industries. When you look at the open interest losers as well, we're seeing short coverings in stocks such as Tube Investments. Open interest changes about 5% specifically, while long unwinding, which is negative sentiment specifically, we've seen in stocks like JK Cement, Havels, as well as Alchem Labs, as well as some on Ashok Leyland as well. When you finally look at, in terms of these are some of the key stocks to watch out for, of course, and the cues for the Nifty, of course, are somewhere around the 22,576 for the Nifty 50. So the implied open is roughly about 132 points.
Okay, Puneet. Watching out for that, and in fact, let's then take it therefore to the profit watch list as well. And what is it that you should be watching out for in terms of shares? IndusInd amongst the first ones. Shares are now placed in the ASM. Additional surveillance measures, stage 1. Watch out for them. You could argue IndusInd could be a red or a green, but the RBI commentary, more importantly, is the green. Being placed in ASM isn't. However, watch out for that. GR Infra, a large order win, 4,263 crore order win. Watch out for this one. Certainly a thumbs up. Seagal amongst the other ones which has gotten an order, 923 crores. KC, yet another which has gotten an order, 1267 crores. So actually there are 5 companies with order wins, but these 3 stand out. And there are 3 companies with some US FDA pieces. The first one amongst them is Shilpa Medicare. The second US FDA inspection done, but the reason why it's a green is because they have gotten a clearance from that US FDA inspection. So watch out for Shilpa Medicare.
Okay. I spoke about Brigade Enterprises, and this is also on the watch list. It has launched a 2,700 crore project. There's actually another one also. And what you need to focus on is the fact that these launches are finally coming through. The management has been vocal about the fact that they had dried up because they were waiting for approval. So this should be looked at as a positive. JB Chemical is something that you should watch as well. US FDA has completed an inspection. It is positive. Tata Motors, HSBC has upgraded to a buy, though it's cut its target price. It is said that the valuations as they stand are currently attractive. SpiceJet, finally, we mark this as well. Ajay Singh, the promoter, has sold stake at a price that is 45 rupees, about 26% lower than the QIP price.
All right, Kush Bora joining us in the studio this morning of kushbora.com, Chakri Lokpriya, Equities LGT Wealth joining in for the Funda View. Welcome to both of you and thank you so much. Hope you had a great long weekend and we're coming back with a bang, Kush. I hope you played enough Holi with the color green because that's what we want to see on the screen today.
There's still some traces of that.
Well, I was wondering. I didn't see anything on your face.
Been 3 days, right? We're pros, we're oils and creams on the face so that the color doesn't last and all that. I've been there, done that. But yes, a good Holi and a good long weekend, after that. And thankfully, we are opening to a good Monday as well with about 140, 150 point gap up. But while there are some positives, and let me just start with those first, right? Nifty is right now consolidating, around that 22,500 mark. That's the pivot, and we spoke of that last week. That's been the case for the bulk of the last week. The 20-day moving average, however, around the 22,600 is proving to be a stiff resistance to cross. The gap up today is also placing Nifty again very close to that mark. Now, as I said, some positives. FII short positions have come down from 82% to now 81%, which is a minor positive. Put positions building around the 22,400 mark, which is actually a very big positive. However, all of that said, remember we've been speaking about the 21,500 to 22,500 kind of a range on the downside, when the Nifty was falling, that's where we could stabilize, perhaps rebound. One can't shake off that feeling that perhaps this is a pause before we test the lower end of that range or perhaps slip lower as well. Couple of reasons, there are far too many factors on the global front to be tracked and most of them, happen to be negative. The result season also, from what I'm hearing, might not be so great, in April. If those factors do start to play out, then, we could well test the 21,500 lower end of the downward range that we've been speaking about, and if global factors continue to deteriorate, then perhaps slip a little lower as well. So I'm not too positive in terms of the kind of move that we're seeing right now. But for now, just for now, since that we've been falling for the last 5 months, and this could be a month that we perhaps give a positive kind of a return, consolidating around the 22,500 mark. For now, the trade on the Nifty is long. But I would continue to book profits along the way. That's the setup that we are in from a near and a medium term perspective.
Okay, I think that's interesting. Continue to book profits along the way. But if there was a long call, what is it on? Are both of your calls this morning, Kush, short or long?
No, near term, both of them long.
Okay.
Just a quick word on the Bank Nifty before we get to the calls, is that the Bank Nifty is on a falling channel from February. If you see, the last 2.5 months, in fact, that's the graph. If you draw a trend line, the Bank Nifty for the last 4 out of the 6 sessions has actually hit that upper end of that channel and retraced. So that issue continues where there is momentum which is trying to build in, but not happening. So the resistance zone for Bank Nifty is 48,400 to 48,700. Once that is taken out, you might see some resistance or some momentum along the way. But up until that happens, I think there'll be a storm in the teacup kind of a situation where you'll see 200, 300, 400 points kind of moves on Bank Nifty on a daily basis. But again, for the momentum to come in, 48,700, the 20 EMA needs to be crossed. Calls, both on the positive side, KSB. From a near-term perspective, 735, 755 are the targets. 695 is where you place that stop loss. From the power space, PTC India, good moves, on the last 10-15 sessions, but the volumes are the ones that are actually even more interesting. So on the upside, you've got targets of 162 and 168. 150 is where you place that stop loss.
Okay, so those are Kush's calls. Watch out for those in trade today. I'm just wondering whether Chakri, you have an opinion on this. Kush alluded to the possibility of a weak Q4. And of course, still early days, we'll see those trickle in. And in the context of everything we're seeing on the global stage, you can, I guess, take heart, at least I did, from the strong IIP number, the latest print coming in quite strong. And that high frequency indicator on the back of manufacturing, that too, looking good. So therefore, would you focus on companies that are India focused?
Morning. Pardon me, I have a bad cough, cold and all that. So the answer is, I think we'll have a weak quarter. The probably companies will not raise guidance anytime soon. And for various reasons. One is the RBI cut is coming up down another very shortly in April. And until the cost of capital becomes clearer for companies, there's unlikely to be any meaningful uptick in corporate earnings at an index level. So, all these data points are kind of showing you that the market is kind of bottoming out. But market as in the earnings are kind of bottoming out, but they haven't bottomed out yet. So, and largely domestic uncertainty, some amount of global uncertainties. So I think we will see a 5 to 8% growth type of quarter.
I don't know if I'm the minority here, but somehow something tells me that Q4 and Q4 over Q3. So YOY, obviously we know that things will be different, but Q4 over Q3 will be a significant improvement. I was talking to somebody, and we are trying to get the data, by the way. Week on week power demand measured weekly for Monday to Friday, because weekends are difficult to get, for the last 9 weeks has shown an uptick. So there is clear, and this doesn't happen because retail is using more. This doesn't happen because of Kumbh alone.
Industrial usage.
Yes, it is
look
industrial
at
usage.
IIP. Last month's IIP is another
So
huge
Jan IIP was very
flag.
good. So Jan IIP was good, but this is for Feb and March as well, right? Not just Jan. That Feb and March, the week on week demand has looked very, very solid. So there is industrial activity seeing a bit of a pickup. And even if the quarter numbers isn't the strongest, if the commentary, which we'll start gauging, Tamanna, Alex, we were talking about this, that watch out for corporate commentary on our channel from 15th of March onwards. 15th, 16th was a holiday. We start from today. Let's map the corporate commentary about how the quarter gone by was and how's the order flow looking like for the next couple of quarters. I think that will give us a good idea of how the quarter and the quarters ahead could look like.
Yeah, because manufacturing ultimately was the big talking point from that IIP number, and what you're saying, I think, lends itself very well to that.
Yeah, so I wonder, Chakri, you know, you're not enthused by these high frequency indicators, and therefore put money to work or still stay on the sidelines?
No, the high frequency indicators clearly show that, if you took a look at year over year comparisons, that kind of coincides with what had happened pre-election, just after election types kind of numbers. So from that perspective, yes, things are picking up. Now the market wanted a 15% plus growth. Are we going to get that anytime soon? The answer is, I think, not yet there. But I think with a couple of more RBI rate cuts, that kind of gives more clarity to companies what their cost of capital will be. And I think that is the time we will see meaningful upgrades. Now, they might say, yeah, we're getting a few orders in, kind of thing, which will kind of, and that's the reason I say that, the market is unlikely to fall further much from here, because, the kind of all the negative sentiment because of poor earnings is kind of baked in.
Okay. In terms of, specific stocks or sectors that are looking interesting, if you want to bet on what Neeraj is saying, Chakri, you think that the quarter is going to be weak, but if you want to look at, what sectors could do fine from a quarterly perspective, would hospitality be one of them for sure? Because, you've had the chief economic advisor also come out and say that the Kumbh is going to be a boost in Q4. You have typically a strong quarter for this space in Q4. So anything that you're liking in that area?
You're right, because, I've traveled to the Kumbh and I've been traveling like crazy for the last couple of months, not really sure why, but I've been traveling. And you can see that people are spending, airlines are full all across, both inside the country as well as outside the country. So that clearly tells you, that, all the luxury end of the hotels in India, whether it's Indian Hotel, Chalet, all these companies will have strong numbers. The lemon trees of the world also will hold up. It's only below that is the problem. So within Indian hospitality, I think that's the range that I would focus on, and where they would show good numbers because, MICE has held up well as well as individual travel.
Chakri, I can hazard a guess as to why you were traveling. I think you wanted time away from the markets, time away from the screen. Over the last 2 months, at least what you were seeing was more scenic, was more beautiful than the markets crashing.
You're absolutely right, mate.
All right, let's talk.
I love the way he's saying, not sure why I was traveling, but I was traveling anyways.
I think subconsciously he was choosing to stay away from the screen. All right, but let's talk about financials. They have been in focus and they proved to be resilient while a large part of the market was under pressure, selling pressure at the end of last week, the trading week at least. And Morgan Stanley is also focusing quite closely on these financials, and they met the managements of key Indian financial companies. And Harsh is joining in to tell you about what they found with those meetings. Harsh?
Well, interesting stuff, Alex, because some observations coming through, even some outlook with regard to how Q4 is playing out and likely how FY26 is expected to play out as well. Let's pull up a Kotak because that's the first one in terms of what Morgan Stanley is noting in its observations. Loan growth guidance remains intact, 1.5x to 2x of nominal GDP. Second, margins expected to come under some bit of pressure over the next few quarters because of RBI rate cuts. This is an interesting one because Kotak's margins actually went up on a sequential basis in Q3. Asset quality remains comfortable outside of MFI, so no change on that one. Let's switch over to AU now. Microfinance and focus on the back of this one. Loan growth expected to be 2 to 2.5 times nominal GDP, so a faster loan growth than Kotak. Seeing improvement in MFI collections in March of 2025. This is a key one. Margins likely to moderate. This also remains pretty much consistent with what the other bank, Kotak, is saying. And capital ratios are strong. Bank does not intend to raise capital in the near term. So no equity dilution is the other takeaway. Quickly on to IDFC. First, loan growth could moderate a bit as guided earlier. What they've said is MFI asset quality trends remain volatile, but they've seen some bit of improvement in March of 2025. Bank expects credit costs to peak in Q4 or in Q1 FY26, and management has guided for deposit growth of 24 to 25%, so robust on that count. Now switching over to life insurers and thereafter a couple of NBFCs as well. In terms of HDFC Life, on track to deliver an 18 to 19% APE growth for this year, which is largely in line with what they've guided for. They're also expecting VNB of 14 to 15 odd percent, so largely in line with the guidance band. 15 to 17% is the FY26 VNB growth guidance. You're also expecting VNB to derive some support from lower ULIP proportion in FY26. They are also saying that they are aiming to take share of the agency channel to 25% plus in the individual APE segment over the medium term and 33% over the longer term. So larger focus with regard to agency. This is a key overhang with regard to banker that switch to agency. We'll have to wait and watch how that plays out. PB Fintech. Weakness in life and general insurance industry. Premiums are not indicative of PB's growth. As per management, it expects premium growth at 30% over the next 5 years. So that remains intact, no change. Management confident of getting back growth in the business, and there is very little to no impact of lower commissions as insurers start to comply with expenses of management regulations. That's a big key. No change to take rates is what they are guiding for. This also has been a key concern, and stock has been under pressure on the back of that. In terms of Shriram Finance, reiterated overall AUM guidance of 15%. They said they will change that if at all, at the end of H1 FY26. This is FY26 guidance. Expects no immediate benefit of repo rate cut at this point. Guides for a 15 to 20 basis point year-on-year improvement in credit costs in FY26 and aiming for 18 to 1900 branches. Currently at sub 1250. It's quite an ambitious goal to get those branch count to 18 to 1900 in the medium term.
Thanks so much for that. And quite a lot of disparate information about the financial space, but interesting nonetheless. Chakri, before I come to you on some of these names, Kush, I want to talk to you about these financial names. You mentioned your view on the Nifty Bank as a whole, but any trading ideas, any names that stand out in the financial space? PSU banks at the end of last week looked sanguine, right? So any opportunities in the short term?
You know, it's interesting that even within the financials, and I'm seeing this across a lot of sectors, which is that, I'm seeing this across sectors, which is, there isn't really a lot of tailwind that is going into a lot of sectors, and even if there is, there are only a handful of names that you can really bet on. It's no longer the case where, even if you like a sector, you could go out and invest in, let's say, the top 5 or top 6 stocks. You have to actually drill it down to the top 1 and the top 2. That is true for the banking space as well. Now, Harsh spoke of Kotak Mahindra Bank, right? Everyone's been talking about what kind of performance or lack thereof, has been the case for HDFC Bank. But look at something like a Kotak. Jan 2021 to 2,000. It's back to that mark now. So if you invested for 4 years, 5 years in something like a Kotak, you wouldn't have made any money. Now, that's my worry. Only a few select stocks, within the space also will continue to do well. So what do we like in the banking space? You could continue to invest in something like an ICICI Bank from a momentum perspective as well and from a medium-term perspective as well. But thereafter, actually, the list goes very thin. Then you move on to something, like an Aavas Financiers or a Shriram Finance. Shriram Finance had a beautiful move. And recently, the retracement has been to the 50% mark, and then the stock's rebounding from there. Aavas Financiers, after a good 8-12 weeks of consolidation, has given that breakout. So you have to be very selective within the financial space as well, even if you look at the subsector. So Aavas Financiers, Shriram Finance, ICICI Bank, these are some of the names that I would stick to.
What about IndusInd Bank on charts? After, a lot of volatility, recovery last couple of trading sessions, is it looking poised for at least a short-term relief right now?
So, as a philosophy, I trade in stocks in which I can invest. Right, so even if I go wrong...
There is no philosophy in day trading. I'm talking about the technicals on IndusInd, but yes, interested in the philosophy.
No, but trust me, there should be, because that's your margin of safety. If you go wrong, you could still hold on to a stock which you can invest in for the next 6 to 12 months, right?
I agree.
So something like an IndusInd Bank, if you ask me or Chakri or most of the guys on the street right now, would you invest in an IndusInd Bank? I'm not sure if an unequivocal answer would be yes. Same applies to an IndusInd Bank. You could see a bit of a rebound, but then where does the rebound come from? How long does it last? Very difficult to gauge in in a negative news flow scenario like this. So I would stay away from IndusInd Bank.
Okay. Yeah.
Okay, so and point well made. Chakri, we spoke about a few names here. We talked about Kotak Mahindra Bank. We spoke about IDFC First Bank on the expectation of positive deposit growth, and also microfinance, the pain sort of easing out. What stands out to you in the banking space in particular? Because one, you would expect that credit growth should improve as the rates go down, right?
Indeed, the banks are in a very strong position actually, given that all that has happened is the economy is slowed down, bank credit has come down. And then, of course, now RBI is cutting rates. In the beginning part of any interest rate cut cycle, banks always lose margin, so that's no big deal. What is important for the banks is, therefore, what happens after is loan growth picks up, and therefore profitability for banks picks up. And valuations, meanwhile, have come down dramatically for all banks. They're all trading, whether it's SBI trading under a book, or whether it's an ICICI trading at about 1.7 times book. Or many of the NBFCs, whether frontline NBFC, Shriram Finance, trading at 1.7. So valuations are very good. What is needed is loan growth. And to fund that loan growth, balance sheets are very strong for all the banks. They're clean banks, unlike previous cycles where, banks are usually troubled. This time, banks' balance sheets are very strong. So all we need is a catalyst of that return to growth overall in the economy, and banks will do well, and so will NBFCs.
Okay, so any picks which are favorites at this point, Chakri, in banks?
I think within banks, I think it'll be the ICICI, NBFC, Shriram Finance and NBFCs.
ICICI Bank.
And that conforms with exactly what Kush has just been
So philosophically and on the charts, both of you are meeting today. We'll take a very short break. We're coming back with the pre-open rates and a lot more stocks that you should have on your radar today. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
a life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Vixit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American.
Hi, welcome back. You're watching India Market Open, and we're just a couple of minutes away from what should be a big positive start for trade this week. But we spoke about a few stocks that are on our watch list. One of them is Adani Enterprises on account of the imminent opening of the airport in New Mumbai. And of course, there are a couple of other Adani Group stocks that you should also put on your radar, because there's a big thumbs up that has come through from a brokerage firm, Cantor, which has initiated coverage on Adani Power as well as Adani Green. And both of those stocks are very positive on. Mika is joining in to tell you what they're saying. Mika?
I'll start off with Adani Power. Cantor has initiated coverage with an overweight rating. Target price is set at 595 rupees, which implies a 16% upside to the last closing. Now, it's stating that the company benefits and will continue to benefit from thermal power, which is expected to remain the mainstay in India's grid. And the company does account for 8% of India's total coal-generated power. The company also has more thermal power versus capacities from Tata Power and Reliance Power, and only trails one state-owned company. And it's saying that the it's underappreciated beneficiary of the Adani Group's large presence. This includes your coal mines in Australia as well as the port coverage that the group has, which gives Adani Power a better supply chain visibility when you compare it to the peers. Lastly, Cantor also stated that Adani Power has a good balance sheet flexibility, with the company having the lowest leverage it has seen in years, and even the valuations remain quite reasonable, and the brokerage does like the company's risk-reward levels currently. Then moving on to Adani Green, the coverage has been initiated with an overweight rating as well. Target price set at 1,222 rupees, which implies a 40% upside to the previous close. What Cantor likes about Adani Green is that the company is still in its early phases in terms of its growth inflection points. It also expects the operational capacity to grow 4 times in the next 5 years, and this capacity growth is expected to drive both revenue as well as EBITDA growth. They do expect revenues and EBITDA to grow at a 21.3% and 25.9% compounded annual growth rate over FY25 to FY30. They also expect Adani Green's EBITDA to hit $3.3 billion by FY30, and the Khandwa site to account for 6.6% of India's all energy generation, which is a key positive. And the total portfolio of the company could also account for around 10% of all energy generation in India. Lastly, they do expect Adani Green's net debt to EBITDA multiple to gradually decline to 6 times and potentially even more than that in the next 5 years. And in terms of valuation, the stock does trade at valuations of 15.6 times its FY26 EV to EBITDA ratio, which is at a slight discount to some of the other peers that it has.
Okay. A quick word on Adani Green and Adani Ports. Chakri, let me come to you first on this.
Adani Green, I think, clearly has a fantastic future. The stock has corrected quite a lot. The growth is, even one of the reasons why many of these green stocks have corrected is because of removal of all kinds of subsidies by the US government on various green initiatives. Now, but that does not remove the demand for green, and especially in an oil import-dependent country like India. And therefore, continued green initiatives and green subsidies by the Indian government for Indian companies will continue. As a result of that, I think, by 2030, the numbers for Adani Green, which is just about 4 or 5 years away, look very strong. Stock is, I think the upside was far greater than 40%.
Okay, just let's take you through what is buzzing this morning. In the first couple of minutes of pre-open, these will settle. So keep that in mind. The rates you see right now is not, a full idea of how the stock will react. But having said that, look at an IndusInd Bank, 10% up. That was the short-term recovery, Kush, that I was asking you about. Should you play into it or not? KEC International, more order win news. KEC has been buzzing for the last couple of sessions as well. So KEC International back in action. Muthoot Finance, their AUMs have crossed a milestone figure. Muthoot Finance is buzzing this morning as well. Even a clutch of, smaller financials. Look at an AU Small Finance Bank. That has been having a pretty decent morning today. Even the advanced decline ratio on the broader space is not half bad as it goes. I want to look at what is happening to a SpiceJet. We talked about a SpiceJet a short while ago. Promoter has sold a bit of stake and sold at a discount to what they raised just about 6 months ago. Stock is doing okay. I mean, completely flat right now. Nothing major happening there. But talking about KEC International, is that something that you're looking at on the charts, Kush?
So does look interesting in the sense that there is some base formation attempt in place, but right now the signals are fairly mixed in the sense that the 660 mark is acting as a good support zone. It's just that on the way up you've got immediate resistances at the 705 mark, and once that is taken out at a 720 mark, so still some distance away. So if that risk reward ratio seems favorable, then perhaps for a quick trade this can be considered. As I said, the good thing is that the support of 660 is in place. So for eventual levels of 620, this is something that can be considered from a near to medium term perspective.
Okay. Couple of these, let's pull up Hitachi Energy as well. There was a fundraise, if I remember correctly. It's not doing too much. So, Chakri, we spoke about manufacturing, we spoke about a couple of other ideas, we spoke about financials. I'm wondering what you have to say about some of these capital goods plays, because if we're talking about manufacturing coming back on stream and we're talking about perhaps some of this order inflow flowing through, all of these companies have fantastic order books. We're talking about execution, which remains to be the key challenge. And so from that perspective, will you start nibbling into any of these names?
These companies will clearly benefit whenever the uptick in economic activity happens, and I think that's around the corner. It's it's difficult to say whether it's one rate cut or two rate cuts, but valuations wise, I'd stay away from all the cable, electrical type of companies. But the manufacturing companies, the ABB, Siemens, or product companies, these are the shallow capex cycle where the uptick happens much faster. And so any uptick in manufacturing activity, which is again showing higher power demand, so companies like ABB, Siemens will immediately benefit from that.
And speaking of beaten down pockets which might be finding some buying, by the way, HDFC Mutual Fund increased their stake in IndusInd Bank, interestingly. But today's brokerage call, you could argue, is also something like that. HSBC has upgraded Tata Motors to a buy rating, even though they've cut the target price to 840. Harsh, joining in with more from that report. Harsh, good morning again. And what is HSBC's principal argument?
Well, they believe that one, the valuations now look undemanding given the kind of fall that we've seen from the peak where Tata Motors stock price is concerned. So that's the first big lever that they believe gives advantage to shareholders now. In terms of the upside, a 28% upside from here. They've reduced their target price, but they've upgraded their call, and it's now a buy, target price being 840. So the first lever being that valuations now looking undemanding. With regard to JLR in particular, believes that it trades at around 1.8 times EV/EBITDA 1 year forward, FY26. That they believe is at a substantial discount to their German peers. And there are plenty of levers to look for when it comes to growth, where JLR, where margins is concerned, not where JLR is concerned, where margins is concerned. One is lower discounts in Q4 versus Q3 is what they're penciling in. Also warranty costs coming down and better sales. And all of those could well be margin levers in an environment where we've seen a sharp derating on the stock. Volumes largely expected to remain muted, so that's one metric where you're not going to see a substantial improvement according to HSBC. Even within the CV segment, they're seeing good tailwinds, especially on the MHCV side. They're expecting medium and heavy vehicle side. They're expecting to see some bit of improvement given the fact that that segment has turned profitable on a standalone basis. And some of those levers, they believe, is aiding the numbers even on the CV side of things. So plenty to look forward to in terms of improvement is what they're saying, and the stock has been beaten much more than what would be anticipated given the kind of numbers that we're expecting. So therefore, seeing value in this one, 28% upside on this nifty stock, clearly positive.
Okay. Well, thanks Harsh for laying it out for us, and I wonder if some of these beaten down large caps or do these prefer, or do these find preference? Now, Chakri Lokpriya, is Tata Motors something that you would look at? Because while they have guided towards FY25 numbers looking on track, the assumptions around 26 and 27 don't appear that great. The demerger or the demerger likely to happen, September, October, is that a big enough trigger to buy into this one, or would you look at other auto names on the four-wheeler side?
The valuation for Tata Motors is clearly very undemanding. It is very reasonable at this point, and it's partly reflecting a combination of factors. One is, of course, weakness in the markets, about weakness in the underlying demand for their commercial vehicles as well as the domestic vehicles. The international JLR is doing a little bit better. And then, of course, the demerger. Now, the demerger dates, again, will, depending on what valuation you assign, in current marketplace creates a lot of volatility, and therefore it's best to sometimes stay by the sidelines, let the whole thing unfold, and then buy into the stock. So near term, that is I would look at it as a risk, a demerger that is, which is holding back the valuation. So one way is just wait for it, and then after that invest.
So wait on Tata Motors. Would you be a buyer in M&M or Maruti Suzuki at this point?
M&M, Maruti Suzuki, yes. Autos generally have their numbers have held up decently well. Again, they're prime beneficiaries of an interest rate cuts. All the EMIs, when people buy, for them it comes down, uptick in demand. And third is, for the budget income tax cut that happened, the money actually comes into people's. They'll start seeing data flow only after April, once a new law income tax law becomes effective. So I think yes, for an M&M over Maruti.
Sorry.
Okay, as we've wrapped up the pre-open session, I think it's interesting to see where these rates have settled as well. So you might not see as huge a start as the maybe implied was indicating. And that's something to watch out for, because we've closed about very minimally down, but in the red as far as the Nifty is concerned. IndusInd Bank in focus, and I'm coming back to you with that question, Kush. Today, very simply, is it a buy, sell, or a hold?
No, it's a hold. It's very clearly a hold. See, if you're an existing investor in it, I mean, you wouldn't really be selling at 672 and those kind of rates, right? You'd perhaps want to wait out, see some kind of recovery with any kind of positivity that is to come into the stock, and then consider where you want to exit. Now, with the gap downs that have happened, there have been gaps that are created around the 820 mark, from in fact about 820 to 880. Typically, those gaps tend to get filled. So while I wouldn't go out and buy afresh, if I have this, I will continue to hold and start offloading, or perhaps booking some positions out around between this 810 to 820 zone to begin with.
Okay. So I just want to complete the point as well on the auto pack, and we've talked about the fundamentals. Kush, I'm wondering, from the three names that we've mentioned, Maruti Suzuki, Tata Motors, particularly because of the HSBC note, and M&M, which of these is the unequivocal buy at this point?
Unequivocal is Mahindra & Mahindra. Maruti is for now a wait and watch. But just going back to the philosophy, if you are a long-term investor, this is a good time to start buying Tata Motors. It's at a long-term support zone of 600. The risk-reward ratio is extremely favorable, but it has a tendency to stay in a consolidation phase for a very long time. So if you're a long-term investor, 18 months out kind of a view, this is a good time to start nibbling into something like a Tata Motors. Alex, just a quick word, cap goods you were mentioning. Yeah. While I don't prefer Siemens and ABBs of the world, the Power Mech and Jyoti CNCs of the world are now starting to look very attractive. So just a quick word on that.
Jyoti CNC actually has a good run in the last few days, so keep that at the back of your mind as well. By the way, at the pre-open session, IndusInd should be one that we quickly mark, but Infosys is the other one as well. So IndusInd, 4.5-5% high, nothing dramatic. Infosys is down 2.2%. Britannia is down 2.2% as well. Eicher Motors is down too, so keep that in mind. And the stock that is doing really well is GR Infra on the back of that large order win. Chakri Lokpriya, any of these infra names, the ordering activity we knew was going to be strong. Some of the companies that have bagged large orders included GR Infra. Do you track any of the infra names? Do you like any of them?
Yeah, infra names are all dependent again on this good old manufacturing picking up. And so, companies like the EPC companies, Nagarjuna Constructions, those companies will see the earliest orders and when this picks up in about a quarter or so. I think the EPC companies are the first route in, I would assume.
Okay. All right. Kush, at this juncture, you've seen some of the rates. We'll see them very shortly. But what is your top call at this point?
Alex, I'll continue with SDBL. This is a stock that we had discussed about a week or so ago for a second target of 126. And last week, again, we revised the targets from to 131 and 136. Good momentum, good volume action, and going against the market direction for the most part. So SDBL continues as a long trade.
Sorry. SDBL is Som Distilleries by any chance? No, Som Distilleries. Okay. Interesting name. Watch out for Som Distilleries as a pick from Kush Bora's side. 30 seconds left. What we'll try and do, of course, post-market open, is also try and talk a little bit in detail about Infosys. We marked it when we started the conversation with Moshe Khatri. But it'll be interesting to see how Chakri maybe views Infosys as well, considering the fact that it's been one large cap IT name which has actually had a really tough ride in the last few weeks. So could be interesting to talk about that. But 15 seconds left for the markets to kickstart trade on a day when China has given a boost to consumption, as a result of which the Asia screen has looked okay. Global was looking fine. We start off well. Do we keep up the momentum through the day, or do we see some selling much like we saw in Friday's session, or Thursday's session, excuse me? Well, actually it's a flattish start. Deceptive, the implied open on the upside this time, and banks are doing well. Wonder if IT is not. Yes, IT is not 0.5% lower for Nifty IT in the session today. So that is the bummer, if you will. Mid caps and small caps should come up on your screen. Mid caps flat, small cap index will come up next, about 0.33%. A bit of a disappointing start, if you will, really. Let's see if this holds out. Let's get the heat map up on the screen and see what's moving and what's not. So, IndusInd Bank, 3.5%, not the 10% really, but 3% nevertheless is good for IndusInd Bank under the current circumstances. Bajaj Finserv has an uptick. Tata Motors on the back of that HSBC note, I reckon, up about 1%. SBI Life, L&T, Hindalco, ONGC bring up the rest. Fair degree of green, which is a good thing because we don't have too many losers. Infosys is the top loser, not quite 2.2%, but 0.7% or 0.6%. Britannia, BPCL, HCL Tech are amongst the others. But yeah, what is pleasing is the quantum of green, just the fact that these two rows of stocks can flip into the red at any given point of time in the next 5 minutes as well. IndusInd certainly standing out, Tamanna.
IndusInd, when we'd marked it as well as a recovery from lows, and what the RBI is saying is at least ensuring that there is no pain as far as deposits are concerned. The inherent issues, of course, continue. Let me pull up the sectoral heat map actually before I revisit small cap and mid cap and see what's happening there. So when you look at the sectoral heat map, it's not a very bad screen. You have Nifty IT, which is hurting, and that's largely because of Infosys. Infosys, maybe the street's not taken too well to these 6 lawsuits that they had to settle, and this is perhaps the first we're hearing of them. Nifty Realty also not doing too too well. What's working? Nifty Metal. I suspect that's the China boost. Though, keep in mind that China has said time and again that it's going to boost its economy. It's not really shown the signs of what exactly it will have to do. So keep in mind on how sustainable that bump up in metal stocks is for today. Let's come to individual stocks very quickly and see what's happening there. IndusInd was first on my list, and we'll just review if it's actually holding up after those clarifications from the Reserve Bank of India. Well, yeah, about 4% up is not half bad. Our technical analyst on the panel, Kush Bora, says hold, but philosophically, don't get into the stock right now if you aren't there already. Muthoot Finance is the other one that we've been tracking, was on our watch list. The company has crossed 1 lakh crore rupees in AUM, assets under management in gold. Wow, and look at the value of gold right now. It's also telling you the appetite that we've been seeing for this asset class, and to monetize it, 3.5% up. Tata Motors, a whole host of positive brokerage notes on it. The stock is about 1.5% up. Ola Electric was the other one that I wanted to talk about. So there's this vehicle registration company which has said that they have seen a default in payments for Ola Electric. That stock nearly 3% down this morning. GR Infra on order wins, 4,263 crores worth of orders. So is the same for Seagal, so it's the same for KAC International. So that's definitely working out as far as order wins are concerned. We should pull up HCC if we can at the end of this piece, because order win for HCC also just been announced, and see if that's working. Shilpa Medicare, second US FDA inspection without observations. Definitely a thumbs up there for the stock, 1.5% as well. Brigade has launched a fresh project, 2,700 crores. Street is not taking it too positively right now, maybe waiting for more. JB Chemicals also inspection from the US FDA without observations. That's a thumbs up and 0.5% up on the stock. HCC, let's see if we can pull up HCC. The announcement of an order win came in just a short while before markets have opened, and yes, markets have responded to it positively, about 4% up. So it's all about order wins this morning more than anything else, and IndusInd Bank showing sparks of life.
And IT as well. And you saw that in the open, IT looking a tad bit weak, in fact, from the broader markets as well. LTI Mindtree, let's pull up LTIM. It's seeing a serious down move at this juncture. It's down close to 4%. I'm wondering, Kush, anything on the charts that you're seeing that looks like this is going to build into further downside for the stock?
So on a lighter note, Alex, maybe we should start discussing global markets as well technically, because last week around I said Nasdaq has gone into oversold territories and we could see a bit of a rebound, and that's exactly what's played out. Unfortunately, that's not translating into the Indian IT stocks seeing any kind of a bump up. While something like a TCS continues to consolidate with a good negative bias, I wouldn't really count too much on an IT rebound just yet. Now, specifically as far as LTI Mindtree goes, it had a serious support around the 4,600 mark, right? That's been broken. The volumes on the way up haven't really started thinning down as much. So for me, this still remains under bear territory. 4150 is the next level that I'll watch for on the downside. So if you want to create short positions, it's not a bad idea. It's just that the stock will hit oversold territories very soon. So you could see some rebound, but the broader structure remains negative. So 41,500 is the level to watch for on the downside.
Okay. A couple of other stocks that are doing well, of course, Tamanna has already pointed out Muthoot Finance, but I want to pull up something like an LG Equipment. It's up 5.5% at this point. Tejas is also doing particularly well, up about 4% or so. Valor Estate, GR Infra has also been pointed out, but all of these stocks gaining quite substantially. Anything that you're looking at with regard to LG Equipment, Kush?
So again, on discussion, after a very long time, the stock hasn't really been on the radar for a while now. Fairly decent moves in the last couple of trading sessions, but I wouldn't count too much into it just yet. It's trading above the 20-day moving average about a month and a half now. So today, if you get a close above the 455 mark, then this recovery could perhaps be considered as a stable one from a near-term perspective. So watch for the 455 mark. If that is held by the end of day today, that's when you could see further up moves. Two levels, in fact, of 500 and 525 as well. So the risk-reward ratio for a lot of names is favorable. You just want to make sure that the momentum is also, the follow-through is also there for some of these names.
Look at the recovery in the markets that we're seeing, and it's a pretty decent one in the last couple of minutes. Let's pull up the intraday for the Nifty if we can. Even IT stocks recovering well, and Nifty Bank if we can pull up. So you're seeing an upside coming in there, sharp up move after the first couple of minutes of opening. And that becomes a very interesting move. Coach, I want you to come in on this. Are we looking set for fairly positive day if you want to take position on the indices as well? And we have a bit of a clearer picture now that you're, about 7-8 minutes odd into the opening session.
I think the bulls would have actually loved this kind of an opening. When you get a 140, 150 point gap up, there isn't much you can do. You got a 50 point, 40, 50 point up move, and then you're moving on from there.
Yeah, very smart moves last few minutes.
Absolutely. But my concern is that if you look at the 22,500 call option right at the beginning, it's already added about 8-10% of open interest. And we've seen that in the last week or so, 22,500 to 22,600 zone has been a critical one. So I won't go out and initiate a fresh long position because we're at resistance zones and we've slipped from there in the last couple of sessions. The only thing that I would suggest is, one, continue to hold on to your long positions if you've got them. 22,400 should be your stop loss. Very good support zones. Put base also added out as we discussed, pre-open. If 22,600 is taken out, then you could see a dash towards the 22,800 mark. So right now in a bit of a resistance zone, let's see if this indeed is taken out and then go and create fresh long positions. For now, continue holding what you have.
Okay. What else? I mean, just trying to figure out stocks which might be active. Like we said, GR Infra was active, but there are a few others. Forgings, I wonder if it's indeed as high as the screen seems to suggest. Bring up Forgings. Yep, about interestingly 8.9%. That's usually not the circuit limit, but interestingly, it's just out there. Maybe the volumes are thin there. So keep an eye out for that one. There is strength in Muthoot Finance that we spoke about. And JSW Holdings, interestingly, I think last week too, it's had a good move and it's moving today. Kush, you are nodding. Any thoughts here?
Yeah, because while some of the other names in the sense the group, JSW Steel and all that we've spoken about have done well, very interesting moves on this one as well. If you see, the medium term support zone of about 14,500 acted up, but from there on it's practically a one-way run up until 20,300 kind of levels. Momentum also building up. You could see a golden crossover of the 20 and the 50-day moving average if the closing comes in at about these levels today. So continue to hold, but you could look at adding as well for targets of 22,000 with a stop loss coming at about 19,000. So after this momentum also, there is a good risk-reward ratio for JSW Holdings.
And and something that got acquired, NSCL. Look at NSCL today. It's up about 3.5. Was up massively in Thursday's session. So if you look at the 7-day chart or a 1-week chart or what have you, you will see some serious gains out there. Now remember, the open offer price is way lower than what the current market price is. But Chakri Lokpriya, yet another company acquired, but seeing some strong moves. Any thoughts on this or on that space?
I think that space is undervalued. There's only the thing is there are a lot of global, local, all kinds of headwinds which are holding back. So I think, from that perspective, yes, I think M&A activity will clearly increase because this is a good time. Now, I think domestic acquisitions will probably be more versus international ones. But from a trading perspective, from an investing perspective, I'm not still really sure because, we are in a cyclical downturn yet.
I'm just looking at BSE this morning, an interesting note which has come up from UBS, which is actually a positive one. Now, BSE has been facing a lot of negative narrative, especially with the options volumes coming down, a lot of questions about what's going to happen there, etc., etc. But UBS is seeing it as a positive. They're saying scaling up of options turnover acts as a key driver for BSE. It is the second largest exchange with 12.3% share in India's options average daily. Chakri, I'm just wondering if you think that there is more wind or more steam left in the BSE story. It has been a favorite for the last several months and came off, its sheen has sort of come off recently. Do you think that there's more to go in BSE?
BSE has a wide range of revenue streams, and so that will kind of help the company tide over the current uncertainty on options and relatives and derivatives part of the business. I hope the regulations are modified. I mean, for the company's sake and for the overall market perspective. But that's an unknown. And anytime when you have this kind of a regulatory uncertainty, I think it's best to stay on the sidelines from these stocks.
Okay. Neeraj mentioned this very briefly at the start. If I'm not mistaken, metals. Did you mention metals at the start?
Not today.
No, not today. But I think you've been speaking about it
I spoke
consistently.
about metals when we opened up, saying
Yeah,
that the China
I remember somebody. Yeah,
push.
exactly.
Yeah.
So I'm wondering whether and it's up. The pack is up about 0.8% right now. If you can pull up the constituents of the Nifty metal as well, and they're all looking particularly good, right? So if you're talking about the zinc company, Hindustan Zinc, up about 2% or so, NMDC. Adani Enterprises, of course, for other reasons, up about 1% or so. For some reason, it finds its mention in the metal index. But Kush, any opportunities here?
So again, fairly bullish on the metal pack. I think, if there's one space that you have to stay invested in, and I think one thing that maybe a lot of investors are missing is that if there is going to be global turmoil, then along with gold, a lot of your physical assets, which then includes metals also, will actually benefit. And somewhere, I'm starting to hear conversations that the metal rally could in fact continue, the one that we saw from COVID lows. In fact, I've mentioned this in the past. Metal index has been the best performer since COVID, and that momentum could well continue. Two stocks that we've discussed a couple of times, Hindalco and JSW Steel, continue, but something like a Jindal Steel and Power also. Right now in a consolidation phase, but it's seen a golden crossover of the 20 and the 50-day moving average. So once it crosses the 900 mark, then you could see further momentum building in, and 950 is the next level to watch for on the upside.
Okay, Chakri, as we wrap up, looking at how the markets have opened, what is your one bet? If we are going to see some momentum, and it's looking pretty decent right now, the Nifty about 148 points up, comfortably above the 22,500 mark. If you're going to see that boost coming in, and if it's going to be from the Bank Nifty or the broader markets, what is your top call this morning as we wrap up?
With the pickup in power demand, I think Power Financier, REC Limited, valuation is very attractive, trades under a book. So I think there's a sufficient upside in that stock.
Okay, he likes REC. Kush, you like REC, or you want to add another topic as we wrap up?
No, but I'll go with the same theme, which is power. PTC India has seen a good move, a bit of a flattish move today, but continue to be bullish on PTC India.
Okay, PTC and REC, it's all about power as we wrap up topics. Thank you so much, Kush. Thank you so much, Chakri, for speaking with us and giving us your views and your calls this morning. But we're shifting the spotlight to our corporate conversation. We're going to be speaking with KRN Heat Exchangers in just a bit. We'll be joined by Santosh Kumar Yadav, the CMD of the company. But before that, Anushi joins in to set up the conversation. Anushi, why is KRN in focus?
Right. So if you look at, the why KRN has been in focus in the past also, it's on the capacity expansion plans which the company had announced. So what has happened is now the company's subsidiary, KRN HVAC Products, had signed 1,000 crore of MOU with Rajasthan government, and this MOU was for a period of 5 years. Now, if you look at this capacity with this is going to increase from 6 times from April 25 onwards. So in one month, we'll see this scheduled in plan, and the capacity utilization levels also is expected to be in full stream within the next 3 years, which is expected to generate revenue potential of around 5 to 6 times as to the current revenues which are there of the companies. But other than that, also the company is now targeting high growth sectors, which includes the likes of railways, electrifications, and heavy earth movers and industrial cooling as well. Data centers is one segment in which they are planning to expand more. That's into the data center cooling side of it. Current contribution, if we see, is around 7% of the revenue of data centers. I also want to be talking about the new product introductions that the company is making in the bar and the plate heat exchangers. So the company is also now tracking the government PLI schemes and is hopeful of final shortlisting in one of these. So focus should be around that as well in the conversation that we are going to have. But even if you look at the top customers of the company, Daikin contributes to about 25 to 30% of mix, and Schneider about 15% of mix. So in the 1 month, what we are seeing is the additional capacity is going to be a big focus point for the company in terms of where the revenue potential is, how the company's margins are going to pan out from those levels, and also KRN Heat is in focus on the back of this, and overall business outlook as well.
All right. Thanks a lot for that, Anushi, and interesting. The summer may be here, but for KRN, of course, they're not dependent on purely what happens to Indian room and conditioner market. Santosh Kumar Yadav, CMD of the company, joins in right now to talk about how business may be currently and in the quarters to come. Mr. Yadav, good having you. Thank you so much for taking the time out and speaking with us. This is Neeraj here. Good morning. I would love to start off with a basic question around how the quarter has been, Mr. Yadav, because we are trying to understand from companies that was the ordering activity domestically and maybe even globally, has that shown an uptick in quarter 4 after the relatively slow quarter 2 and quarter 3?
So good morning, Neeraj, and thank you for inviting me for this call. So honestly, you already talked about the room air conditioning, but actually now you can say that order is maybe open for all commercial side also. So we are almost full since last quarter and this quarter also. So we able to stretch little up because of the capacity constraint, but hopefully in next 2 months we will start our new capacity and then we can able to increase our growth. But the demand is there and order is there. Customer needs like full swing capacity wise, but hopefully we will able to achieve in next quarter. So this quarter maybe we will able to achieve slightly up because of stretch on existing capacity. And good things for us like North America side. So I hope you are aware that Trump has put the duty on Mexico and then Canada. So we're receiving good inquiry from that market also because they are now keen to maybe need some supplier good from India side.
So Santoshji, please tell us okay, good to know that आपने बोला कि वो Mexico and Canada there are duties जिससे शायद आपको भी फायदा हो. Can you elaborate a bit on that? Because सभी ये मानते हैं कि अगर ये if there are issues because of Donald Trump's duties being imposed, Indian companies पे भी शायद आ सकता है. Can you give us some clarity around this? Because I heard you speak about this.
No, मेरा पर्सनल ओपिनियन है कि आई थिंक रेसिप्रोकेट में अगर हम ड्यूटी वी विल रिसीव सो नॉट मच कंपेयर टू चाइना एंड मैक्सिको एंड कनाडा बिकॉज मेन कंस्टेंट मैक्सिको और कनाडा का ट्रम्प साइड में था कि जो चाइना है वो बेसिकली दे हैव मैन्युफैक्चरिंग इन कनाडा और मे बी दे हैव मैन्युफैक्चरिंग इन मैक्सिको और वो यूएस मार्केट में सप्लाई कर रहे थे. So based on that, he put duty 25% on Canada and Mexico because to stop the Chinese. So that is good for us. So अगर duty आएगा भी India market पर, I think on our product it will be maybe maximum 10% side, but not 25%. So वो leading edge रहेगा for us.
Santosh ji, Tamanna here, and thank you so much for speaking with us. You talked about demand. आपने कहा कि डिमांड काफ़ी अच्छी आ रही है. इस पर आप थोड़ा इलैबोरेट कर सकते हैं कौन से सेगमेंट्स में ठीक आ रही है डिमांड और किस तरह का आप एक्सपेंशन देख रहे हैं इस क्वार्टर में?
मैंने जी डिमांड साइड अभी जैसे समर स्टार्ट हुआ है तो रूम एसी के अंदर ऑफ कोर्स देयर इज द डिमांड. सो बिकॉज दिस बीआईएस और सम कंस्ट्रेंट थे रॉ मटेरियल साइड से गवर्नमेंट साइड से तो उसमें मार्केट में रॉ मटेरियल का शॉर्टेज था. तो रूम एसी में दिख रहा है कि सभी ही फुल है ऑलमोस्ट. और कमर्शियल साइड में स्पेशली हम डाटा सेंटर से काफ़ी मतलब ऑर्डर रिसीव कर रहे हैं जो मतलब हमारी कैपेसिटी से ज़्यादा डिमांड है. ऑफ कोर्स हम जैसे ही कैपेसिटी ऐड कर देंगे नेक्स्ट 4 to 6 वीक में तो वो हम मीट कर पाएंगे. और कमर्शियल साइड में बस एयर कंडीशनिंग में अगर आप देखते हैं तो उसमें भी डिमांड है. इवन स्पेशली कोल्ड स्टोरेज में काफ़ी अच्छी डिमांड चली हुई है. अभी जो ब्लैंकेट है जोमेटो है वो छोटे छोटे स्टोर ओपन कर रहे हैं तो कोल्ड स्टोरेज में भी काफ़ी डिमांड जो है वो ओपन है.
AC का आपका क्या रेवेन्यू शेयर है? Is room AC the big driver for you or is it cold storage? Just give us a sense of where the big push is coming from.
No, room AC for us I think less than 1% है.
Exactly, yeah. So where is the push coming from? जो आप कह रहे हैं कि डिमांड है because you started by talking about room AC. I'm just thinking about which segment are you seeing pushing that demand?
अभी जो हमको मेनली काफ़ी यूज रिक्वायरमेंट है वो डाटा सेंटर कूलिंग से हमको आया हुआ है. सेकेंडली कोल्ड स्टोरेज से हमको आया हुआ है और कमर्शियल जो एयर कूल्ड चिलर है उस साइड से हमको आया हुआ है. स्पेशली जैसे हीट पंप में हमको आया हुआ है. तो बेसिकली कमर्शियल साइड जो है मिक्स ऑफ कह सकते हैं लेकिन मतलब सभी सेगमेंट में ग्रोथ अच्छा ग्रोथ है.
ओके एक आपने ये भी बात बताई है कि यू आर एंटरिंग हाई ग्रोथ सेक्टर्स, रेलवे, इलेक्ट्रिफिकेशन, हेवी अर्थ मूवर्स, इंडस्ट्रियल कूलिंग. हैज एनी ऑफ दिस नाउ सॉलिडिफाइड? इसके क्लियर एंट्री पॉइंट्स नजर आ रहे हैं आपको? इस पर कुछ डिटेल आप दे सकते हैं?
नहीं, उसमें हमारा जो एक नया प्रोडक्ट है इट्स कॉल्ड बार एंड प्लेट हीट एक्सचेंजर, बेसिकली इस सेगमेंट में हम एंट्री कर रहे हैं, तो वो अभी हमारे लिए नया है। तो रेलवे में हम ऑलरेडी रिसीव द 10 पीस लाइक डेवलपमेंट ऑर्डर हमने रिसीव किया, तो वो जैसे होपफुली हम नेक्स्ट मंथ में उसको सप्लाई करेंगे। उसके बाद में उसका ट्रायल फेज होता है अराउंड 6 मंथ, सो देन वी कैन एंटर इन द बल्क ऑर्डरिंग। अदर देन जो OEMs है, जो ऑफ रोड व्हीकल्स हैं या हैवी अर्थ मूवर्स हैं, कंप्रेसर है, उसमें अभी हमने कस्टमर को इन्वाइट किया जस्ट विजिट के लिए, क्योंकि वो फैसिलिटी ऑलमोस्ट रेडी है हमारी विजिट के लिए। तो उसमें थोड़ा स्लोली बढ़ेंगे, लेकिन नेक्स्ट ईयर से उसमें हम मेजर जो है हमको ऑर्डर मिलेगा। इस साल थोड़ा सा स्लो रहेगा उसमें।
अच्छा संतोष जी, ये कैपेसिटीज़ के बारे में बताइए। आपने बताया कि आई थिंक अनुषी जो मेरी कलीग है उसने भी बताया कि आपका अप्रैल से शायद कैपेसिटी में भी 6x हो रहा है। सो एक ये बताएं कि क्या ये टाइमलाइंस ट्रैक पे है, विल यू एक्सपैंड कैपेसिटी बाय अप्रैल? और दूसरा ये बताइए कि इसका यूटिलाइजेशन कैसे होगा, मतलब 6x कैपेसिटी तो काफ़ी स्ट्रॉन्ग है, तो क्या यूटिलाइजेशन पहले साल में 40-50% हो जाएगा या ज़्यादा होगा? थोड़ा इसके बारे में बताइए।
नीरज जी, बेसिकली अप्रैल हमने बोला था, लेकिन बिकॉज ऑफ जो ग्रेप के बेसिकली कुछ रेशन थे NCR में, तो उसमें हम ऑलमोस्ट 4 वीक डिले हैं। तो अभी हम मई के अंदर प्रोटो में आ जाएंगे, मतलब सैम्पलिंग में। अभी मशीन इंस्टॉलेशन है और कुछ मशीन हमारे अंडर ट्रायल है। तो कैपेसिटी जो 6x है वो मतलब कह सकते हैं कि मई से हम प्रोटो में आ जाएंगे। लेकिन ऑफ कोर्स फुल कैपेसिटी तो टाइम लगता है, तो फिर हमारा क्वालिटी सिस्टम सेट होगा, मैन पावर का जो है ट्रेनिंग वो चलेगा, कस्टमर को इन्वाइट करेंगे। तो होपफुली हम एज्यूम कर रहे हैं कि जो कमिंग फाइनेंशियल ईयर है उसमें हम 25% तो उसका अचीव कर लेंगे। सेकंड क्वार्टर में, जो सेकंड हाफ ईयर में थोड़ा ज़्यादा रहेगा, फर्स्ट हाफ में थोड़ा कम रहेगा। और फिर नेक्स्ट 3 ईयर में हम टारगेट कर रहे हैं कि जो कैपेसिटी हम लगा रहे हैं उसका 80-85% हम अचीव कर लेंगे स्टार्ट फ्रॉम अप्रैल से।
ओके, सो FY26 में एवरेज अबाउट 20-25% होगा और बाद में आप इसको ऊपर लेके जाएंगे। ओके ग्रेट। आपको लगता है संतोष जी कि ये जो कैपेसिटी एक्सपेंशन हो गया, ये आपके लिए नेक्स्ट 3 साल के लिए इनफ है कस्टमर डिमांड को देखते हुए? क्योंकि आपने ये भी बताया हमें कि आप न्यूअर सेगमेंट्स में भी जा रहे हैं, तो क्या ये कैपेसिटी जो एक्सपैंडेड कैपेसिटी है आपको न्यूअर सेगमेंट्स के लिए भी इनफ है, या उसके लिए आपको कोई और कैपेसिटी शायद रेंट पे या ग्रीनफील्ड लगानी पड़ेगी?
नहीं, अभी 3 ईयर के लिए हमारा ये जो लग रहा है कि सफिशिएंट है, लेकिन इसके अंदर बीच में बेस्ड ऑन कस्टमर रिक्वायरमेंट कुछ फैसिलिटी ऐड होता जाएगा, क्योंकि हमने जैसे बिल्डिंग वाइज एंड यूटिलिटी वाइज भी कंप्लीटेड मतलब 6x, लेकिन बेसिकली लाइन बैलेंसिंग के लिए छोटा छोटा इन्वेस्टमेंट कंटिन्यू रहेगा अराउंड 30-40 करोड़ इन नेक्स्ट 3 ईयर में। और बेस्ड ऑन दैट जो न्यू वेंचर में हम जाना चाह रहे हैं, या कुछ हमारी मतलब इनऑर्गेनिक ग्रोथ के लिए, या कुछ बाहर से जो कंपनी आ रही है उनके साथ में कुछ मतलब मैटर चल रहा है, लेकिन अभी मेटलाइज नहीं हुआ है। तो वो जैसे ही मेटलाइज होगा तो बेस्ड ऑन दैट वी विल टेक द नेक्स्ट डिसीजन।
Mr. Yadav, if you can tell us about this 1,000 crore MOU with the Rajasthan government for 5 years, इसमें क्या scope है exactly and when will this start showing on your balance sheet?
मैम, जो अभी एग्जिस्टिंग हमारा इन्वेस्टमेंट हो रहा है वो भी इसी के अंदर है। तो ऑलमोस्ट हम 3 करोड़ जो भी एग्जिस्टिंग कर रहे हैं, जो अभी नेक्स्ट आई थिंक 2 मंथ में हम अचीव कर लेंगे। और जैसे मैंने बताया, इसी कैपेसिटी में हमको कुछ नई फैसिलिटी ऐड करनी है, न्यू मशीन ऐड करनी है, तो वो भी इसी का पार्ट रहेगा। उसके अलावा हमने एक बेसिकली गवर्नमेंट को ये बोला था कि नेक्स्ट 5 ईयर में 1,000 करोड़ कर देंगे। तो जैसे हमारा 3 ईयर में ये कंप्लीट हो जाएगा, तो फिर जो नेक्स्ट इन्वेस्टमेंट है वो इस MOU के द्वारा न्यू मतलब नया करेंगे बेसिकली।
But then the point is कि what is the potential increase in your revenue from this 1,000 crore deal with Rajasthan government? What is the potential increase in your revenue and from when will we see it?
नो, बेसिकली जो एग्जिस्टिंग हमारा टारगेट है कि हम जो एग्जिस्टिंग फैसिलिटी का 6x कर रहे हैं वो इसी का पार्ट है। तो 6x कैपेसिटी है, तो 6x ऑफ कोर्स रेवेन्यू विल बी आल्सो इंक्रीज इन नेक्स्ट 3 ईयर। Secondly, जो after this 3 year, what we will add the capacity. So for that, actually, we have to plan. So,
yeah.
but
so that Capex is a 6x Capex. इसका आप internal funding से करेंगे or will there be a fundraise that you will be looking at?
No, अभी तो बेसिकली जो IPOs आया था वो ऑलमोस्ट भी मतलब हम 350 करोड़ वी विल इन्वेस्ट इन दिस करंट वेंचर। सो फिर उसके बाद बैंक से हम थोड़ा सपोर्ट लेंगे फॉर वर्किंग कैपिटल। और उसके बाद अगर रिक्वायरमेंट रहेगा कि हमारे को कुछ इनऑर्गेनिक ग्रोथ का वो मिल रहा है चांस या तो मे बी वी कैन डू 1 QIB एज वेल। सो वो अभी प्लान नहीं किया, लेकिन थोड़ा सा माइंड में।
ओके संतोष जी, सॉरी जस्ट क्लैरिटी, सॉरी क्योंकि मैं मिस कर गया शायद। ये आपने 6x कैपेसिटी एक्सपेंड करी है, इसके ऊपर आपने राजस्थान गवर्नमेंट के साथ MOU साइन किया है एडिशनल कैपेसिटी के लिए, या ये इसी का पार्ट था?
इसी का पार्ट था, लेकिन जैसे इसमें हमारा जो इन्वेस्टमेंट हो रहा है वो अराउंड 350 करोड़ हो रहा है, तो मे भी 3 साल में इसमें अगर हम 100 करोड़ भी करके 450 कर सकते हैं, तो उसके अलावा भी हमारे पास में 400 या 450 करोड़ का जो बैलेंस रहेगा वो बेसिकली हम नेक्स्ट 5 ईयर में इन्वेस्ट करेंगे, तो दैट वी डिड एक्चुअली।
सो देयरफॉर आई एम ट्राइंग टू गेट दिस क्लियर संतोष जी, कि आपने ये 350 या 450 करोड़ का जो एक्सपेंशन किया है, उससे आपकी कैपेसिटी जो करंट है उससे आई थिंक 5x या 6x हो चुकी है। आप बोल रहे हैं उसके अलावा आप अनदर 450 करोड़ जितना एक्सपेंशन करेंगे एज पर द MOU, एंड देयरफॉर आई एम अज्यूमिंग कि जो आपकी एक्सपेंडेड कैपेसिटी है उसकी ऑलमोस्ट रेप्लिका शायद आप और करेंगे नेक्स्ट 5 साल में।
यस यस।
ओके, और वो नए प्रोडक्ट के लिए है या वो भी हीट एक्सचेंजर्स के लिए होगी?
नहीं, अभी तो हीट एक्सचेंजर के लिए होगी, लेकिन कुछ बैकवर्ड इंटीग्रेशन हम चाहेंगे। जैसे अभी कॉपर ट्यूब में आप देख रहे हैं थोड़ा क्राइसिस चल रहा है और अंडर PLI गवर्नमेंट सपोर्ट कर रही है, तो वो जैसे ही हमारा ये फैसिलिटी कंप्लीट हो जाएगा तो फिर उसके बाद हम मतलब कुछ प्लान्स हैं बैक एंड में, लेकिन वो अभी अपन डिक्लेयर नहीं कर सकते, तो उस पर कुछ वर्किंग चल रहा है। तो जैसे हमारा ये स्टार्ट हो जाएगा, बेस्ड ऑन दैट वी विल डिक्लेयर।
ओके संतोष जी, वन लास्ट क्वेश्चन, ये आपका कैश फ्लो और इंटरनल अक्रूवल्स वर्किंग कैपिटल के इनफ होगा? इतनी बड़ी कैपेसिटी है तो वर्किंग कैपिटल नीड्स विल गो अप आई गेस, तो उसके लिए आपको कोई फंड रेज एडिशनल करना पड़ेगा, डेट या इक्विटी, या आपके इंटरनल अक्रूवल से काम हो जाएगा एडिशनल कैपेसिटी का जो ऑन स्ट्रीम आ रही है मई से?
नहीं, जो वर्किंग कैपिटल इनिशियल में तो ऑफ कोर्स हो जाएगा, बाकी कुछ हमारे पास बैंक्स का लिमिट है, तो बेसिकली नॉन फंड बेस्ड लिमिट मेनली लगती है, तो हमारे पास सिटी बैंक एंड HDFC है। उसके अलावा जैसे हमारा कैपेसिटी मतलब फुल स्ट्रीम पे जाएगा, तो अगर कुछ रिक्वायर्ड होगा तो हम एक QIB का राउंड कर सकते हैं, लेकिन अभी वो फाइनेंस साइड में भी मतलब कंक्लूड नहीं हुआ है, डिस्कशन में है।
Thank you so much, Santosh Kumar Yadav there of KRN Heat Engineering. And so the big focus, of course, this 1,000 crore MOU with the Rajasthan government, and they've said 6x Capex will be increasing as part of this deal and overall as well. Stock is about 1% up right now. But another company on our radar is Forging. And before we have that conversation with Vidya Shankar Krishnan, who's the chairman and managing director of that company, let's get Puneet to talk about how, what is in focus today.
Well, thank you for that. So, over the last week, we saw that US EPA, which is the Environmental Protection Agency, has come out, and its lead administrator has mentioned that they will potentially reconsider pollution rules for cars as well as trucks going forward. Now, by 2027, we were expected to see new rules come in, which are more greener and more cleaner, essentially triggering a pre-buy in FY26. Now that these rules might be looked at again and might be delayed going forward, there is an expectation that the pre-buy might not happen now going forward, and that will be a negative for all forging companies such as Forging. So in this particular conversation, we are essentially looking to see what kind of impact that might have if there is no pre-buy in FY26, or even so if these rules are delayed. The other aspect is, while it is a negative for, if there is no pre-buy, what kind of impact in terms of revenue and volumes might Forging see? And finally, another thing that I would be very interested is the Class 8 truck orders. Now that has been, affected over the last 3 to 4 months, especially since September. It's down 3% for the last 6 odd months. And this was expected to be a positive for the Class 8 truck industry as well going into FY26. So that might be it. And also on some potential tariffs, because roughly 45% of all Class 8 trucks for the US comes from the are built in specifically in Mexico as well as Canada, and that will be roughly impacted by the 25% tariffs on April 2nd. So just some of the key data points to look at, but essentially the main topic is of course the US EPA, which is reconsidering these pollution rules.
Absolutely, and that's actually what we're going to take to Mr. Vidya Shankar Krishnan, Chairman and Managing Director, Forgings, who's joining us now. Mr. Krishnan, very good morning to you, and thank you so much for your time with us here at NDTV Profit. And let me bring that to you. The commentary on environmental pollution norms that the United States, now under the Trump administration, wants to re-look at. That's the core issue at the end of the day. What does it mean for Forgings, and especially for Class 8 trucks?
If the EPA norms went into existence or go into plan as anticipated by 2027, there will be a pre-buy in 2026, and that would lead to at least a couple of $3 to $4 million of improvement in sales as far as we are concerned. The other side is that if the norms don't come into effect in 2027, pre-buy will not be there, or if the norms come delayed, then the industry will go on per regular standards. In one way, that is also good. There is no negativity, because what happens is that if 2026 there is a pre-buy, 27 there will be a slump due to pre-buy. Now, if the pre-buy is not there, well, the demand will be evened out over a couple of years, which is also good. It's not a bad thing by any stretch.
So let me get that. You're saying that worst case scenario and best case scenario. You've already described best case scenario. 8% of your standalone revenues are coming from class 8. If this is just talk and nothing changes, you have a significant pre-buy in 2026. Worst case scenario, this does not happen, but you're saying at least you don't have that bump up to go up with. What will be the revenue hit if this goes through? Because they seem pretty clear they're on this track.
About $4 to $5 million, 10% or so of our sales will be impacted if this doesn't go through. But as I said, this is only a bump. And if there is a pre-buy in 2026, it will be followed by a slump in 27-28. So it's even Stevens ultimately at the end of a 2.5 year period. The EPA has also gone ahead and confirmed emission standards for light duty and up to medium duty vehicles, where they have given a roadmap up to 2030. And so they're definitely pushing ahead with a green norm. And if there is a slight shift in timeline, that would still, I would say over a period of time, it's all neutral.
Mr. Krishnan, good morning. Neeraj here. Thank you for speaking to us. The other question that I have is around Europe. I remember a conversation maybe 12 or 18 months ago. We were talking about the possibility of European pre-buying happening because the fleet was aging fast. Now, there is the additional, I don't know how that shaped up. Part one is that, but part two is this. With Germany and some of the others promising to spend as much on defense and therefore manufacturing and therefore infrastructure, is that looking very promising, or is it difficult to say right now?
I would say, Europe, unlike America, doesn't have a roller coaster ride as far as its heavy truck industry is concerned. It's been pretty smooth. Of course, it is tied with the economy, no doubt, but which sector isn't? So there is not much of a up and down seen in the European market over years. It varies within a plus minus 5% band, and it chugs along within that, taking the shape and the tenor of the economy, the underlying economy. So overall, now Europe, everybody expected that Europe would crash, and a lot of hullabaloo was there. That has not happened. Europe has been pulling along quite well, and we are seeing a lot of traction amongst our European customers, where we are looking at improving our wallet share over there. So overall, Europe appears to be quite positive for MMF.
Okay.
With the Ukrainian war also coming to an end, or at least seemingly coming to an end, hopefully, with Russia agreeing, then we would see better economic rebound in Europe.
So then I have a simple question panning the two key geographies, which is US and Europe. In US, when I look at the FTR reported the Class 8 truck sales for February, they were down month on month, YOY. There is a lot of talk of the trucks from Canadian market subject to the tariffs, etc., so on and so forth. So a bit of an uncertainty there around the economy and around the duties. At the same time, you sound a bit constructive on Europe. If I balance it out, how does the global market demand appear to you for calendar year 25 for MM forgings?
Overall, the situation is reasonable. I would say just above zero level, so I'd say mildly positive. The reason why I choose such a guarded expression is because nobody knows what will be the tariffs that are coming and what will be the impact of those tariffs. So that has to be, we have to wait for the next 2 weeks to really gauge the impact of the tariffs. If they come on April 22nd, as mentioned by the US government, or if they're delayed. For example, the tariffs on Canada was postponed by a month and then ultimately came in, and it may still go out. There's a lot of dilly-dallying over there across all sides, a lot of posturing. And one good thing is that India and the US appear to be quite on a friendly note with each other during the talks, and there is no jockeying, at least from the Indian side. So, which means that one side is holding its patience, and that is good. And what the US also is expecting is pretty reasonable. They want to have reciprocity in tariffs. So somewhere a deal will come, and hopefully, and that will impact all of us.
No, so I'm just wondering, Mr. Krishnan, and rightly so. Your comments are filled with words like uncertainty, hopefully, because nobody knows. I wonder, with the business that you run, how do you prepare for a scenario like the one we are in? How do you safeguard yourself and your interests? What's the strategic thought here?
Tamanna, nobody can prepare for this. Nobody can prepare for this. So, and it's so uncertain, right? We do not know what a clue of what is going to happen on 2nd of April and what is going to happen thereafter. So everybody has been looking at Mexico and Canada, and look at how these countries themselves have been hit. They're all part of NAFTA. So overall, this is a kind of a black swan event, if I can use the word, though man-made. Of course, most events are man-made, and we have to wait and watch. There's absolutely nothing that we can do at this point. We can gauge or estimate what will be pros and cons of each outcome and see what we are going to do to react. But I'm sure that over the medium term, sense will prevail across all parties, and that things will be back to an even keel. Definitely, one thing is sure: status quo is not going to be there with Mr. Trump's thinking. So India will have to give in some areas. Where we give, how much we give, all that will take a turn. See, nothing is linear in this world. If there is one impact on, let's say, tariffs do go up from America, there are other considerations to be made. The rupee, the steadiness of the rupee has to be questioned. So many things have to be factored in to gauge a company's performance. And all these things together, I think overall, I'm not so negative.
Okay, that's good to know. And I assume that's also based on conversations you're having with clients right now, Mr. Krishnan?
Yeah, by the way, my customers are telling me that this EPA deadline is on as far as they're concerned. At least it's not off.
Okay, all right.
That's from our customers. We have to wait and see. So it's a long time between now and 2027.
Yeah.
So anytime EPA, but given the proclivity of the Republicans to treat the environment rather not so aggressively in terms of corrective actions, so there could be a slowdown. We could expect a kind of crawlback in EPA's targets, but I don't think that they'll go entirely off the charts. Maybe shift by a year or two here and there.
Yeah. Yeah, drill baby drill is the mantra of the government. So we have to see how it works out. Thank you so much, Mr. Vidyashankar. Pleasure speaking with you as always.
Pleasure as always. Thank you.
All right, Forging. Important thing. Stock is up today, but mildly so. Important point is that what they are saying and what they are hearing from their clients is that as far as they're concerned, these deadlines for moving to greener fuel or greener kind of vehicles is still very much on in their mind. It's still about a couple of years away, and a lot can happen in a couple of years. Well, a lot can happen in a couple of hours, honestly. So the latest coming in from US President Donald Trump, he says we want to see the Russia-Ukraine war coming to an end, not concerned about retaliatory measures after Yemen. This is what he's decided to do with targeting the Houthi rebels. He says reciprocal tariffs on countries alongside auto duties will come in to effect on the 2nd of April. He says, I have no plans to have exemptions on steel and aluminum tariffs. So there's no pulling back there from Trump. But, I mean, how do you ask someone for a 2-year outlook when you don't know what's going to happen in 2 days?
Yeah, maybe. And therefore, at times I feel a bit for management to come out and talk to investors and stakeholders about what can happen, because frankly, he's right. No one can tell this.
Yeah, and he was very, very clear about it. Well, what we do know that there is still some appetite for IPOs and large ones. I found this piece of news quite interesting. LG Electronics has received the SEBI approval for their 15,000 crore IPO. How does it stack up against other listed players in the home appliance consumer electronics segment? Mahima is joining us with those details and of course details of the IPO as we know them as of now.
Right, so as you rightly mentioned, LG Electronics has received a SEBI approval for its 15,000 crore IPO. This will be entirely an offer for sale, and around 15% of stake is something that the parent company is looking to offload via this particular IPO. Now, in terms of a brief about the company, it's the second largest player in India for home appliances as well as consumer electronics. It has a varied range of products, ranging from refrigerators to washing machines to air conditioners to televisions, and also smart devices and smartphones. In terms of its financial performance, FY24 revenue stood at around 21,300 crores, and this has had a 3-year CAGR of roughly 12%. In terms of EBITDA margins for FY24, it stood at around 10.4%. PAT number was at 1,500 crores, but PAT has seen a negative 3-year CAGR of around 3.2%. The ROCE stood at 45.8%, and overall free cash flow stood at around 1,400 crores. In terms of peer comparison, now this is an interesting INCRED report which has compared its peers and also given the growth percentage going forward in the next 5 years. In terms of revenue, LG Electronics revenue stood at around 21,000 crores. Samsung is the leading player in this entire space, although not listed, at around 99,000 crores. In terms of the operating margins, LG Electronics has a range of around 10 to 12%, but that of Samsung is around 13 to 15%. That of Whirlpool is around 15 to 17%, and Voltas is within the same range. And Godrej Appliances has a lower range of around 8 to 10%. In terms of growth potential, they're penciling a 12% CAGR for LG Electronics in the next 5 years. For Samsung, it is around 8 to 10%. For Whirlpool, it is 10 to 12%, and for Voltas, it is around 8 to 10%. Now, in terms of valuations, from a conservative approach, the valuations as compared to peers is slightly lower for LG Electronics, but still in terms of FY25 estimates P, it stands around 44 times, which is not cheap, and FY26 this 44 P goes to around 40 times. So however, this is lower as compared to its peers like Havells, Blue Star, etc., which range between 55 to 60 to even 65 times in terms of P, but still 44 times P. 25 estimates is not cheaper. So this is the overall view as to how IPO for LG Electronics pans out.
Do we have an idea of the timeline, Mahima?
Not yet.
Now that the SEBI nod is in?
Not yet. So I think they will take a decision, considering the market conditions as well, and after that they'll decide when to, go ahead with the rest of the IPO process.
Correct. That's crucial because right now might not be the best time. We've seen stocks where the lock-in is opened up and they're being hammered today. We'll take a very short break, but on the other side, we come back with all the movers and shakers and a great conversation that we're doing with Ajay Argal, SVP and Senior Portfolio Manager at Franklin Templeton.
I'm looking forward.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Vixit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction.
Back with India market open, and must say it's actually turned out to be a slightly better morning than what the immediate open was suggesting, because we are up 0.5% now. Banks leading the way, and IT is flat. IT is not really sulking too much. Small caps about 0.6% higher as well. So now we're kind of performing in line with what Asia would. But what to do in a scenario like this with portfolios? I mean, what should the relocation be globally and maybe locally? Ajay Argal, SVP and Senior Portfolio Manager at Franklin Templeton Johnson, right now on the show to talk about his thoughts around this. Ajay, great having you. It's been a while. Thank you so much for taking the time out.
Yeah, good morning. Thanks for having me here.
No, the pleasure is entirely ours. So Ajay, how do you see us? I mean, for the course of the next 6 to 9 odd months, let's say the next 9 odd months, because after the steep corrective move that we've seen, I've seen the sell side largely come out and say that this kind of bakes in the near-term negatives, and if a few things happen, including the central bank in the US cutting rates to help support US economy, so on and so forth, then the negatives are priced in and there might be upsides. How do you think about this?
Yeah, so definitely, as we all know, there has been a good amount of healthy correction, especially in the mid and the small caps. But we also know that there is a bit of a growth slowdown, and there has been disappointment in the numbers. And of course, now our optimism has shifted to the next year with FY26 earnings growth generally in the ballpark of 13 to 15%. So in our opinion, the key is to have this kind of earnings growth. If there is some semblance or some indications that the earnings growth is likely to improve going forward, then we could have some stability. Otherwise, in terms of valuations, if you look especially in the mid and the small caps, as I was mentioning, there has been a correction, but the correction has not been enough. So as you would be aware, the valuations for both the mid and the small caps is still higher than the last 5 or 10 year averages, though that premium has come down. There is still a bit of a premium. And of course, if the global situation remains a bit shaky, then there is no necessity that we might just stop at the averages. So basically what I'm trying to say is that things are dynamic. The US interest rates or the interest rates in India, as you mentioned, could be one of the factors. But in our opinion, the bigger driver would be the earnings growth coming back.
So Ajay, we made it a point that the next 15 days, or the next 25 days until the earnings start coming in, we are going to talk to companies to go and get a sense of whether business has shaped up well in quarter 4, and is the argument for quarter 1 uptick looking solid. Now the high frequency indicators suggest that, Ajay, I mean the week on week power demand data, IP that came out recently for Jan, all of that point to an uptick. Is that uptick constructive enough for a large manager like you to deploy additional cash that comes in, or given a choice, would you want to sit on the sidelines considering the global uncertainty?
Yeah, so I mean, deploying the cash is a kind of a different assessment. So as you are familiar, in most of our funds, we don't have too much of cash. So generally, we don't like to have more than 5% cash. So most of the funds would find that we would have 5% or less cash, because we believe that we are open-ended funds, and the investors have given us the money to give them the best portfolio. So we are not taking cash calls. We are not asset allocation funds. All the equity funds which we run are not the asset allocation funds. So that's how we decide on the cash deployment. But as to your question on the improvement in the short-term parameters, yes, that has been the case. But there are so many variables which form part of the economy, and some of them keep on improving, or some of them improve in certain time periods, and some of them don't. And as we are aware, the March quarter is the busiest quarter. We have that kind of seasonality in the country, and therefore it is logical that things should improve in the March quarter. The question is whether it will be in line with the expectations, because as we are aware, just to take an example of the government Capex itself, that we need to do certain maybe 25-30% kind of growth for the last quarter of this financial year, that is Jan to March. These months we need to do 25%. So that obviously would look a good number, but even if we do that, we will achieve the revised estimates of the government, which was kind of revised downwards. So you have to see in relation to what the expectations are and whether we are meeting that. And when we have talked to the companies have been themselves saying that things is likely to improve over the next 6 months. And this is what the companies have been saying for the last 2-3 quarters at least. So whether that tone will change, and you mentioned that companies have mentioned that in June quarter there might be an improvement, but some companies are saying that there may not be an improvement even in the June quarter. So how does the overall aggregate of the companies, the Indian corporate sector as a whole, kinds of keeps delivering is what we will continue to watch.
Ajay, hi. Morning, Tamanna here. Just, talking about the results, what are you looking at in terms of quarter 4? Because this also has disparate views, right? Some thinking that, yes, with the base effect in place, you're going to have a subdued quarter 4, but compared to quarter 3, things are picking up. There are those signs in the economy and high frequency data that is pointing in that direction. Are you expecting a positive surprise at all from quarter 4?
Yeah, so I mean, I don't know about the surprise, but quarter 4 should be better than the quarter 3, just to achieve the growth numbers which we have still penciled in for FY25 as a whole. So if you look at the first 9 months of FY25, if you look at the large 500 companies, whether BSE 500 or NSE 500, you have a kind of 5 to 7% profit growth for the corporate sector as a whole. Whereas for the entire year, we are expecting 7 to 9%. That is what the consensus expectations are. So which means that the March quarter, we need to grow maybe close to double digits, in some cases maybe 11-12% as well. So we need to have a pickup in the quarterly growth compared to the December quarter. And we are also hoping that, yes, there will be some improvement in growth in the March quarter compared to the December quarter. Whether that will be in line with the expectations to achieve the FY25 numbers or not is what we'll see. But more importantly, what is the commentary the companies are going to give? Because as I was mentioning, companies have been kind of postponing their growth recovery by 6 months every quarter. Or rather indicating that it will be 6 months every quarter, and that has happened in the last 2-3 quarters. So is there any change on that? Is there some better visibility for FY26, because I think FY26 is what will drive the markets. And if the companies give some confidence that we will be somewhere in the 13-14% growth range for FY26, then the markets will have some stability.
I'm just wondering, Ajay, in terms of investor sentiment, because the data that we saw, the mutual fund data that came in last week, some bits of it were a little alarming, let's be honest. The SIP stoppage ratio, which has been calculated, is some 122% up. Wondering what your experience has been and what you are seeing?
Yeah, so I mean, the data is data. You have seen the data for the entire industry, so I think that is more representative of everything.
So you are seeing that trend as well.
I'm not actually very familiar with the entire numbers for the Franklin Templeton, but it's not. I mean, it's not a big difference for us compared to the last month. But as you are aware that we are not like one of not the top 5, so it will be better to look at the industry data as such. The key is this is the first time the investors are seeing some kind of softness in returns. So we have seen in some categories that even 1-year returns have become negative, and some of the SIPs even for 1 year has become negative. So now the test has come whether the investors will continue their SIPs, because that is what the entire concept of the SIP is, that when the markets are down, you should continue to invest through SIPs so that you get the kind of average, which is the benefit you get if you hold for the long term, 3 years, 5 years, and ideally even 7 and 10 years. So, as you are mentioning, there has been some change in that, but we will see as we go forward whether this was just a blip or there is a start of a trend in terms of some softness in the monthly flows. At the moment, it is a bit difficult to predict because it's just one data point. With one data point, you cannot kind of think that it has become a trend. But yes, I mean, this is a time of reality check, and as we have been saying that it has been a reality check for the markets, it is a reality check for the mutual fund flows as well.
So in this reality check, Ajay, what does an astute portfolio manager do? Do you stick to the tried and tested? Do you look at the small and mid cap space and say, okay, there's enough battering there? Just trying to understand what the thought process and filter is right now.
Yeah, the thought process and filter remains the same. All these things you mentioned. So there are opportunities everywhere, and that is the case even when the markets were at a much higher levels. But now the opportunities are a bit more. And if we see this kind of markets where there is no growth, then there might be more opportunities even in the future. So our objective is to kind of get the best stock ideas into the portfolio. So which means that we are continuously evaluating all the stock ideas which we think is suitable for a product, for a particular theme. And then continuously compare and contrast whether what are the risk versus return in a particular stock. And wherever we see that that combination as decent, we try to get that into the portfolio. And we are continuously assessing that whether the stock which we hold in the portfolio, is it better to sell that and get into some other stocks which is looking more attractive. So that is what we continuously do. This is what we are doing now. But as I said, right now we are getting a bit more opportunities. Maybe in the future we'll get even more opportunities. So it is definitely an opportune time for the stock pickers and to kind of rejig your portfolio. And that is what we are trying to do.
Sorry. So, we've been broad and strategy focused thus far. Just wondering if you could narrow that down for us, if at all, Ajay, in terms of sectors. And I know you will not talk stocks, but sectors or kinds of companies that you're finding interesting right now. For example, IT, is it a no-go or is it a potential for you? How are you feeling about banking?
Yeah. So let's start with banking. So banking, we have been maintaining for the last maybe 2, 3, 4 quarters that it is the best combination of growth versus valuation. So the growth is reasonable, just like other sectors. There is a bit of a slowdown, but the slowdown is basically from 13-14% to 11-12%, unlike some of the other sectors where the slowdown is maybe even 10 to 15%. At the same time, the asset quality is benign for a majority of the banking system. We all know that there have been issues on the microfinance side and the credit cards and a bit of unsecured personal loans. But those areas make like 10 to 15% of the entire book of the banking sector. The rest, 85%, we are not seeing that kind of stress. So the asset quality is benign, and as we have been harping in the last few quarters, this is the only sector where the valuations have been lower than the last 5 or 10 year averages. So this is the sector where we are maximum overweight, and it is also a very large sector. So it is the largest weightage in our funds, in most of our funds. When you talk about IT, we had been, especially in the Franklin Focus Fund, we have been a bit underweight. And the reason was that the stocks, as we know, FY25, the growth has been very tepid. And at least last year, the expectations were very high that FY26 things will improve. But as we have got along into the FY25 itself, we have now come to realize that the FY26 itself may not be some significant pickup in growth. And of course, we have all these narratives around AIs and whether it will be positive or negative. And the reality is always in between, because there will be some positives, but there will be some reskilling required. And also, we believe that there will be a transition period when the AI work might be coming, but you might also be losing some legacy work, just like we saw in the cloud or digitization. So basically, they are in a state of transition, and at the same time, the valuations have not corrected to that extent, at least till some time back. Now, the valuations have corrected, as we all know, in the last maybe couple of weeks or in the last 1 month. But still, the valuations is slightly on the higher side, though the combination of growth versus valuation is looking slightly better now. So as I was talking in the Franklin Focus Fund, we were underweight, but we are slightly reducing our underweight, but still does not give us the confidence that things have improved to the extent that we might get go to neutral or even overweight. For that, we are looking for a pickup in the growth. But as I was mentioning, FY26, the growth expectations are now maybe 5 to 7%, 8% at best. But we'll see when the commentaries come with the March quarter, what the companies are saying about the coming year. And
Ajay, sorry.
Yeah.
Ajay, sorry. Did I hear you say that you are saying FY26 earnings growth is 5 to 8%?
Yeah, so maybe it is more the top line growth, and if the rupee depreciation benefits, then maybe we will get to like even 10-11% earnings growth.
The
so
consensus is at 15 right now. You are saying 5 to 8.
Yeah. So that is the top line, but the consensus 15 is more like on the profit growth.
Yeah.
So that's what we are saying. We are not so optimistic, and yeah, that is why we are underweight. We are not in line with consensus, and I'm here specifically talking about the Franklin Focus Fund. Some of our other funds, we may be close to neutral.
Got it. Ajay, I have 60 seconds before we wrap up. Just very intrigued to ask you, when I look at your top 10 holdings in your flexi cap, right, which is probably one way of looking at it, consumption, you're playing it via a liquor company, you're playing via a platform company, not an FMCG name. Why so?
Yeah.
Quick 60 seconds, please.
Yeah, so actually, you may not be familiar. I don't run the flexi cap fund.
But generally, as a strategy, I'm just trying to understand.
Yeah, generally, as a strategy, we are more positive on consumer discretionary compared to consumer staples, because we think that the consumption pickup is going to come more in the consumer discretionary, which is more unsaturated, and a bit of the tax benefits will flow more to the consumer discretionary side. And also then when the finance commission settlement comes, the salary settlement for the public sector and the government employees next year, that will also be a support for the consumption, which again will benefit the consumer discretionary more. So in the focus fund, for example, we are playing through the food delivery and the QSR and those kind of things. In the flexi cap, as you mentioned, there is a liquor company.
Got it. Okay. Ajay, lovely talking to you. Thanks for that. The headline for me is your estimates around FY26. I'm sure you are also hoping that it's better than that, but let's wait and watch.
Yes.
Okay,
Thank you, Neeraj. Yeah.
Yeah, that's the view from Franklin Templeton. Well, let's see how Q4 and the commentary for FY26 shapes up. But at the margin, select companies, brokerages are turning bullish. So we spoke about HSBC on Tata Motors in the morning. Now we're bringing out the UBS view on BSE, which has UBS has initiated coverage with a buy rating, a 35% upside potential. Not surprising after the fall that the stock has seen. Sub 4,000 currently. Harsh joins in with the details of the note. Harsh.
Well, yeah, interesting one, Neeraj, because the kind of upside that is being showcased here, a very strong one. What UBS is suggesting is one, scaling up of options, turnover acts as a key driver for BSE going forward. BSE has created a new revenue and profit pool, driving the transactions income for the business. They're expecting BSE to drive market share. And this is despite what they are penciling in as a 20% lower average daily turnover in FY26. So despite that one negative, the big positive that they are focusing on is that the market share for BSE will improve going forward. They are penciling in a 41% revenue CAGR over FY24 to FY27. They are expecting operating margins to improve to 63 to 64% FY27 versus 51 to 52% in FY25. So strong both growth on the top line as well as on margins. Valuations currently sitting at around 33 times 1 year forward price to earnings, which is around 11% premium. They are penciling this at 41 times FY26 price to earnings, and therefore giving it that target price of 5350.
Harsh, just another important aspect which you have been highlighting. What is happening to stocks whose lock-in expiry has ended? Inventoris, MobiKwik, SciLife are some of the examples. Take us through the pain that these are seeing today.
Well, so you have quite large in terms of chunks, 3 to 6% in terms of lock-in expiry. Some of these stocks are already off the highs in terms of the IPO price also. They're trading at a discount, and despite that you're seeing a knock on the stock prices today. All three of the ones you've mentioned, including something like a SciLife, which is down just about 2%, but one MobiKwik is 6% of the shares have exited lock-in expiry. Inventoris Solutions 2% has exited lock-in expiry today, and SciLife 4%. And due to that, you're seeing knocks on all of those three stocks on the back of this development. Some bit of selling pressure.
Okay, some bit of selling pressure coming in there, also telling you what the market mood is like overall. But the other stock that we're focusing on is GSPL. It surged as Citi has upgraded the stock to a buy rating. Meka joining in with more details.
So we do have Gujarat State Petronet in focus because it's received approval for a new pipeline. The Petroleum, Natural Gas and Regulatory Board has approved the capacity expansion, and it's for a key high-pressure gas network that the company plans to set in Gujarat. A little bit about the new pipeline. Well, the approval was granted to lay down the Anjar-Palanpur pipeline, which has a capacity of 12 MMSCMD, and the high pressure gas grid capacity will increase to 45 MMSCMD because of this expansion, and the Capex is set at 2,050 crores over the next 3 years, and the pipeline will connect the 5 million metric ton per annum Mundra LNG terminal to the demand centers along Gujarat State Petronet's Mehsana Bhatinda pipeline. Now in terms of Citi's view, this was a very key positive. Upgraded GSPL to a buy rating versus a sell previously. The target price remains unchanged because of the steep correction that the stock has seen in the last 6 months. The target price is still at 325 rupees, but this still implies a 20% upside potential. While there are no immediate implications for the company, the actual benefit will come once all the expenditure is actually incurred, which is in the next 3 years, and this improves the likelihood of any future revision of the tariff cut that GSPL has seen. This was a 47% cut that we had seen in April 2024. So Citi believes that once the expenses are incurred, we could see a higher likelihood of the tariff cut being reversed.
Okay, Mika, thanks for that. And we're kind of out of time on this show, but we do want to mark that IT is again a bit sluggish. But the rest of the market is holding out well, including the small caps, so which is a positive sign. Mildly positive, but positive at that. And with that, it's a wrap on this leg of India Markets Open from Tamanna and myself and the team that put this show together. Thanks so much for watching.
Not half bad, huh? For the morning. Pretty good one.
Yeah, pretty good one.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Vixit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vacharjani. We're back after a week-long holiday and we're happy to be back.
Yes.
The market's looking good as well at the start. Of course, it's cooled off just a tad bit. Let's take a look at the screen and see how it's faring right now. You have gains of about 0.4% for the Nifty 50, if I'm not mistaken. Let's look at that. Okay, yeah, so thereabouts. Cooled off just a tad bit from the high point of the day. We were well above 22,500, and a few technical analysts on the on the morning show have told you, hold your horses, don't decide to go long based on the kind of up move that you're seeing today, because you could see selling and you could see range bound trade. Resistance levels have played out. We've broadly seen the Nifty 50 trade within that 22,200 to 22,700 range, and we were bang in the middle of that range at the end of trade on Thursday. And despite the up move that you saw in the US markets on Friday, you are seeing just a tepid start. You can call it that, because you're seeing gains of about 0.4%. Of course, the broader markets have also cooled off just a tad bit. You have the mid-cap index is gaining about 0.5% or so, and the small-cap index that is up about that same amount, about 0.5% or so. I wouldn't be surprised if the market breadth is tilted in favor of the advances at this point, and it is. But that gap has narrowed. If we can pull up the lines, that will indicate to you that the market breadth has actually shifted just a tad bit and narrowed over the course of the session so far, because earlier on in the session it was very clear that the advances held the roost. Let's talk about the sectors then, and you have IT that is underperforming in a big way today, down about 0.5%, and a few stocks from the broader IT names are losing ground. We'll talk about that, I'm sure, over the course of the day. By the way, if you've got questions for us, that number on the top of your screen is where you send messages to us. You can call us on this number right here if you've got questions on IT or anything else as well. What are the other sectors that are standing out? Pharma is doing incredibly well. There were a few names, a few companies that had US FDA approvals, yes, of course, but also reviews of their facilities that have come through unscathed, if you can call it that, and they are reacting positively in that way. They're up about 1.6% as a pack. Finance is up and about, and metal is up about 0.7%.
Right, absolutely. Some, stocks to keep an eye on. Ola Electric is one of them. There's a significant update coming in where Rosmeta Digital Services has sought an initiation of insolvency proceedings against Ola Electric subsidiary. IndusInd is one of the counters that is buzzing. Multiple updates post close on Thursday. These include that it is now under the short-term ASM. HDFC mutual funds are seen buying in IndusInd. RBI has released statement on IndusInd, and a couple of other updates. But the stock is up 3% as we speak after the entire downfall trajectory that it has seen in the last 1 week. In terms of some order wins, GR Infra Projects is one of the counters which is buzzing. KC International is also buzzing on the back of that. But some counters which are not doing well. MTNL is one of them. There are counters like Wipro Limited, which is not doing well. Brigade Enterprises is down by about 1%. So all of these counters are moving on the back of news from Friday till Sunday, and of course the updates that came in today as well. So a long list of stocks that are buzzing.
The reason I'm smiling is because your voice is reacting to the cold climate that you were celebrating and enjoying last week. But you're back in Mumbai, where it's hot and humid, summer setting in. I wonder if some of the...
interesting thing, I've come from -5 degrees to a 40 degree right now, which is why my voice is probably reacting to that.
Well, let's get our experts on board. We've got Saurabh Jain, who is equity head research at SMC Global Securities, Brijesh Ail, who's head of technical and derivatives retail research at IDBI Cap. Gentlemen, thanks so much for joining in, and I look forward to this session that we have with you. In fact, let's talk about one of the stocks that is buzzing in trade today. And on the downside, Ola Electric, because of that update that came through for its subsidiary, there is insolvency proceedings that have been initiated. The company has come in strongly to say that it is rebutting these allegations. The stock is down about 7%, 6.5% right now. We got Rahul from Kolkata, who has bought at levels of 98, and he's got a long time frame. He's got a considerable number of shares.
I'm just wondering on the fundamentals what you think, Saurabh, because he's got 5,500 shares. Should he exit at this point?
Hi, good morning, Alex. See, all the things are going bad, both on the operational front and as well as corporate governance front. I mean, the investors are, selling these shares because of the poor performance by the company, either in terms of way of allegations or profitability or sales push. So, in my sense, he has chosen a wrong company. I think it would not be better for him to stick with the Ola Electric. I would advise rather to exit from this stock.
All right, so exit is a call, but let's find out what the latest update is. And this is should be of interest to you, Rahul, because it should reinforce what is being said on the fundamental side. Puneet is joining in to tell you what exactly has happened. Puneet, effectively, this is a very small subsidiary, right? You're talking about a 26 crore impact, and the erosion in market cap is significantly more than that.
Well, definitely, and the stock is also down 70% now from its highs. It's down 38% from its issue price of 76. So the bad news just keeps following the company specifically. And as you rightly said, Rosemata Digital has initiated insolvency proceedings against the company. Now, as per some reports, there was about a 17 to 18 crore in payment that Ola Electric had to do to Rosemata. And essentially what Rosemata does is, register the vehicle that has been sold by Ola Electric. Now, they had an agreement before that. Now, that seems to be a process that Ola Electric has moved in-house to save cost effectively. But that has, led to this notice coming in. Now, the exchanges has been notified about this particular notice by Ola Electric or by Rosemata itself. But, there are some reports speculating that the other entity as well, which is the second entity which used to register, Srimata Digital, that's also filed insolvency proceedings as well. But currently, the company is only notified about Rosemata International. So that is the key thing. Apart from that, if you look at the timeline that's flashing on your screen, on 19 February, they mentioned that the sales will be affected in the month of February, basically saying that this agreement with Rosemata has now been evoked and they won't be registering the vehicles. So effectively the company was selling the vehicles to its customer but not registering it, and because they weren't registering it, it wasn't available in Vahan to see. So they mentioned on 28th Feb that they've sold 25,000 vehicles, but Vahan data only suggested roughly about 8,300 vehicles that they had sold. Apart from that, on 4th March, they mentioned that they received a letter from IFSCI for investment in the battery venture specifically, not enough to meet the PLI incentives. So they've mentioned that they will be looking at that in April as well. And on 15 March, of course, we mentioned that Rosemata had filed the insolvency proceedings. So it's been following them, but they also mentioned on the positive side that there will be EBITDA break-even in Q1 of FY26, which is in a couple of quarters. So I think while the bad news has been following and the share price has been corrected because of that, I think it'll be important to see the EV bike launch as well as the commentary on the EBITDA break-even in Q1 of FY26.
Right, and as he's rightly tagged it, Alex. He's tagged it as bad news. Keep finding Ola Electric, and the stock is down by about 6.7% as we speak. Moving on to the next counter that we're talking about is KC International. Ravi Kumar from Hyderabad is holding 20 shares, bought at 1127 a piece in the last 3 months. He wants to know whether he should keep holding at the current levels or add more, probably he's saying that he should add some more shares at a lower price or book a loss is what he wants to know. Brijesh, I'll come to you. KC International has won a significant order today post-market hours on Thursday. What's the view like with respect to charts, however? Where are you finding the supports and resistance levels?
Hi, morning. So eventually the stock has already taken support, and since it has fallen so much, there has been a formation of RSI positive divergence. This is one of the technical indicators which suggests a bounce from the current level. So sooner or later, I think maybe close to 900 level, we should be seeing a bounce in this particular stock. So it looks quite little bit positive from the trading perspective. If this guy can average few of his stocks and then wait for this opportunity for the 900, so that can be seen in the charts. So for the level of 900, I am positive.
All right, the next question is on Bajaj Housing Finance, and it's coming in from Kolkata. We've got B. Gain who's writing in, and he's got 2,000 shares that he's bought at a price of 121. Got my numbers mixed up. But the question is essentially sort of on the fundamentals. would you hold on? Because ultimately you're talking about a rate cut that has just come through that will translate, I would think, into loan growth. That is the expectation heading into the first quarter of the new financial year. What would you say about this company though?
In the housing finance segment, Bajaj Housing Finance is a decent company. The company has always grown higher the rate of the industry average, but the problem lies with the higher valuation. That is why I think the stock has corrected largely. I think at these prices, it doesn't make sense to get out of it. I think better you should wait for hold your investment for next 2-3 years. That is the call.
Right, so that's the view with respect to Bajaj Housing Finance. We have our first caller for the day lined up. Pawan Kishore is calling in. Pawan, a very good morning to you. How can we help you?
Yeah, good morning. So I'm holding Bank of Baroda, 400 shares at 197.
Okay.
My horizon is around 1 to 2 years.
Okay.
The PB is attractive. It is around 1.75 or something.
Okay.
And asset quality is improving.
Right.
And PE is also low. It is offering attractive dividend of 3% approx.
Right.
So I need advice regarding that.
All right, got it. Pawan, I must say you've done your research very well. I'll come to you, Saurabh. What's the view with respect to Bank of Baroda?
I think many of the matrices he was right. It is available. You can say it is a kind of a value stock. The price to book value is really low, and if you look at the balance sheet is quite strong in terms of delinquency rate and all. The bank maintains good capital adequacy ratio and is expected to grow higher than the industry average. The next 2-3 years looks good for the banking industry per se, and Bank of Baroda is a strong candidate. So my take is a hold.
And by the way, I think what he was referring to is the 1 year forward price to book, because for Bank of Baroda as well as several other public sector banks, a trailing 1 year price to book is actually sub 1, which is something that has been the case for a while. Vishwas is calling us from Bengaluru. Hi Vishwas, how can we help you today? Good morning.
Hi sir, good morning sir.
Please go ahead. Good morning.
Sir, Kalyan Jewelers 200 stock, average price of 500.
Okay.
Hold or sell sir, is short term sir, 6 months sir.
Okay, 6 months, all right. And when did you buy this, Vishwas?
Sir, 500 stock, average price of 500, quantity 200.
Got it, okay, I understood. All right, so Brijesh, then on the charts, this is a company that is, or stock that has seen wild gyrations over the course of the last few months. It's had a rocky 2025. Would you hold on though?
Yeah, I think the damage is already done. So maybe it's wise to hold on to this stock, because I think probably the stock can see some bounce back can be seen. So from the level of this 432, so most probably it may find some support at this level. So hold should be the view, and most probably to some extent averaging can also be done. Sooner or later, I think this may bounce back to 550, somewhere close to 550. So that remains a short-term view. So close to 550, this guy can again review the position, but bounce back is possible on the charts.
All right, so that's the view with respect to Kalyan Jewelers. The next counter that we're talking about is Power Mech. Satyan is asking whether is this a good option to bet on for the next couple of years. Saurabh, I'll quickly come to you. Power Mech, what's the view like, and if you have the coverage?
Won't be able to comment.
All right, Power Mech, then on the charts, Brijesh, how is it faring?
So eventually this stock was also breaking down, and now it has bounced back to the supports. Maybe 2150 is just immediate resistance. Once it sustains about 2150, then I think there will be a further upside. But right now, at this point, he needs to be cautious near 2150 level.
Hindalco is what we're talking about next, and the entire metal pack, by the way, has been buzzing. I wonder if that continues to be the case. It's gaining about 0.5%, but let's pull up the constituents of the metal index and see whether the gains from this morning are being held on to, and that seems to be the case, though there are a few that have fallen off the bandwagon, so to speak. We've got Darshan Mandviwala, who's writing in from Surat, Gujarat, and he says that he wants to invest in Hindalco and go long on this one. Is this the time to invest for the long term? Sort of view on metals and specifically Hindalco, would you bet on this for the long term?
I think metals are looking quite good. In fact, in the recent corrections, also the metals are standing strong. The what is happening globally is expected to push is actually helping the metal prices to go up. With the considering the Hindalco, they have also a facility in the US where the prices are moving up. So in that sense, I think. There is expected to be a decent demand this going next fiscal year, and the profitability is also expected to grow. So, in my view, I think he can hold.
Hold is the view coming in on Hindalco. Dheeraj is our next caller. Dheeraj is calling in from Hyderabad. A very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding Senco Gold.
Okay.
I'm holding 1100 shares of Senco Gold at 368 rupees.
Okay.
So my query is, can we add more at current levels, or should I wait or exit?
Okay, so Dheeraj, when you bought Senco Gold, was it the fundamentals that you saw, or did you see the charts while buying it?
Actually, I have seen the fundamentals and bought the stock.
Okay.
Like a month ago.
Understood. Okay, like a month ago. All right, Dheeraj, got your query. Saurabh, I'll come to you again. Senco Gold is the counter. Q3 was not very impressive. You know, EBITDA was down by about 56% if I'm not wrong. And lower studded mix is something that has kind of impacted the margins as well. It was lower than what they've guided. But what's the view like for Senco Gold? Because he's sitting on a loss of over ₹1 lakh. Should he continue to hold or book losses?
I think prices have corrected because of the various reasons. Few you have also mentioned, and one thing more that what market is expecting, that these companies would really find difficult to grow their sales like the way they have done in the past. I mean, in the past 1-2 years, because the gold prices are really hovering at multi-year highs, and these prices, people are not walking in the stores and buying jewelry at a pace the sales used to be. So in that sense, I think the valuations have corrected, but because the growth is also tapering off, I think there is more room for correction. I think it is better to get out in case you find any kind of a rally.
All right, so get out when you have the opportunity to do so. The next question is also for you, Saurabh, and this is a question from Bhargav, who's writing in from Kuwait, but he's specifically asking about PG InvIT, which is Power Grid InvIT. Now, generally when people invest in InvITs and in REITs, they're not looking for dramatic capital appreciation, or at least they should not. They're looking for regular distribution of income. But what should the strategy be if you want to take exposure to the infrastructure space? Should you be in PG InvIT, or are there better opportunities that will give you both capital appreciation as well as dividend income?
I think PJ InvIT is a good choice in which he has invested. I think he'll get both the income from investment, I mean, in terms of dividend, and the price will also move up with time. So I think he has already done a good choice. He can keep it. My take is a hold.
All right, so hold is the view on PG InvIT coming in from Saurabh. We have our next caller lined up. Hemant from Andhra Pradesh is calling in. Hemant, a very good morning to you. How can we help you?
Hi, good morning. I want to know about the stock name called Chambal Fertilizers.
Okay.
I'm currently holding 10 shares about at price rate of 477.
Okay.
I would like to add more shares.
Okay.
And want to know about fundamental views for long term, at least 2 to 3 years.
2 to 3 years. All right. Hemant, I'll take your query up with Saurabh. Saurabh, what's the view like for Chambal Fertilizers? Well, in terms of its Q3 performance, revenue did see an uptick of 16%. Overall, PAT also saw a growth of 25%. So good set of numbers in Q3, but what's the view like for the next 2 to 3 years?
I think for the next 2-3 years, he can hold the quantity what he has bought, and he can add more when he finds any kind of a correction in the stock price. I think the stock is already making 52-week highs. In terms of it's a kind of a cyclical business, and monsoons are yet to come for the 2025. There are expectations of good monsoon this year too, which can help the company's profitability to grow. So in my opinion, he can add more at declines and can stick with his investment.
Can we pull up Ola Electric again, please? If let's look at where the share price is, because the stock is under pressure, trading at 47. I know that we've already talked about this on the fundamentals, and it is a sell according to Saurabh. But I want to ask on the technicals as well, Brijesh, because we've got Deepak Daga, and I'm taking this because he's got huge quantity, 45,000. I asked him again whether this was actually the case or he's mistyped it. 45,000 shares at an average price of 56. Would you suggest an exit at this point and to limit his losses, or do you think that he should hold?
So specifically, if this buying price is 56, and if I look from the very short-term perspective, maybe from a trading perspective, okay, then there is an opportunity. Maybe this guy needs to hold, because 56.60 can be a reasonable bounce back, because the stock has fallen so much. And from a technical perspective, these prices are far away from the averages. So whenever this kind of scenarios are there, the prices tend to move back. So maybe some bounce back can be expected from 47 to 56 is is most probably possible. So for that opportunity, I think if we can just hold on to the quantity, it's advisable.
And then what are the key levels that you would watch then, Brijesh? Because ultimately, this is a falling knife kind of scenario. And so where would you draw the line on the downside, and at what level would you consider selling?
The downside, it is making a lower low. So for me, downside would be like it will be very difficult. It's in a deep oversold zone. What I can say on the higher side, the value of the 50-day moving average, which is at 65. So that will on whenever there is a bounce, this 50-day moving average at 65 will act as a resistance zone. So that is the area when he needs to be extremely cautious. By any chance he is lucky and he sees some little bit of upside, 65 would be the level of hurdle.
Okay, 65 would be the level of hurdle. Hope that answers your question on the technicals. Remember, on the fundamentals, the call from Saurabh is a sell, but this is essentially a trading call that is being provided by Brijesh. And considering that you have such a large quantity, Deepak, hopefully that resolves your situation. We've got a caller. Kalyani is calling us from Hyderabad. Hi Kalyani, how can we help you today?
Sir, I have brought Idea Forge.
Yes, okay.
Idea Forge at a rate of 541, 100 shares.
Okay.
And I thought I'll keep it for long term. But since the share is going down on a regular basis, should I sell it? At the loss, I think I'm at a loss of 21,000 nearly.
Okay. And when you bought it, Kalyani, can you help me understand why you chose this company? Because it's a relatively small company. It is engaged in the manufacturing of unmanned aircraft systems, as I can see.
Yes, sir. That's the reason.
Yes.
Unmanned aircraft systems. And what do you say, the latest equipment they are developing, I thought it will do good. And since it's a small company, like startups and all, they do well.
Yeah. Right.
So I thought for 1 year, 2 years, it will be good.
Okay.
But suddenly the market, everything is coming down. So I'm at a crossroad. What should I do with this?
I understand that. And so let me take your question across to Saurabh on the fundamentals. Saurabh, if you've seen this company, Idea Forge is a company that has been spoken about intermittently, but it's a relatively small company. Do you have coverage, and what would the advice be here?
Hey, Alex, you said rightly it is a very small company. The IPO came in the bull market where, lot of frenzy was there. So people have the expectation, investors have the expectation that the company would do good. But this time around, when we are seeing a lot of selling, especially in the small cap baskets, all these stocks have been beaten down because of the high valuation. This stock also got hammered down. And above all, on the operational front, if you find there is hardly any kind of a revenue. I mean, the company earns about 20 crore odd in the revenue, and there is a negative bottom line to the tune of about 25 crore. So the company did, there is a really miss on the expectation front and on the valuation front also. That is why we are seeing consistent selling. My idea is better to get out, because till the companies, comes out with the really good set of numbers and the management guides for that, till then I think I don't see any turnaround for the stock price to happen. My sense, it is better to exit.
Okay, quick follow-up then. If you're booking a 20,000 loss in this company, where would you deploy it right now? There are opportunities in the larger end of the spectrum, right?
See, there are opportunities in the larger end of the spectrum. If you find, in my opinion, I think The industrials holds the key, the banking holds the key. If you look at the pharma, FMCG, I think these are the four sectors where you can hide yourself. In terms of FMCG, I think the old economic stocks like Dabur, maybe in the capital goods segments, we have just spoken about KEC International or maybe L&T in the pharma space. I think DVs holds the key. In the banking space, we have just talked about the Bank of Baroda or maybe ICICI Bank or Axis Bank. I think big names in these sector, I think one should go about it.
Right. Kalyani, hopefully that helps you out and hopefully that answers your question as well. Brijesh, I understand you have to leave us. Thanks so much for joining us today and a pleasure speaking with you as always. Saurabh, we'll see you on the other side of this very short break. Viewers, do stay tuned. We'll take more of your questions and be back before you know it.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Vixit Bharat, we should call it Vixit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Vixit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
We're also joined by Ajit Mishra, SVP Research at Renewable Broking, who is joining us now with his technical expertise. I'll start with the first query in the second half of this Ask Profit session. This query is from Siam, who's from Andhra Pradesh. His query is on BEML. He's holding 21 shares at 3,500 rupees, and he wants to know whether he should hold or exit for the next 6 months. Ajit, I'll take this question up with you. First of all, a very good morning to you. And what's the view like for BEML on the charts?
Right, good morning. See, post this correction from its record high move, and in this quarter the stock has lost roughly around 32%, and now we are trading closer to the major support zones on weekly and monthly charts. So probably we can spend some time, more of a time-wise correction in the near future. So if the view is very short term, he should consider 2630 as a key pivot area. Once we cross this mark, probably then we can see a decisive recovery towards 3000 plus levels. So as of now, he can stay put with 2400 as a stop loss.
Okay, 2400 is a level that you should watch on the downside. We've got a question in the jewelry space, and Naveen is calling us from Andhra Pradesh. Hi Naveen, how can we help you today? Sky Gold is a question that you have, right?
Yeah, exactly. Actually, I was holding Sky Gold 10 shares for 330 rupees, and also Kalyan for 10 shares around 24 average. I need to think which I need to migrate in a gold sector, either Kalyan or Sky Gold, which is better.
Which should you hold on to? And you know what, I'm going to add one more to this. What is the time frame that you have? How long would you like to hold this for?
Yeah, this holding seems from 4 minutes.
Okay, but I'm saying, how long do you intend to hold it? Is it long term or short term?
Yeah. I mean, like I need to hold it for long term only. I mean, like around 3 years.
3 years. Okay. So on the fundamentals, let's go across to Saurabh and ask between Sky Gold and Kalyan. So he's invested in both. Would you hold on to them?
I think in terms of growth, the sector is not likely to experience the growth the sector has witnessed in the last 1-2 years. The way the growth was witnessed and the margins were there, I think both are tapering off. The valuations are still high. If you look at the Sky Gold, it is trading at 20 times to book value, which is at a scorching high, levels. In my opinion, I think there is a good room for correction. In my opinion, he must be making a lot of profits. I think he should decide to partially exit or maybe fully exit from the jewelry stocks.
So he is not making substantial profits. He's more or less where the current price is. 330 is the buy price. So, but Naveen, considering that on the fundamentals, Saurabh feels that there is a prospect for a decline, maybe you should listen to what he has to say. Ajit, I'm coming to you, and I'm going to add one more stock in this jewelry pack. And Mahima was just mentioning, and I think it's important to mention that these companies are not necessarily comparable on the fundamentals, because Sky Gold, as you know, is a manufacturer of jewelry and it sells to other companies, not individuals or not retail, right? So, but I'm going to add Shivani's question to this. PN Gadgil is the stock that she's holding. 568 is her buy price. She's got 55 shares and she's looking at the next 6 months. So Ajit, we're talking about the entire pack, and there are several to talk about. Titan, if I remember correctly, is also at less than 5% or maybe about 2% away from its 52-week lows. So which, according to you, is the best prospect in the space?
Right. So Alex, the entire space was buzzing a couple of months ago, and we've seen a very strong outperformance by Kalyan, but recently, post this correction move, also we are seeing that the stock is hovering in a very tight range. Sky Gold, on the other hand, is definitely showing comparatively better strength. Means the stock is still holding above its long-term averages, which is a good sign. Means even if when the markets are witnessing decisive correction and mid cap and small cap, they are witnessing excessive pressure. So Sky Gold, I believe that among all these names has better prospects, provided that it manages to hold this 300 area. In case if further correction continues in the market. So as of now, definitely he can continue to hold Sky Gold or maybe add more at current levels. Once we cross this 380, 390 area, probably the stock can retest its record high zone again. So yes, Sky Gold can be a candidate to hold on for.
Right, so interesting takeaways here, because fundamentally Saurabh said that exit the counter,
and it's poised for a correction.
It's poised for a correction, and but the technical view suggests that it's a good buy at present. But yeah, so considering the time frame that you have, Shivani, you will have to take the call whether you want to make an investment or stay invested in Sky Gold or not. Moving on to the next caller, Atul from Mumbai is calling in. Atul, a very good morning to you. How can we help you?
Yeah, good morning. I'm holding the stock of Bank of Maharashtra at a price point of 68.41.
Okay.
My question is, should I book profit or should I hold on to them?
All right. So Atul, did you see
I can hold until 1 year. Yeah.
Okay, you can hold until 1 year. Okay, I'll take your question with Ajit again. Ajit, what's the view like with respect to charts of Bank of Maharashtra?
So PSUs, Mahima, almost all these stocks are witnessing a similar kind of correction move. From last 3 months, they are gradually drifting lower. Maharashtra Bank, we have all seen almost after retesting its multi-year highs, the stock is gradually drifting, and now closer to this 40-45 zone is something we believe the stock might take a breather before making any meaningful recovery. So as of now, it's a hold. Basically, 40 is something that he should maintain as a stop loss. In case of recovery, 50-52 will be the first area of resistance, and once we cross that barrier, then probably we are set for the next leg of the up.
Okay. All right, so that's a call on a Bank of Maharashtra, down about 9/10% in trade today, and the entire PSU banking pack, which was looking resilient at the end of last week, perhaps taking a bit of a knock today. Let's talk about Reshma's query, and this is on Tata Consumer, and she's bought at slightly elevated levels. She's lost about 16% value. She says she can hold for the next 2 to 3 years, and she's looking for a fundamental view on the stock. The stock is under a tad bit of pressure today as well, down about 0.5%. Now, the entire pack has been under pressure, Saurabh, and this is an earnings-related situation that these companies are facing up to. So, from the perspective of 2 to 3 years, it's a long enough time horizon. Would you hold on?
I think this is a very good company. It's a kind of a portfolio stock, considering the fact that there was a relaxation in the income tax benefit, and all these benefits is expected to flow in terms of more spending in terms of clothing and on the FMCG side. I think these companies are likely to benefit. The company has a very good portfolio, and the company is adding newer products to its basket also. So in my opinion, I think for the next 2-3 years, it should be a good hold.
It would be a good hold is the view on Tata Consumer on the fundamentals. Sanjay is calling us from Mysuru. Hi Sanjay, good morning. How can we help you today?
Hi sir, Motilal Oswal shares.
Okay.
300 stock, average price 675. Hold or sell 6 month target, sir.
Okay, got it. All right. So it's a pretty clear question. The stock is currently trading at 583 and below his buy price, even though he has bought on the way down, if I'm not mistaken. Ajit, on the technicals, bottom has been hit. What is the potential from the perspective of the upside?
Right, Alex. So, Alex, after this correction, almost 50% from its record high, the stock is now hovering in a tight range for almost 3-4 weeks. The good part is that it has a strong base around 560 area, which coincides with the weekly moving averages on the 100 EMA on the weekly charts. So once we cross this barrier of 600, probably then we can see a next leg of recovery towards 700, 750. So yes, the risk to reward is favorable. he can continue to stay put with 560 as a closing stop loss and 650 as a position target.
View with respect to Motilal Oswal and a hold is the view, technical view coming in from Ajit. The next counter that we're talking about is Greaves Cotton. Lavish from Indore is holding around 800 odd shares and he wants a 1-year view. His purchase price is around 280. Should he continue to hold or what's the view like? Saurabh, if you have a view on this particular counter, how are you reading it for the next 1 year?
I think going next year, there is expectation that the government capex and the private capex will be higher than the current fiscal. The company is into the, I feel it is in the engine, the company makes engine. And on the valuation front, I think it could be seen that it is trading at a multi-year low valuation. So the growth is expected to come next. Since the growth is expected to come next fiscal, I think it should be a hold.
All right, we've got a question, I'm not sure from whom because the name is not written. I would encourage you on WhatsApp to tell us your name if at all possible. This is a question on Vishal Megamart and Ajit has got this question, I believe, and he's gotten allotted shares during the IPO if I'm not mistaken, and he's wondering whether to hold or exit. Sort of on the fundamentals, since I'm guessing that there's not going to be enough in the way of technical data on this. As I understand it, the anchor book also opened up and so the stock is up, whereas certain other stocks are losing ground. Would you hold on to this?
I think from the long-term perspective, I think all the businesses in the retail segment is expected to benefit in terms of growth going forward next year. So from that perspective, I think it is a hold.
Hold is the view coming in on Vishal Megamart. The stock is up by about 1.8% as we speak. Moving on to the next counter, Nidhi from Ambala is asking a question on NMDC. She's holding 450 odd shares at 65 a piece and her time horizon is for the next 6 months. What's the right price to add more is something that she wants to know. Ajit, what do you think? Are these the current levels to enter in an average out or should she wait for some more time?
So Mahima, we are seeing that some of these metal counters, they have done pretty well in the recent weeks. Currently, we are seeing consolidation, but not all stocks are participating in a similar manner. So NMDC, after retesting its this swing highs related to its multiple moving averages, hurdle around 68 is something, again, we are seeing some profit taking emerging. So my view is that wait for a break above 70 to add fresh curves, adding in momentum is a better approach, especially in the market like this, where we are not sure of whether we are heading for a reversal or is just a normal pause. So once we break 70, then probably 82 is something the stock might test. So around 65 as a stop loss. She can add the stock once we break the 70 barrier.
Okay, all right. So that's the view on NMDC. Let's take the next caller. Suman is calling us from Kolkata. Hi, Suman. How can we help you today?
Hi, Alex. Very good morning. Okay, so
good morning.
I need a review on NTI Mindtree. I have around 10 shares of 4,500. So I'm looking for a long-term view for 3 to 5 years.
Right. Okay. And there's a downtick on the stock today. As I understand it, and correct me if I'm wrong, Mahima, this had to do with Citi, which is winding down some of its IT partners or IT, so contractors. And so one of the major clients, Citi is one of LTI Mindtree's biggest clients, as a result of which you're seeing a downtick today, down about 3.8% or so. Suman has bought at levels of 4,500 on the basis of the fundamentals. Saurabh, this is a tough operating environment for IT companies, and the way that things are going, we were speaking with Moshe Katri earlier today, and he was saying that 2025 is likely to be a chop and churn sort of a situation, a flat situation for these IT companies. Would you hold on or exit?
Already, if you see 2025, 24, 25 was a kind of a flat to degrowth for some of the companies. If you look at LTI Mindtree, that in the last 2-3 quarterly earnings sequentially, there was a kind of a degrowth. And with the Trump making his march towards the tariffs and all, I think the discretionary spending is likely to be lower in the 2025 also, which will actually reduce their earning, or maybe there would be a no growth for these companies. Already, as you have said that one of their major clients have reduced their business. In terms of valuation also, it is not at the maybe at the lower level also. So in my opinion, I think in my sense, the stock can decline during the next 2-3 quarters. It is better to get out of it. That is what my call is.
Better to get out of LTI Mindtree. It's seen a considerable decline from those higher levels. The next question is a clubbed question, and I'm going to make an exception because this is something of a strategy that I think people take up. I've heard these two companies mentioned in the same breath quite often. Saurabh, this one's for you. Bama Lorry or Bombay Burma? And GC Prakash, who's writing in from Chennai, is wondering whether to buy into both or one, and he's got a considerable amount of money that he wants to deploy before the 31st of March. Should he do so in one or both or neither?
My opinion, I think if one has to take a call out of the two, then I think Bamar Lorry makes a sense. Otherwise, I would suggest better avoid both of the stock.
All right, so that's the view coming in on Balmer Lorry. The next caller that we have lined up for you is Naveen, who's calling in from Visakhapatnam. Naveen, a very good morning to you. How can we help you?
Good morning.
Good morning.
So I have 10 shares of Rainbow Children's Medicare.
Sorry?
I have 10 shares of Rainbow Children Medicare.
Okay, all right.
Okay, so it's a 1352 price.
Okay.
I want to understand the long-term perspective for that.
Okay, I got your question, Naveen. Saurabh, I'll quickly come to you. Rainbow Children's Medicare, what's the view like?
I think all the hospitals are making, I think on the operational front, they are making decent growth. And the expectation is that because they are adding more beds and they are adding capacity, and their mix is also allowing their profitability to grow. So in my opinion, Rainbow is a good choice, and he can hold for next 2-3 years.
Okay. All right. So that's a view on Rainbow Children hospitals and specialty hospital there. All right. Let's talk about Niva's question. Niva writing in from Chennai and asking about Colgate. She's bought 4 shares at a price of 2,840 and asking what level can she look at averaging and what the outlook is on the stock. Ajit, I'll come to you on the technicals here. Not losing a large amount of money, but what is the potential upside? This is again from the pack that has lost value and favor.
That's true, Alex. So we are seeing that the attempts in recovery in fact in the broader FMCG pack, the first area for 20 EMA is something that most of the stocks are facing tremendous pressure. And Colgate also, we have seen a similar move. Means after this recovery, again, we are drifting towards the previous swing lows. So probably, this break may result in further decline towards 2200 area. So around that area, she can consider adding more because the major base is around 2150. So around that area, definitely the stock will be in a position of more of time-wise correction instead of further decline.
Okay. All right. So that's a view on Colgate. Let's get Suneet in. Suneet is calling us from Mumbai itself. Hi, Suneet. How can we help you today?
Hi, I've got Hyundai IPO price 19604 each, and I've got one lot, so tremendous losses here. I'm just wondering what to do. Should I buy more to average it now or just stay where I am?
Okay. And when you subscribed to the IPO, did you buy for the long term, Suneet?
Yes. Between 3 to 5 years, that was my initial thought, but I wasn't expecting a big downfall in the first 6 months.
Yeah, a lot of people were not. Yeah, absolutely. All right, so that's a fair question to ask. Saurabh, I think you've been asked this over the course of the last few months. And if I'm not mistaken, you've said, have patience. What is the view now?
The automobile industry is not seeing the growth that earlier was envisaged for this fiscal. There is I think, lower single-digit kind of a growth that the company is experiencing. Some of the companies are doing good, like maybe Mahindra. But for that matter, if you look at the Hyundai Motor, I think the SUV segment is doing good. But also it is a lot of competition is coming up from the Kia and from the new launches. The smaller one cars are seriously not doing well. So you have to have patience, and it can't be, the judgment from here is that maybe next few months or maybe quarters will not be great for these automobile players. So in terms of stock price, I think it can drift lower also. I think better not to average and stick with your investment for long term.
Okay, stick with your investment is the call, but don't buy more at this juncture. Suneet, hopefully that answers your question. It is now time to hit the rapid fire segment, and gentlemen, you know what that means. We'll throw as many questions at you like grenades, and you'll have to field them and ensure that they don't explode. All right, the first question is Anantraj, and this is a question from John. He's looking for a long-term view. He's bought at levels of 658. Saurabh, what's your view?
Exit on rally.
All right, Kadir has a query on Madhusumi Wiring. He's bought 1,500 shares at an average price of 49. What's the view like, Ajit, on the charts?
Certainly hold, and in fact, one can add more.
Okay, Tata Technologies for the long term. Kiran wants to know, he's writing from Belgaum. Would you buy for the long term? Saurabh?
Avoid.
All right, Gul wants to make an entry in ICICI Bank. What's the price at which he can make the entry? Ajit, on the charts?
Can be bought at current levels because we are seeing outperformance within the sector. 1240 stop loss.
Okay, coming back to you. South Indian Bank is the name of the counter. Umesh wants to know. He's writing from Kanyakumari, and he's bought at a level of 25. He's wondering whether he should hold or sell for the long term.
Hold.
All right, TCS is the next counter. Kunal from Indore has 21 odd shares at an average price of 4063. Should he hold, sell, or buy more? Saurabh, what's the view?
Hold for long term.
Okay, Tata Motors, HSBC had a positive view on the stock. We've got Dinesh, who's bought at levels of 691. 3-month time horizon. Should you hold or sell and buy ITC? Ajit?
Hold Tata Motors, 625 stop loss, 725 target.
All right, Axis Bank is the next counter. The person is holding around at an average price of 1150. He's holding 600 shares. What should he do? What should be the next course of action, Saurabh, as per you?
Hold for next 3 years.
Okay, Engineers India Limited, 6-month view is being sought. Rajiv, who's writing in from Delhi, is asking, Ajit, what's the view?
Hold and close to around 180.85, exit complete.
All right, NTPC Green is the next counter. Girish Kumar from Kerala is holding 300 odd shares at an average price of 128. What's the view like, Saurabh?
Convert into NTPC.
Okay, convert to NTPC. Thanks so much, gentlemen, for joining us. And I must say, you fielded all of those grenades with very good alacrity. Thank you so much for joining us today, and pleasure speaking with you as always. Right, that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure. From the scratchy-throated Mahima and from Alex, thank you so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Welcome to KYC. I'm Harsh Saita, and over the next half hour or so, we'll try and break down a very interesting company. Today, we're going to break down Advait Infra. In fact, Advait Energy Transitions and what the company actually does. Let me start off with what the company does. It's largely into the power transmission, substation, and tele-infra related products and solutions. And more specifically, established in 2010, they transitioned from consulting and trading to manufacturing in 2014. And the goal that they set themselves in 2014 with that shift was to
try and cater to import substitution to manufacturing. This is basis their conference calls, and largely even today, power transmission and renewable energy solutions is what they are catering to. They diversified into renewable energy in 2023, and that currently occupies a very small portion of their overall revenue. To be absolutely precise, transmission is roughly 90% and 10% odd renewable energy, and that split will likely change dramatically going forward. We'll talk a little bit about that as we roll in and give you more details with regard to the company. But let's give you a mix with regard to segments and revenue. You're looking at optical ground wire, which is around currently 45%, but was 72% of the mix in FY24. Currently, 9-month FY25, that has shrunk quite sharply to 44%. And you have other places where we are starting to see chunky revenue come in. Primarily, power discom and EPC projects. That's where has been a significant increase with regard to mix from 4% in FY24 full year revenue. It now contributes 23% in 9-month FY25. So that's one big change which has happened, and you'll see that transition on your screen. The other one is with regard to stringing tools. Now, stringing tools are tools which enable or mechanized tools which enable transmission or setup of cable wires, overhead cable wires, both setup as well as maintenance. So that's a key component with regard to transmission. Currently commanding around 18% of the top line, was just about 11% at the end of FY24. So those two are the big ones. And even within that, stringing tools, I believe that the company has a very good market share in India, around 30% with regard to stringing tools. So that's something you might want to keep in mind, because if transmission were to play out in a very strong fashion, this company could well be that play. You could well play power transmission and the power theme through this company. Essentially, that's what it indicates. Now, in terms of some of the other lines of business, slightly smaller, so we'll quickly move on. Let's also talk about renewable energy, because that's going to be the elephant in the room. They're going to start with 1 megawatt in June of 2025, which is later this calendar year. And thereafter, what they've guided for is very, very strong growth on this component. In fact, in terms of mix, renewable energy is going to command a higher mix also than even your transmission, which currently occupies 90% of your top line. So something to keep your eye out on, because transmission could well be replaced by renewable energy, and both of those could be the twin lever on which this company grows. But let's look at factors which we'll look out for when we're analyzing this company. And we'll have Anushi join us right after this. Let's quickly look at those components which we generally look for in terms of all companies. We'll first look at the income statement and the balance sheet. Those will be the two metrics we'll look at, and the record of the company over the last 3 to 5 years. We'll also look at the cash flow statement and the return ratios. The return ratios will be key, because as the company continues to make new investments, are they able to keep those return ratios healthy, will be the one big question that we'll try to analyze. Shareholding pattern, street cred, as we always do. Guidance this time around, because we don't have too many companies doing this kind of business in the transmission space, doing EPC as well, and then venturing into renewable energy. Therefore, comparability is going to be difficult to kind of gauge. We'll try and look at the guidance on this one and try and assess how good the future prospects are. And we'll look at street coverage as well. And thereafter, we'll speak to the management themselves about what further guidance that they have to give with regard to this company. So those are the larger parameters that we'll look at. Let me bring on board Anushi Vakharia to try and break this company down. Anushi, let's start with the income statement. What are you seeing with regard to the numbers there?
Right, Harsh. So if you look at what is happening, what has been happening with the company in terms of revenue, we are looking at roughly around a 50% CAGR growth in the last 2-3 years period itself. In fact, if you see the FY22 revenue, 72 crores, which is now increased to the size of 207 crore. And what the management has further guided for is to maintain the kind of growth momentum that they have seen in the last 5 years along with that. So revenue continues to be on a stronger footing. We've seen about 101% of growth in just FY24 of this year. In terms of the margin picture also, what used to be like a 15% of a margin business, it was in the range of 17 to 18%. Now, the management did say that in the next 1 year or so, the margin profile is going to continue at the similar levels to 17% range that we see. But after that, they might see a temporary dip in terms of the margins which are there, and have given a range of overall 13 to 18%, after which they'll again continue with the margin story after the 3-year period which is there. If you look at the PAT CAGR of the company, we are looking at a 64% of a growth here. So overall, in the income statement side, it is the healthy numbers that we are looking at. Also want to pull out the 9-month FY25 performance. So what has happened in this fiscal year, we are looking at a growth of around 37% in terms of where the revenue is concerned. Margins were in the range of 15% as compared to 16.7% last year, and net profit saw about a 26% of an increase. So this is the income statement check that we are seeing, Harsh, but balance sheet is one which has stood out to you, right?
Yeah, absolutely. So let's look at the balance sheet. Let's break it down for our viewers. We're looking at good growth across the board, especially when I'm looking at the way in which fixed asset has grown. Look at the base of fixed assets growing from 14 crore just a couple of years back to currently sitting at around 37 odd crore, just a shade below 37 now. You're also looking at equity which has expanded slightly. You're seeing reserves which have gone up quite sharply over the last 6 months, especially on the back of that equity raise. And you're seeing debt levels largely controlled. You look at the debt to equity on this one after that fundraise, and you'll see that it doesn't look materially a concern per se. Let's also keep in context that this is a 1160 crore odd company in terms of market cap, and therefore the debt, while it's gone up quite significantly from that 6 odd crore number to around 43 crore, it's still quite sharply lower than what the overall market cap is. So overall market cap at around 1100 crore, 44 crore, not significant for a 1100 crore market cap company. So not looking all that bad. Largely focusing on that equity raise and hoping that that will aid the numbers going forward. But let's talk about cash flow also. I want to quickly break that down. The cash from operations, slightly up and down. Why is that so? FY24, there's been some amount of increase with regard to working capital. You're seeing a larger amount of accounts receivables coming through, and I'll break that number down for you. When you're looking at accounts receivable, the number stood at around 25 to 28 crore between FY22 and FY23. FY24, that number goes up to 40 crore, and FY25, it's sitting at 66 crore. So that spike in trade receivables is one thing that you may want to watch out for. So that's one thing. The other thing is with regard to your overall inventory. That has stayed largely steady. So despite the very strong growth overall that we are seeing, we're not seeing a spike in inventory, and that's one thing which kind of stands out to me. So those two things really stand out. Fast growing company, no increase in inventory, but accounts receivable going up quite substantially. Overall, it's a neutral on this one because you're seeing debt levels expand. Not sure how much more they'll expand. You're also seeing overall the fact that your working capital requirements in the business have gone up. So your cash flow statement, therefore, your net cash flow is actually negative in that sense. If you exclude the equity raise which has happened, which is largely being used currently to fund that growth number. But Anushi, over to you. with regard to return ratios, because those look extremely healthy, right?
Right. So what we are seeing is FY22, FY23, we did see a dip in FY23 numbers in terms of ROE, ROC, but FY24 is something that we have seen a stronger trajectory. We've seen the kind of net profit growth that the company has shown in the last 3-4 years period as well. We are looking at a 64% of a CAGR. ROE, if you look at FY24, the number stood at about 28.7%. This was in comparison with the 19.2% of number for ROE. Even in ROC, 31% is the kind of figure that we are looking at as compared to 23%. So yeah, as far as where the return ratios are concerned, we are looking at pretty healthy set of numbers, Harsh, right?
Yeah, absolutely. So return ratios extremely healthy. Whether they can continue on this clip is really the question, Anushi. At 30% odd, you won't see too many businesses growing at that clip into the manufacturing space, right, especially. And whether they can continue to do that will be the question, whether they can continue to employ fresh capital at those kinds of rates. But in terms of shareholding, and this is again an interesting one, you had promoter holding at roughly 73.5% all the way up to the quarter ended June 2024. Thereafter, we've seen a bit of a blip with regard to promoter holding. It's come down from that 73.5% to around 69.5%, and it's remained steady there. And honestly, even at 73.5% for a large part, it had remained quite steady in that sense. So we've seen promoter holding fall a wee bit. Public in that sense has largely been as is. There's been no FI interest whatsoever in the company, and that's probably one possible negative, but again, it's a very, very small company, just about 1100 crore. I'm not sure how much we can expect in terms of FI and DI ownership, but a strong thumbs up in terms of shareholding, just because the promoter holding is quite strong in a company like this. And therefore, in that sense, a positive, Anushi.
Right. So let's see how the stock has performed over the course of different periods. So what we are looking at is, if you take the near term in consideration, in 6 months we've seen a little bit, not a little bit, we've seen some considerable correction over the company. We are looking at a 40% of a dip from where it was earlier. Of course, what we are seeing in the markets also, since Harsh mentioned, that's a 1,100 crore company, and all the small caps and the mid cap stocks, especially in the space that the company operates in, has been in correction mode. So 40% is the kind of number that we are looking at. In terms of 1 year performance, we're seeing at a 9% of a dip, as well as per where the stock price movement is. But in 3 years, it's been a multi-bagger for the long-term investors who have been invested in the company, seeing returns of over 18 times. So a significant kind of a return in terms of where the stock price is concerned, right?
Yeah, absolutely. But Anushi, contextualize that for us. So, of course, the numbers over the last 3 years have also been extremely strong, and therefore that kind of 18x kind of return. But the last 1 year has been very, very painful for an investor. In fact, it's underperformed, significantly underperformed the mid-cap and small-cap indices, even in the last 3 to 6 months. And that's what really stands out, and that's why we give this a bit of a thumbs down, because the kind of performance during tough times has been slightly, so it's a slightly high beta stock in that sense. The second thing is that talk to us about guidance, because that will hold the key on what next.
Right.
The numbers indicate what's already built in. What next now from this point? What can we expect?
So, you know, at the start, we were discussing about how the power transmission segment, which is there, it's contributing to around 90% of the mix for the business. But the management has a very solid set of plans for its new venture from 2023 onwards, which is in the new renewable energy, wherein now it is aiming for a mix between a 50-50 mix between the two businesses. So this is one vertical that needs higher focus on, even in terms of where the order inflows are concerned. They've highlighted a higher opportunity in terms of their. In fact, they're setting up a manufacturing unit at Ahmedabad also, which is a 300 megawatt electrolyzer under the PLI scheme by SECI, and the initial production is expected to start from FY26 onwards. Even they're setting up a fuel cell assembly and manufacturing facility also in 2026-27. We can see that, and this is the MOU with the Teco group that they were going to be developing fuel cell products. So 27 onwards, we are seeing a lot of capacity new capacity being added to the business 28, 29 onwards. Some of these key operational numbers, once they are completely on stream and operational, we'll see the kind of growth in terms of the revenues floating in. The company has said that it sees about a 50% of growth in a new energy segment. They're seeing about a 40 to 60% of growth. In terms of where the margins are concerned, well, there may be some sort of temporary blip in margins in the new energy segment, new renewable energy segment. Overall, they've given a range of 13 to 18%. So this is overall picture that we are guiding in terms of whether business is concerned in the newer vertical, how the margins would stabilize with the addition of this going forward.
Now see, I mean, the key question here, and that's essentially why we've given this a neutral. Just want to clarify this for viewers as well, Anushi, is because while the guidance is extremely strong, execution on this guidance is going to hold the key.
Right.
You saw the way the stock has fallen from the highs, and therefore the expectation that is being built in to the company is also quite high. And therefore, one is you want to keep the guidance in mind, which is extremely strong. But two things. One, it's off a low base. The base is extremely low, just a 200 crore in terms of top line. And second is you'll want to also try and see how the execution works out all the way up to FY27. And therefore, a neutral on the guidance stance, given the low base as well as high execution requirement. But at the same time, let's also look at whether there is absolutely any street coverage. Now, on a 1100 crore company, you'll likely not see a street coverage. But at the same time, this also means that we need to keep in mind that when a stock is not covered by analysts, there could be scope for not having the numbers fully vetted. You have an auditor in place, yes, but an analyst will always give a better perspective on how the numbers are playing out. There's more comfort added when an analyst is there and tracking the company, and therefore you will have some bit of advantage there, and therefore we're giving this a neutral as well, given that it's just about a 1100-1200 crore market cap company. Overall, let's look at how the numbers are really stacking up and how the ratings are stacking up. So you have the income statement with a thumbs up, a balance sheet with a thumbs up. Cash flow is a neutral, and we spoke about this, that cash flows have turned negative in terms of cash flows from operations and how they're needing to raise money to ensure that they continue to have their growth clip protected. Shareholding is a thumbs up. Street cred is a thumbs down because of the last 1 year performance. It's been a tough year. Guidance is a neutral on a low base, and street coverage, because there is none, is also a neutral, but you have to be cautious therefore because there is no street coverage. Overall, this gets a 5.5 on 8 on our ratings parameter, and thank you, Anushi, for breaking this down. But also, let's move on and hear it from the management themselves. Earlier, we caught up with promoter and MD Shalin Sheth, and here's what she had to say on the company's growth prospects going forward. Listen in to that conversation.
Since we have been growing with a rate of 30 to 45% in last 3 to 5 years, so the main growth has came from our PTS division, that is Power Transmission and Solutions Department. We are finding a great opportunity in this segment itself. And we have got a manufacturing and EPC segment within this PTS part. And we are also innovative various products. So every second year we are coming with a new manufacturing line. So our strategy is that to create the entry barriers and to enter into the business where there is an entry barrier and look forward for the growth where we can sustain the business on its own. And we have been quite successful for adding the new product lines. And that's the reason our company has been able to give this growth. At the same time, from the NRE division, that is New and Renewable Energy, we put up the division in 2022-23. And our plan is to manufacture the green hydrogen equipments like electrolyzers and fuel cell. So that is one part of the NRE. We are also into battery energy storage and EPC solutions for the solar. And we are also providing the carbon solutions. So these three segments where we are looking forward for the growth of next 3 to 5 years. And we believe that in next 3 to 4 years, we'll be able to have the equal revenue from the PTS and the NRE both the side.
So it is a 50-50 mix that you're looking from 90% mix which is currently there in power transmission to a 50% is the mix that you will be looking in the next 2, 3, 4 years. Want to understand, considering that there would be a 50-50 mix forward for the business, how would the margins shape up? Would they continue to remain in the 15 to 17% of range? Just want to get a perspective on this, because what we have seen from 2022 onwards, where the margins were in the line of 13%, and subsequently we are seeing it going upwards in the range of 17%. Want to get your sense on how the margins have shaped so far from the last 2-3 years, and what's the picture going to be forward?
Looking to the current order book and the market that is offering to us, we believe that we'll be able to maintain the same profit margin for our PTS division. And for the NRE, based on the product mix, initially for 2 to 3 years, we'll be having little down in the margins, but we'll be looking forward more into manufacturing side of the NRE too. So believe that after 3 years, our margin story will be continued for the NRE side also.
So, Mr. Sheth, while currently, if you look at the 9-month picture, your margin stood at about 15%. This is as compared to, if you take the last year in consideration, that was around the range of 16.7%. Want to understand the current blip which is there. Is that the reasoning that you're giving, that since the new energy division is still developing, in the next 1 year or so, we can see there could be some margin pressure, and then from there onwards, we'll see a gradual pickup?
For the next 1 year, we don't see much margin pressure, but maybe for in a short horizon of 2 to 3 years, if we need to take some of the projects, it may have a little down in the margin for the NRE side, but overall, we'll be able to maintain the margin.
Okay, and can you give us a range as to what could be the range when you see in the next 2 to 3 years where there could be some pressure? What's the kind of margins that you're looking at?
Our range on a company basis will be about 13 to 18%.
Okay, so 13 to 18% is what we are seeing going forward for the business. Now, as we have seen in the last couple of months, there have been significant developments for the company in terms of the new and renewable energy. If you've cited out your future plans also, in 2027 is 1 year that we should be watching out for, when some of these key facilities would be on stream. Can you talk about the recent one, which is the PLI that you had recently announced, and this is for which you're also setting up a new facility in Ahmedabad? Want to understand more on this development, how this would lead to incremental revenues going forward for the company, and what could be the expectations from the overall growth picture for the business?
Our new facility will start giving the manufacturing and revenue from the year 26-27 onwards. And we believe that the facility should be ready by that time. And we believe that we'll be also required to provide as per the market requirement, because slowly the market is also gearing up. As I told you that overall our NRE and PTS division will be having the equal market share, equal product mix in the next 2 to 3 years, maybe in 4 years. So we are looking forward with a growth of 40 to 60% with the NRE business in next 3 to 5 years.
So 40 to 60% is what we are seeing from the NRE business. But if we take the whole overall picture in consideration, considering the power transmission segment as well, what is the kind of overall revenue growth that you're targeting?
Looking to the order book and kind of orders that we're expecting, and looking to the deliverables of those orders, we believe that we'll be able to maintain this growth of last 5 years we've been maintaining in an overall company size.
Okay. Yes, please go ahead.
Or maybe in some year it may have little change, it may also exceed based on the market and requirements.
Okay, that's fair to understand. Mr. Sheth, considering that you're marking a foray, your NRE is still a smaller segment for the business, wherein you're seeing about a 50% of a share going forward. I also want to understand, are there any challenges or concerns that could be upcoming in these next 2 to 3 years? Want to get a sense on how the competition is as compared to your business. Just want to see what could there be some of the concerns be.
Looking to the market and size it is offering, and looking to our ability and our cost structure, for next 3 to 4 years, for the numbers that we are working, we don't see a very fierce competition, because the market has got enough to offer in terms of growth, in terms of opportunity. So we don't find a very fierce competition while achieving our numbers for next 3 to 5 years.
Well, that's a conversation with Advait Energy, which Anushi had, insightful. And we hope you found that interesting as well. But with that, out of time on this edition of KYC, from Anushi, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Vixit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Vixit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom.
Hello and welcome. Good afternoon. You're watching Markets at 12 only on NDTV Profit, and I'm your host Malika Mishra. I'm being joined by my colleague Pallavi Nahata to talk about a very interesting asset, which is gold, later on in the show. But first, let's check how the markets are currently faring. The benchmark indices, the Nifty 50, is trading off the day's high around 22,500 levels at the moment, and the Nifty, the Sensex, which is a 30-pack Sensex, is hovering above 74,100 levels. While most stocks in the Nifty 50 basket are advancing, the top gainers at the moment are Bajaj Finserv, SBI Life, IndusInd Bank is recovering after a painful beating triggered by negative news flow. And especially RBI recently asked depositors to not worry with regards to their deposits made in the bank. A handful of bank stocks are doing well, as you can see on the screen. But on the other hand, you would see that the benchmark is being largely dragged by stocks like Britannia and PPCL, Nestle, Asian Paints, ITC, among many others. Now let's check the key contributors in terms of weightage on the Nifty 50 basket, and you would see a couple of banking stocks like ICICI Bank, Axis Bank, HDFC Bank, Bajaj Finserv are dragging, are pulling up the market. But on the other hand, stocks like RIL, ITC, TCS, HUL, as you also saw, a mirror image of in the heat map, you'd see that these are dragging down the indices. Now, let's talk about the sectoral heat map at the moment to get a sense of, how are the sectors exactly performing. And you'd see that on a good side, on a positive note, most of the sectors are in the green. Like you have the pharma, the healthcare sector, finance, the private banks. So bank, pharma, autos, they're doing well. Metals are clearly leading the gains. But as opposed to IT, FMCG, oil and gas, these are some sectoral counters that are not doing that well. Let's also take a look at the advanced decline ratio to see where is the market breadth at the moment standing. And you'd see that it's almost half and half divided, but with more stocks, favoring towards the advancing side, whereas close to 1,000 stocks declining. So market breadth currently stands skewed in favor of the declines. But today we shall talk in length about gold prices that have crossed the 90,000 mark domestically, and they also currently hover around the $3,000 mark in the international market. And to set the context for a good holistic gold conversation, I have my colleague Pallavi Nahata joining us. Pallavi, what's dragging these gold prices and what have you picked up so far?
Right, Malika. So, gold prices, as we've been seeing over the last few trading sessions, have continued to breach fresh highs. Currently, we did briefly see gold touch $3,000 per ounce. Currently, it's closer to about $2,985 an ounce. Even in INR, gold is trending at slightly around the 90,000 levels per 10 grams, and that's for 24 karat gold. The recent rise has, of course, been attributed to the uncertainty that we are seeing globally and the volatility we're seeing in financial markets, and because of gold's role as a safe haven in such scenarios. So there's, of course, geopolitical factors that have been continuing to drive the demand for gold. The recent rally was the result of the uncertainty around US tariffs and the developing trade wars. These trade wars have been seeing amplifying economic uncertainty and market volatility. At the same time, central banks have also been seen increasing their share of gold ever since the pandemic took place. Emerging market demand for gold, and that's from economies including China, for instance, has been on the rise. So, some of the key questions that we're trying to sort of answer over the next few minutes is whether we're likely to continue to see the pace of increase that we're currently seeing, and will gold continue to hover and exceed and stay around these 3,000 odd levels. And for that, there's over to you. Let's get on our guests.
Definitely. So thanks for that and setting the context, Pallavi. We have Kunal Shah, head at Commodities Research from Renewable joining us, and we have also G. Chandrasekhar, economist, senior editor and policy commentator. Welcome, gentlemen. As Pallavi exactly set up the context of gold prices rising, my first question to you would be very basic and straightforward. We've always considered gold to be a safe haven asset. I would want to ask, amidst global uncertainties, as Pallavi already highlighted, does this become a safer asset to invest? And Kunal, I'd like to take your view first.
I believe that gold is likely to continue its safe haven status at least for some more years, at least next 3-5 years, because there is no easy alternative available which can be seen as a hedge. So Bitcoin was one of them, but it's just about a few countries investing in Bitcoin and planning to create reserves in Bitcoin. But if you really want to hedge against the uncertainty likely to rise from the rising debt of the US, or the not able to service their debt 2 years, 3 years down the line, or if the inflation again surges. So you don't have any instrument right now available except gold to protect yourself. So gold will continue to play a role of a insurance scheme for a lot of like we buy term policy. The same role gold is going to play for the financial market participant, for big funds, for HNI investors, for central banks. And I think this is going to continue in years to come also.
Okay, got it. And Mr. Chandrasekhar, what is your view? As Kunal Shah already highlighted that he sees this run to continue for some time. What's your view on gold prices rising? Do you see that it will be able to hold on to this momentum in the long run? Because we live in a scenario where global uncertainties are at an all-time high.
Yeah. I've always considered gold to be a very lucky or fortunate commodity. Okay, that whenever there is an opportunity, whenever gold faces headwinds, gold market faces headwinds, something comes up, some uncertainty comes up that will propel gold prices higher. This is what we have seen in the last so many years. I've seen 30 years ago gold at $250 an ounce, okay? And then from there, it's now closer to $3,000. So it's been rising. There is no doubt at all, number one. But this uncertainty that we see at the moment, which actually started 2 or 3 years ago with your Ukraine-Russia conflict, then there's Israel-Hamas conflict, then inflation, rising inflation, high interest rates, all that is actually still continuing. And now you add another factor, another driver, which is the tariffs. A huge uncertainty relating to tariffs proposed by the US, by the Trump administration. For all these have combined to propel gold prices higher and higher, which is accelerated by central bank purchases, etc. The point I want to make is as gold prices keep rising, the risk of a correction also increases. In my view, currently gold has easily $300 to $400 risk premium. And if the risks were to abate, if there is clarity or peace in between Ukraine and Russia and in the Hamas or Middle East scenario, there is a very strong possibility of a correction. When that will happen, when that peace will break out, when there will be ceasefire, we don't know. We can't bet on a war, okay? But gold, as it keeps rising higher and higher, and currently it's a little shy of 3,000, the risk of correction increases very, very dramatically. This is number one. Number two, what is also important is we are forgetting higher prices destroy physical demand. And we have seen that happen in China, we have seen that happen in India and other emerging markets which are very large consumers of gold. So these levels, in my view, are unsustainable. They will sustain so long as this uncertainty continues, but it will be foolhardy on our part that this uncertainty will continue forever. No, there will be change, uncertainties will. The gravity of the uncertainty will certainly reduce. There's no doubt at all. Gold will have to correct, but we can't time the market. This has to happen. Correction has to happen, but it's rather difficult to time the market. This is number one. Number two, there is another question I'm sure will come from you Is it the right time to buy gold? In my view, people who have bought gold at lower prices, this is the best time for them to sell gold and then book profit. And whatever profit they book, you invest at the current prices. Because the propensity for further rise in gold prices, in my view, from here is extremely limited.
All right, Kunal, coming to you, I do want to get your view on this as well. From a shorter term perspective especially, what are the levels that you're looking at for gold? Do we expect gold prices to sustain around the 3,000 mark, or do we expect some swing from here as well? Do you also hold the view that the percentage change that we're likely to see going forward in terms of a rise might be limited? What is the view that you'd give to those looking to still invest in gold?
So somebody who wants to invest in gold, I think they should wait. Mr. Trump said today morning only that on Tuesday he's going to talk to Russia. So even Russia cannot withstand this ongoing war, which it has been indulging from last 3 years, and that is definitely taking toll. So Russia would also like to do business freely the way it used to, and I think there has to be a peace going forward, peace talk. I don't know how it's going to progress, but the likelihood of that happening is very high. So in the near term, most of the positives have been factored in the gold prices, and which may lead to some correction, some profit taking. It can go down to the levels of 2,850 to 2,900 again. A correction of $100, $125 if the peace talk materializes can take place. I think those would be again levels to re-enter, because apart from the geopolitical problems, the gold is not at $3,000 just because of the geopolitical problems. Gold is up at $3,000 because of the problem in the US bond market, US debt, and the uncertainty related to the tariff and everything, what's going to happen. So I think central bank, even though US does whatever it does, they are not going to buy US bonds, at least for some more time, until we have Mr. Trump coming up and really talking in globalization favor rather than the multipolarized world. So I believe that those correction would be a great opportunity to again re-enter in a long position in gold, because in order to hedge yourself against the uncertainty which may rise in times to come, you need gold. You need gold because if the dollar crashes by 10-15%, what will happen to gold prices? It is definitely going to go up. So at some point, $2,850, $2,800, these are the levels, where investors should again start rebuilding their position. And near term, the upside may be capped at $3,050. It may not go above $3,050.
Okay, and staying with you, Kunal, I do want to ask you about how domestic sort of factors are expected to influence demand as well going forward. Because of where we're seeing gold prices at, can we expect domestic demand to stay tepid for the time being at least?
Yeah, so now I think the festive season will start, okay? The gold buying will come, the marriage season will again start. And I think that is going to create a demand, but the volumes may get affected severely because of the higher prices. The Indian buying pattern Indian buyers may shy away from the market, may buy a lesser tonnage of gold, and that's one of the reason that at higher prices the domestic demand is likely to suffer. Not just in India, in most parts of the world, most parts of the Asia, the higher prices will lead to a lower jewelry demand. The volumes may get affected. The sales number may not get affected because of the higher prices, but the volumes are definitely likely to witness hit.
And Mr. Chandrasekhar, I'd like to pose you a question. As a common average investor, if I'm watching you and I need your advice, which form of gold would you recommend right now is the right time to buy? context being that gold was one of the top performing asset classes in 2024. Plus, gold in the market is available in various forms. We have gold ETFs, we have gold jewelry, then we have bars, we have coins. Now that and as you rightly mentioned, that in the long run, until we have global uncertainties in position, gold prices might elevate further from where they are already at the moment, but they might also come down. So in that context, which form of gold do you recommend as an economist to invest in?
The first point is my disclaimer. I'm not an investor, I'm not a trader, I don't hold any position anywhere in any asset class. This is the first proposition. I'm a student of this market. And my own belief is this is a time actually to sell gold and book profit and reinvest that profit in gold again with the hope that prices will go up further. I am bearish on gold. My belief is gold has a potential to decline up to $2,500, but I will not be able to give you a timeline. Much depends on the way ceasefire breaks out in the Russia-Ukraine scenario and in the Israel-associated scenario. The Houthis are still already being bombed by US forces. Things have to settle down. Things can't continue like this. But a greater uncertainty is the tariff threat which Trump has come up with. He's already imposed tariffs on steel and aluminium, on China, on Mexico, on Canada. That is also creating uncertainty. But more likely, he is actually testing the waters rather than going whole hog to fight with his traditional trading partner. Therefore, this is again an evolving situation. As they say, picture abhi baki hai. It is very difficult to double guess how the markets are going to behave in future. But I am not, from the current levels, I'm not bullish on gold. It is probably time for those who have bought gold at lower prices to actually sell and book their profit.
All right, one last question for you, Kunal, before we can let you guys go. So, given what you've said your views are on gold going forward, at the moment, would you then recommend maybe silver ETFs over gold ETFs?
Silver looks quite promising as compared to gold at this level. So, if you look at the gold-silver ratio, that is also in favor of silver. Fundamentals of silver, so the clean energy demand of silver is rising at a double-digit growth rate across the globe. The supply side, if you see, 55% of the silver comes from the secondary mines, and rest of the silver comes from gold and silver mines. So there is no significant supply growth, even though the prices have risen so much. There has been a 5 constant years of deficit. So every year, so if you see, we are doing just the maths, and at the end of 2024, the difference between demand and supply was as high as 200 million ounce. So this is very bullish for silver. I think silver prices will continue to outperform gold going forward from here. And silver has a better potential. I would recommend investors, even at this level, you should invest in silver ETF. You are likely to get 15 to 20% return in a matter of 1 year.
Right. And Mr. Chandrasekhar, one comment that I would want to get from you is, how do you see, the impact of currency fluctuation, which is basically how rupee fluctuates against the dollar, impacting gold imports and thereby influencing demand in India in the long term?
Yeah. Even if gold prices were to correct on dollar terms in the international market, we in India will not be able to get the full benefit of any fall in international prices, primarily because our currency is getting weaker and weaker. And I'm quite bearish on the rupee. The rupee should probably towards the end of this year go closer to 90. I actually dread thinking about that scenario. But in my view, it's likely to pan out. And therefore, that weaker rupee will make our imports more expensive. And of course, we have a rate of customs duty on import. And therefore, the benefit of any fall in the international dollar price, our consumers will not get in full measure. They will get only a part of that. And therefore, one, there is reason to expect that the domestic market will not correct in a hurry, even if the international market were to show some correction.
Right. Thank you so much, Mr. Chandrasekhar and Kunal, for joining us in this conversation and giving us that insight on gold and much needed clarity on rising gold prices. And thank you so much, Pallavi, for joining us and asking these questions. Apart from gold, viewers, crude prices is making some noise too, especially after the US attacked Houthi rebels in Yemen. Now, apart from this, other global wars also seem to be impacting crude oil prices across the globe. To understand this impact better of global tensions on crude oil prices in a bit more detail, let's listen into Vandana Hari, founder and CEO of Vanda Insights.
So as far as the Red Sea is concerned, because of the Houthi attacks which have been going on for over a year on mostly Western ships, US affiliated, European and Israeli affiliated ships, all of these ships have been staying clear of that waterway in any case, right, over the past more than a year. There has been a ceasefire in Gaza since January between the Hamas militants in Gaza and Israel. And the Houthis have toned down or suspended their attacks on ships in the Red Sea since then, but that hasn't resulted in ships returning to the Red Sea, the Western affiliated ships. So it's not really supply flows through the Red Sea that the market is looking at. What the market is really concerned about is, could this now lead to the US and Iran on the precipice of a war? And if you recall, last April and last October, we were in a similar situation with regard to Israel and Iran. They launched direct military conflict attacks against each other, and that led to quite a spike in crude premium. So I would say, do keep an eye closely on, how this Red Sea pans out. The US has pledged that it will continue the attacks until the Houthis promise that they will not attack ships in the Red Sea again. And it's a tit for tat battle. It could continue escalating before it calms down. I do feel, however, that the geopolitical risk premium in crude as a result of this is going to be limited. As I mentioned earlier, the outlook with regards to global oil demand growth, also because of the sluggish Chinese economic momentum, is quite weighing quite heavily on crude, which is why we've seen Brent go down to 6-month lows in recent weeks. It's been flitting very closely around $70 a barrel.
Moving on, UBS is bullish on Bombay Stock Exchange. The brokerage initiates coverage with a buy rating at target price of 5,350 rupees with a 35% upside potential. My colleague Harsh is joining us with a detailed report on the same.
The kind of upside that is being showcased here, a very strong one. What UBS is suggesting is, one, scaling up of options, turnover acts as a key driver for BSE going forward. BSE has created a new revenue and profit pool driving the transactions income for the business. They're expecting BSE to drive market share, and this is despite what they are penciling in as a 20% lower average daily turnover in FY26. So despite that one negative, the big positive that they are focusing on is that the market share for BSE will improve going forward. They are penciling in a 41% revenue CAGR over FY24 to FY27. They are expecting operating margins to improve to 63 to 64% FY27 versus 51 to 52% in FY25. So strong both growth on the top line as well as on margins. Valuations currently sitting at around 33 times 1 year forward price to earnings, which is around 11% premium. They are penciling this at 41 times FY26 price to earnings, and therefore giving it that target price of 5350.
Thanks for that, Harsh. And viewers, that's all the time we have on this particular show. But do stay tuned to NDTV Profit for more news and updates.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact.
Hello and welcome to all the viewers. You're watching Profit Buzzers on NDTV Profit. I'm Hiral Datia and with me is Puneet Javedi. Puneet, good afternoon. Clearly, if you see in terms of where markets go, it's an interesting move. We are above that, near that 22,500 mark. But first up, let's quickly take a look at what headlines are panning at this hour. Markets trade in the green, but off the high point of the day. Nifty, FMCG, oil and gas lose the most. Pharma leads the way with most gains.
Vehicle registration agency Rosemata Digital Services sues Ola Electric for defaulting on payments of about 17 to 18 odd crores. The company says it has sought appropriate legal advice and strongly disputes the claims made.
And SpiceJet founder and promoter Ajay Singh sells nearly 1% stake in SpiceJet for 52 crore rupees. Proceeds to be used to fund subscription of warrants.
IndusInd Bank depositors need not panic. RBI says that the lender is in satisfactory financial position. The stock is up almost 3% in trade today after a week of extreme volatility.
And Qualcomm Ventures joins KPIT Technologies Germany joint venture and will be the third shareholder in the JV. Well, on the other hand, it's a bad news for LTI Mindtree, as its largest client, Citigroup, plans to reduce reliance on IT contractors.
Gold prices continue to trade at a fresh high, trending at $2,985 per ounce. Recent gold rally a result of uncertainty around US tariffs.
And Yemen's Iran-backed Houthi rebels claim to have attacked an American aircraft carrier group twice within 24 hours. Calling it retaliation for deadly US strikes.
Tariff war continues to rage on. Trump says he has no plans to have exemption on steel and aluminum tariffs, reciprocal and sectoral tariffs to come on effect on April 2nd.
So let's quickly take a look at what markets are doing at this hour. We are below that 22,500 mark, but it's a day of some bit of positivity. 0.4% higher on Nifty 50 with 30 advances and 19 declines coming in there. Overall, if you see in today's session, we did hit a high of 22,577. So we have retraced from those days' highs, but the positivity does continue. In terms of Bank Nifty as well, it's clearly outperforming the benchmark indices in trade. So you have the Bank Nifty, which is up almost 0.7% in today's session. Let's quickly look at the sectoral heat map and see what's happening on that front and which are the sectors, because it's mainly pharma which has been leading with gains of 1.2% coming in there. So pharma, healthcare, Nifty Private Bank, Nifty Bank and metals, these are the few top gainers. Auto is seeing a decent day as well with gains of around 0.4% coming in there. What's losing? Oil and gas is one of the biggest losers with cuts of 0.6% coming in there. Nifty IT continues to be under pressure, 0.6% lower. FMCG is also seeing some bit of a correction after some bit of a run-up that happened last week, and media is trading under pressure with the PSU Bank Index seeing cuts of around 0.4%. In terms of individual stocks, Bajaj Finserv is the top gainer today as we speak, followed by SBI Life. Dr. Reddy's, Trent as well as Axis Bank, these are the ones which are gaining in trade. What's losing? BPCL under pressure, Britannia under pressure. You have Asian Paints, which is under pressure, and Wipro Hiromoto taking a beating to some extent as well. Let's look at the heat map in terms of what the contribution looks like in terms of the Nifty names, because that will give you some bit of an idea as well. So ICICI Bank, Axis Bank, Bajaj Twins, these are the ones which are holding up the Nifty 50. But where the pressure is coming in from, and it's not letting Nifty surpass that, the 22,500 mark, is RIL, which is contributing almost 20 to 21 points, ITC, TCS, as well as a SBI. So that's with regards to my benchmarks go. And similarly, Puneet, if you see in terms of broader markets, the street is awaiting that recovery in terms of broader markets. But the moment it sees an upside, there is profit booking that comes in, and sell on rise is the kind of strategy the investors are losing.
Well, definitely, and it's something that we've seen across the last couple of weeks and months as well, specifically selling at the high point, while the Nifty Midcap 150 is in the green currently. It's off the day's high of about 18,100 odd levels. The small cap 250 as well. continuing its onward green momentum, so as to say. It's down about 120 or 100 points down from the high, specifically, as Hirali mentioned. And some sectors like IT haven't done well, so we've seen some pressure on the mid-cap IT names as well. If you can just pull up the Nifty IT specifically as well, and some constituent of the Nifty IT as well, we'll see some pressure on stocks like LTIM, and we spoke about it, of Citi losing for LTIM specifically. Coforge is also down by about 0.8%. Persistent also some pressure there. But also let's look at Varun Beverages as well. The company released its 2024 annual report, and a note by MK today on the same. They're maintaining their positive outlook on the stock. Target price of about 800 rupees per share, and a significant upside from the current levels. They did mention that capacity in this particular summer season is up 365% higher than what they did in calendar year 22. So definitely a big day. And finally, just look at the Nifty 500 winners and losers there. Let's see which are some of the key stocks that is helping the benchmark. LG Equipment, Hitachi Energy, KC International. Those three ones are the biggest gainers. We're seeing some positive movement on capital goods over the last couple of weeks, and that's showing off in the price as well. IEX as well, seeing a lot of correction. Another exchange, MCX, also seeing some positive outlook. While on the loser side, we've seen some consistent pressure on First Source Solutions. The other ones, of course, are the mid-cap IT names, Zensar as well as Happiest Minds. Let's just pull up First Source Solutions in the last couple of months, as well as a 3-month chart for First Source. That stock has continued its downward trajectory since some time, and that's reflective in the price target as well, being the biggest loser of the BSE 500 currently as well. If you can pull up the chart for First Source Solutions, down about 18% in the last month, so definitely a negative there. But on that note, let me just welcome in Avinash Gorakshankar, the Director Research at Profit Mart Securities. Avinash, before I come to you, let me get in my colleague Harsh first, specifically on KPIT's tech, a stock that has seen, and is in the news flow currently, along with the other IT pact as well. Harsh, what are you picking up on KPIT?
Now, KPIT Tech in focus because it's JV, Corex GmbH, which is a leading supplier of automotive middleware stack and based out of Germany. It's a JV currently between KPIT Tech and ZF AG, which is again a German company. It does software not for the front end, not for the back end, but for middleware stack, which is what the company essentially does. Now, Qualcomm Ventures LLC will be the third shareholder in Corex GmbH. This is the big one because Qualcomm backing this company gives a bit of vindication to what KPIT is doing. They have also the option to increase shareholding up to 10 million US dollars, 10 million euros within this particular company. So you'll likely see that this is positive for the company, for KPIT Tech, because it's a bit of a validation that Qualcomm has come in. And the company itself, leading provider of middleware solutions for software-defined vehicles, likely to be the future and therefore positive for KPIT Tech.
Well, thanks for that, Harsh. But stay with us because LTIMindtree is also the biggest, because its biggest client, Citigroup, has cut IT contractors by roughly 20%. What are you picking up?
Now, LTIMindtree, of course, also in focus. Citigroup plans to slash IT contractors and hire staff to improve controls. This is big because LTIMindtree is among Citi is one of the top 5 clients for LTIMindtree, likely to lose business with regard to this particular measure that they've announced. This is as per news reports suggesting that IT contractors there will be reduced dependence on IT contractors, and staff will actually be hired to improve controls within this for Citigroup, and therefore negative for LTIMindtree.
Well, thanks for that, Harsh. Avinash, let me get you in on this specifically, and very good afternoon, and thanks so much for joining in. IT, we've spoken about it in the past. The Nifty IT has not been relenting any kind of positive outlook on the sector as well as the index. Specifically, do you have any view on LTIM as well as KPIT Tech and anything on the IT space as a whole?
Yeah, good afternoon, Puneet. See, I think frankly, the IT sector has been going through a significant amount of headwind largely because, currently most of the companies which have declared December quarter numbers, I think most analysts are waiting for the March end numbers and then expecting some strong commentary from the management in terms of current order wins. And I think the way, the US markets have been trailing largely because of the tariff issue. I think if manufacturing gets, affected, Puneet, obviously it's going to have an impact on their IT requirements. And that is something which is putting fear that US economy may get into some sort of recession because the tariff issue is not going to be curtailed only to the US. It obviously will mean that US will also have to pay a significant amount of price for that. So I think, till some clarity comes on that, I think till the first half of FY26, I think you're going to see growth getting hampered. Most of the manufacturing sectors, if they do get let down, then I think it's going to be a little lower in terms of IT spending by these manufacturing companies. So, that is the clear concern in the market. Secondly, as far as KPIT Tech is concerned, I think there's good news that Qualcomm has actually decided to be a third partner. As Harsh said, it's a matter of validation, which actually reinforces the investors' belief that there's a lot of value in this business. My sense is that over the longer term, this value will get reflected in the earnings and in the overall business which can be generated from this unit. So I think net it's positive, but maybe in the near term it may not have any immediate impact on earnings. It could only get reflected over the next, say, 12 to 15 months. And as far as LTI is concerned, I think clearly, this is a big setback for the company because if Citi decides to move out, it's one of their top 5 clients. And I think the market should obviously consider that if Citi does it, maybe the other customers also could use the same reason to exit. And I think if that happens, then I think it could lead to a further, derating in the stock. So I think as of now, I think we have a negative view on LTI. Evaluations are not, cheap. They're fairly fair to expensive. So I think, you could see a further downside on the stock. But some more commentary from the management on this issue needs to be clarified to understand the impact of this development.
That's an interesting one, Avinash. So there could be some further downside pressure coming in terms of where LTI Mindtree goes. In fact, the IT companies' spending environment remains mixed as 2025 is expected to be another flattish year. We actually spoke to Moshe Khatri, MD Equity Research, IT Services and Payments at Wedbush Securities to understand his outlook. Let's quickly listen into that conversation as well.
I think we're in a very tricky kind of situation now just because we seem to have another full start for this year. Remember, we've had 2 consecutive years with relatively kind of, flattish growth for most vendors in the sector. We started the year with a euphoria, believing that we're going to have some sort of a go back to normal spending environment. So far, it seems that, the general atmosphere, given the tariff situation, is more cautious than anything else. And that's why demand seems patchy. It seems that budgets have been approved, maybe with some sort of a delay, which means that the year is back and loaded, especially for discretionary spending. And you do have some companies that are doing better than others, probably companies that are focused more on the cost takeout part of the business, some of the tier ones that are based in India. Companies that go to market a bit differently, performance-based contracting, look at Huron, they're going to grow 10% this year. Companies that have a Latin America exposure on the digital side, Globant, 10% growth. So it's really mixed across the board. And I think that's why you've seen a pretty significant correction in the multiples for the sector year to date.
Okay, so let me get more specific, Moshe, in terms of what is happening in the United States right now, blowing hot, blowing cold on tariffs, uncertainty about how that's going to translate for the US economy. Is this a headwind right now for Indian IT companies?
Absolutely. Uncertainty is not your friend, especially if you have to make decisions related to discretionary spending, if you had to make spending decisions related to large contracts. All this historically has been impacted in times of uncertainty. I think that's what the market tells you. The market doesn't like to see this uncertainty, and therefore you've seen this massive correction in PE multiples year to date for the sector. And it is ironic because the budgets are here, But, at this point, there's a lot of caution in terms of spending it.
Right. So that's with regards to where the outlook for the IT sector goes. But moving from the IT pack, let's look at the auto segment. If you see in terms of the index as well and the components, what they are doing, let's just quickly pull up the heat map of Nifty Auto because it's a very interesting trade that you're looking at. Auto index, though, is at the day's lowest levels. But there you go. Names like a Bharat Forge, M&M, Balkrishna, TVS, Aisha are the ones which are gaining. Hero Motors seeing the largest cuts, Bajaj Auto trading under pressure, Maruti and Apollo as well. Now, two companies that we're talking about today is Ola Electric as well as a Maruti Suzuki. Puneet, it's very interesting to see, what's happening with the Ola Electric. Last couple of weeks, or probably I would say months, it's an absolute negative news that's piling on with the Ola Electric. What are you picking up that you've been tracking this company pretty closely? Because, it's just not getting over.
Yep, definitely. And it started with February 19, where they first had a press release that said that the registration process will be impacted in this particular month, and we saw that impact in terms of sales as well. So for Ola Electric, unlike other automakers, the company does not report a number on the first of every month. It is the Vahan data, which is the actual sales, like people and you and me buy. We consider Ola Electric in terms of that. Now, in this particular month of February, the company reported sales of roughly about 8,390 units, and that was a fall of about almost 200% compared to the previous month, where it did 25,000 units. Despite that, the company went on to mention that they've sold 25,000 but only registered the 8,390 units, and that was the first news. Apart from that, going into 4th of March or 2025, the company mentioned that they received a letter from IFSCI which specifically mentioned non-achievement of PLI targets for the battery venture, which is the Ola cell technology. So that's again another key negative. The company has clarified that they will be starting their battery ventures and using those batteries in the EV scooters from the first quarter of FY26, which is basically April of 2025. But that will still, impact the PLI incentives, if so, in the next fiscal year. The other aspect is vehicle registration entity Rosemerta, which was the external agency which would register the vehicles after they've been sold. That has, filed a complaint with NCLT, specifically mentioning non-payment as well as defaults for their share of payments of about 17 to 18 odd crores, and that's the story my colleague Tushar had filed. Now, specifically, that is the key negative. Apart from that, the only positive news in the last week has been that the company is guided for EBITDA break-even in Q1 of FY26, essentially going from negative 28% EBITDA margins to almost zero or just positive 1%. So, while it has had a share of negative news flow and the stock is also down about 6% today, this number of EBITDA break-even will be something to watch out for. But earlier they had mentioned, Hiral, that they need to achieve 50,000 units to get that kind of number. Currently, they're selling about 25,000 units. So it'll be very interesting, and it should be something that if the street is believing in that number or no.
Yeah, and with this, the stock price is below 50 rupees, right? Yeah. That's something which is concerning to the investors as well. Before we go across to Avinash, the other stock that we mentioned was with regards to Maruti. Puneet, of course, you can come in on that one as well. But clearly, this is going to be the third time that Maruti is looking at a price hike, and this will be from April 2025. I think in the month of January, that's on the 1st of January, they hiked prices up to 4%. On the 1st of Feb, they looked at around a price hike of around 32,500 rupees. And now another 4% price hike that would be coming in by the 1st of April. So clearly, across the model range offered by Nexa and Arena outlets, that's where that 4% price hike would be coming in. What they are saying is that this is done mainly to offset the higher input costs as well as the operational expenses. And the sales growth has remained slightly muted this time around, and that's the reason why you're not seeing that operational efficiency kick in and the company has to take a price hike. Now, clearly, their agenda is to go ahead and reclaim that 50% market share in India by end of this decade. That's what they are indicating. But with the kind of price hikes, Tushar, that they are taking in, do you think that their ambition of regaining that 50% market share is going to come true with the other companies coming up with a lot of other models, not only in the petrol diesel space, but even if you see in terms of the EV space?
Yeah, definitely. And that's a big price hike because they announced a 4% price hike, as you said, in January. Then individual models such as Celario got a price hike of almost about 32,500, the highest. So that was a key negative, and another 4% price hike. So definitely at a time where demand has not portrayed into sales, specifically for Maruti Suzuki as well as the industry. So apart from Mahindra, everyone's affected. I think this one will be very talked about in this particular quarter as well as the earnings as well.
So clearly, if you see a price hike versus recovery in sales, it's a pretty chicken and egg situation because they want to make sure they regain that 50% market share, but with the kind of price hikes that they're taking, don't see that happening. In fact, let's ask Avinash this. Avinash, two stocks, Ola Electric as well as Maruti. What would you have to say? Because Ola has been in the ditches. The stock is below 50%. What do you have to make out of it? And Maruti, who is aspiring to gain that 50% market share plus number and the quantum of price hikes that they've already taken in 2025.
No, I think, Hiral, as far as Ola Electric is concerned, I think, the narrative has been sounded off by the management. But I think, in case of Ola Electric, the markets would clearly wait for some sort of visibility on the EBITDA positive, kind of front. They've given a guidance that EBITDA could turn positive by FY26 first quarter. And I think, markets would obviously look at the volume of units they sell every month. Currently, they're still behind that target. So I would not be surprised that there is not going to be any near-term trigger for the stocks. The markets are already seeing a lot of lull and softness in the two-wheeler market. And I think it's going to be a challenge for them. It's not going to be an easy job. My sense is that it's better to wait for a couple of months because now we are in the month of March. Probably in the next quarter is what they are targeting EBITDA positive numbers. So it's better to wait and watch because, the stock is below the IPO price of 60 rupees. And any near-term trigger would obviously depend on how strong the data comes from the company in terms of volume sold, in terms of the operational EBITDA. Because I think that is one number which has led to a lot of discomfort for the company. And as far as Maruti is concerned, my sense is that, they have decided to go in for another price increase from April, which seems to be quite surprising considering the fact that passenger car volumes have turned soft. Demand is not growing as per expectation. So I think, overall, this price hike, I don't know how customers are going to take it, but this is definitely a very difficult time for the industry, for Maruti. And that is why this price hike comes at a time when customers are not willing to pay a premium. So I think we'll have to wait and watch and see how the numbers pan out for Jan to March. And then obviously what's the kind of commentary from the management. But price increase at this point of time could definitely be a retrograde step. It could actually impact their volumes negatively. That is what I think.
Got the view, Avinash. And Avinash, I just wanted to ask you about Tata Motors as well, because, we've seen an upgrade come in from HSBC. They've upgraded to a buy from a hold rating earlier, but they've cut their target price from 930 to roughly about 840 now. And the key reasons for an upgrade is, of course, undemanding valuations. So any kind of outlook that you have on Tata Motors as well? Do you see that this is a good time to buy after the correction of almost about 45% from those July 2024 odd levels?
Yeah, I think, Tata Motors definitely deserves to be, put in your portfolio if you're looking at the longer term, especially the next 12 to 18 months. The stock has corrected significantly, and I think, it's available at fairly good valuations. But I think any recovery would obviously depend on how the company puts out its performance as far as the CV and the passenger car business goes. The JLR business has been doing well. But I think the commercial vehicle segment has hit a roadblock. The volume growth has been quite, tepid. Unless and until we see a lot of infrastructure-related buying coming in, especially after the first and the second quarter, it may remain in a very close range till the first half of FY26. But at these levels, the downside seems to be protected. I would not be surprised that around 650, 645 would be a good level to accumulate, considering the fact that, I think clearly once the GDP growth improves, the economy, gets into proper, traction, you're going to see the commercial vehicle sector bouncing back. So I think, yes, it's a good buy, but over the medium to longer term.
That's an interesting point coming in. 650 levels, 640 levels could be a good buying point with regards to where Tata Motors is concerned. Good a good stock to accumulate, I beg your pardon, from a medium to long-term perspective. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have viloam. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Vixit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have viloam. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Vixit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have viloam. You can't just keep doing up and up in the breathing also. You have to come down. So the correction
Welcome back. You're watching Profit Buzzers on NDTV Profit. One stock that has been the talk of the town is an IndusInd Bank. But let's first understand what has transpired over the week, because overall, if you see a sharp correction that has happened on the counter, let's quickly pull up the stock and a 5-day or a 1-month chart to understand the kind of pressure that has built in. Now, clearly, you know, the way the process has started in terms of the downtake. There you go, 34 to 35% in the last 1 month is the kind of correction that has come in. But let us also get in our banking editor, that's Vishwanath Nair, to give us a recap of all the action that transpired around IndusInd Bank over the weekend as well, so we can put everything into perspective. Vishy, over to you.
What started off with a sort of an innocuous announcement by the Reserve Bank of India to give a shorter extension to Sumant Katpalia, the MD and CEO of IndusInd Bank, then sort of snowballed, because just days after that, the bank came out with a clarification that about 1,600 odd crore worth of discrepancies were found in the bank's trading books, because of which the bank had to take this entire hit during the Q4 results. Now, since then, of course, a lot has happened. The stock has lost about 30% value market cap in just that 1 week. What happened on Friday, however, was that the exchanges put in the IndusInd Bank stock on additional surveillance measures. This is the stage 1 of the additional surveillance measures that are applicable on IndusInd Bank. So what does it mean? Essentially, there's a margin rate which is about 100% that has been applied on all trades. The daily price band is about 5% for IndusInd Bank, and the shares are subjected to heightened scrutiny by the exchanges. Now, it's interesting to note that all of this followed a bunch of disclosures by the bank, and then more questions that were being raised, and of course NDTV Profit has been raising those questions. Over the weekend, the Reserve Bank of India came out with a clarification where RBI said that the depositors of the bank do not need to actually worry, irrespective of any speculative reports that might be coming out about the safety of the deposits. Depositors need to be sure that the bank is on firm footing and that it will continue to be so far. They have not found any issues for depositors to worry about. What the RBI has also pointed out that the bank's financial health remains strong. Interestingly, one line that was that caught my attention was the Reserve Bank of India telling the depositors that the RBI has directed the bank's management and its board to implement any remedial actions and make adequate disclosures to the stakeholders in Q4, that is a current quarter. Now, there's about 15 days left in this month, and that's when the bank has to implement any kind of remedial measures that might be. The bank has, of course, appointed an external auditor, and what our sources are telling us is that by the end of this week, the bank should receive the report from this external auditor, and depending on whatever comes out, the bank will have a plan of action in place, which it will then implement. But interesting to note that the bank has so far been claiming that it did all these disclosures on its own accord, but the RBI is saying that they had directed the management and the board to make these disclosures.
Thanks, Vishy, for getting us the details. Avinash, what do you make of an IndusInd Bank from here on? Now, with everything that has transpired so far, with the price correction that has already happened, yes, there could be pain in the near term. But from a longer term perspective, do you think this does become a good buy, or would you say it's an avoid still?
So I think, Hiral, my sense is that, markets or most of the analysts would look at fourth quarter numbers, because I think the management has gone on record saying that the fourth quarter would be a profitable quarter. And I think this aberration which has happened is just a one-off event. My sense is that as far as the downside to the stock is concerned, I think there's very little downside left. I would not be surprised that at these levels, the stock has already bottomed out. Most of the damage has already been done. But to expect any significant amount of re-rating, one would have to be invested here for the next 12 to 15 months. It is not a case like Yes Bank, where there was a fraud. But in case of IndusInd Bank, there was a process failure. So my sense is that somebody who wants to actually do a contra call can actually look at, accumulating a smaller quantity here and wait for better clarity and, the management commentary post the Q4 numbers. We are positive on the stock and constructive also on the stock, but over the longer term, our sense is that in the near term, the stock is unlikely to get re-rated very soon, because unless data comes out, unless stronger earnings numbers and data points come out, the market is not going to be confident. It could take a process of at least 3 to 6 months going forward.
Got the view, Avinash, and definitely Q4 as well as Q1 very key in terms of microfinance for IndusInd Bank. And viewers, do take note of the flash on the bottom of the screen as well. Coming up very shortly, a very exclusive conversation with the US intelligence chief. But before that, let's bring in my colleague Anushi to talk about some various companies which have come out with order wins. Anushi.
Right, thanks for that, Puneet. So a clutch of order wins that we are looking at. Firstly, I'll start off with GR Infra Projects. Now, this company has been selected as the bidder for an order worth about 4,263 crore. It's a significant order win that GR Infra Projects is seeing. And this order they've received from National Highways Authorities of India to be executed in the next 900 days or so. This is for the construction of Agra Gwalior Greenfield Road, which is there. So GR Infra Projects in focus on the back of that. Next, another in the infra space, what we are looking at is Seagull India. Now, this has received 923 crore worth of an order from NHAI as well, and this is to develop a 6-lane greenfield southern Ludhiana bypass road, which is there. What we've seen, again, I just want to point it out that in NHAI there has been a pickup in terms of ordering activity for roads from December onwards. What is the trend that we've seen after a muted sort of a tepid order activity seen in the earlier first half of the year. Now next, if you move to Welspun Solutions, Specialty Solutions, they've secured a purchase order contract from BHEL, and this is for contract for supply of stainless steel seamless boiler tubes for a consideration of about 232 crore, and the project is to be executed in the next 13 months itself. Just on a quick note that the company has emerged as a L1 bidder for supply of 4,050 tons of stainless steels as well on March 4th is the update that we are seeing. So that is why Welspun Specialty is also in focus, and KC International has won about a 1,267 crore worth of orders, and this is in the transmission and distribution business that we are looking at. So and the order is from America as well. Cable business also received orders for various cables and conductors in India and overseas as well. The last one in focus is HCC, and this is after it has entered a partnership with Tata Projects Limited, winning an order contract for about 2,191 crore, and this is for construction of a 8.65 kilometer long corridor. The contract includes underground tunnel stations for Madhya Pradesh Metro Rail Corp as well. So HCC will have about 55% stake in the JV, which will amount to a total consideration of about 1,205 crore. So these are the couple of stocks that we are seeing buzzing on the back of various order wins that we just discussed.
Well, Anushi, thanks for all those stocks as well as covering the key order wins. Avinash, any of these counters, GR Infra as well as Seagull specifically has seen a correction of about 36% the past year. GR Infra also not doing very well, as well as KC International after making their bottom at around 700 odd. It's seen some rebound. Any kind of view that you have on these stocks?
No, I think my sense is GR Infra and KC International, Puneet, look pretty interesting. In fact, KC has been one of our investment grade kind of positional calls. We are quite positive on the company because already the company has a very healthy order book, which is going to give them visibility for the next 2 years. And plus, action in the power transmission phase has been gathering momentum because they are ancillary to the power generation sector. And I think this trend is going to continue in the next couple of quarters also. So I think KC International could be an attractive kind of opportunity for somebody who wants to take a medium to long term kind of holding. But definitely levels of 850, 900 look very much possible if one were to remain invested here for the next 12 to 18 months.
So that's with regards to a fundamental view coming in there. Gaurav, coming to you, any charts looking interesting between a GR Infra Project, Seagull India, Welspun Specialty, as well as a KC International? Which would your top pick be out of these four?
From my side also, I think that KC International is the best placed counter here, and currently it is quoting somewhere around 710-12 levels. So if we can maintain a stop at around 650, it looks good for targets close to 850 to 900, which 900 levels close to coincide with the with its 200 and 100 period exponential moving average, and that would certainly become a medium term resistance mark for this particular stock.
Right, so that's with regards to where any of these companies go with regards to order win. But after that, you have Adani Green as well as Adani Power. These two stocks that are in focus, as brokerage firm Cantor has initiated coverage on both these stocks. Mika joins us to tell us more. In fact, Green is trading with gains of almost 2.5–3%. And if you talk about Adani Power as well, which is pretty much flat, it did hit a high in intraday session. But Mika, over to you.
I'll start off with Adani Power. Cantor has initiated coverage with an overweight rating. Target price is set at 595 rupees, which implies a 16% upside to the last closing. Now, it's stating that the company benefits and will continue to benefit from thermal power, which is expected to remain the mainstay in India's grid. And the company does account for 8% of India's total coal-generated power. The company also has more thermal power versus capacities from Tata Power and Reliance Power, and only trails one state-owned company. And it's saying that the it's underappreciated beneficiary of the Adani Group's large presence. This includes your coal mines in Australia as well as the port coverage that the group has, which gives Adani Power a better supply chain visibility when you compare it to the peers. Lastly, Cantor also stated that Adani Power has a good balance sheet flexibility, with the company having the lowest leverage it has seen in years, and even the valuations remain quite reasonable, and the brokerage does like the company's risk-reward levels currently. Then moving on to Adani Green, the coverage has been initiated with an overweight rating as well. Target price set at 1,222 rupees, which implies a 40% upside to the previous close. What Cantor likes about Adani Green is that the company is still in its early phases in terms of its growth inflection points. It also expects the operational capacity to grow 4 times in the next 5 years, and this capacity growth is expected to drive both revenue as well as EBITDA growth. They do expect revenues and EBITDA to grow at a 21.3% and 25.9% compounded annual growth rate over FY25 to FY30. They also expect Adani Green's EBITDA to hit $3.3 billion by FY30, and the Khandwa site to account for 6.6% of India's all energy generation, which is a key positive. And the total portfolio of the company could also account for around 10% of all energy generation in India. Lastly, they do expect Adani Green's net debt to EBITDA multiple to gradually decline to 6 times and potentially even more than that in the next 5 years. And in terms of valuation, the stock does trade at valuations of 15.6 times its FY26 EV to EBITDA ratio, which is at a slight discount to some of the other peers that it has.
Well, thanks for that, Meika, for bringing us those comprehensive views of Cantor on both these stocks. Gaurav, welcome to the show. Let me just ask you on both of these counters, anything on the chart suggesting, because MK also has over a 1,500 rupee target price on Adani Green. What are the charts suggesting?
Yes, Adani Green is looking good. Some bottom formation is pretty much visible out there. It is currently floating close to 900 odd levels. And what I can see is that the stock is all set to head northwards and test 1,020 and even 1,100 levels in the upcoming weeks. So yes, this particular stock is looking good. So short-term traders can consider buying the stock, keeping a stop below somewhat around 820 levels. But as far as Adani Power is concerned, still it is not out of the woods, and I see a lot of resistances placed nearby that comes out to be its 100 EMA, which is somewhat around 520 odd zone, then 550, 555 zone. Again, there is 200 EMA resistance mark. So not a smooth sailing for Adani Power as such, but yes, Adani Greens looks pretty much good on charts.
Got the view, Gaurav. Another sector as well as stocks that are in focus are from the pharma space. After brokerage from Bank of America believes that 25% tariffs on Indian generic pharmaceuticals is very unlikely. Zydus as well as Lupin are in focus for US FDA approvals. My colleague Varsha joins in with a lowdown of both these aspects.
Thank you for that. Let me start with Bank of America on India pharmaceutical. Let's see what that report has to say. So the report analyzed the impact of tariff if imposed by Trump on Indian generic pharmaceutical companies. What they say that a 25% tariff is considered unlikely due to US reliance on imported generics and the lower profit margins of the manufacturers, but a 10% tariff is possible, but this effect would be mitigated by passing the increased cost to the distributors or payers and shifting the profitability of US generic businesses to US subsidiaries. If you see the tariff effects on generic pricing, that could lead to higher generic drug prices and potential shortages, which will actually create a good pricing environment or favorable pricing environment when it comes to Indian pharmaceutical companies. Given with the market volatility, the report recommends investing in defensive healthcare sectors such as Apollo Hospitals, which they've highlighted as a good buy due to its stable earnings. Divi's Labs is other company which they are bullish on, and due to limited exposure to tariffs and its growth potential. potential, and Dr. Reddy's is also recommended in that report due to its ex-US growth potential. Moving on, Zydus and Lupin are actually in focus. When it comes to Zydus Life Sciences, they received US FDA approval for one of the products which treats irritable bowel syndrome, which has an annual sales of around $253 million in US, and Lupin has also received approval for one of their tablets which treats autoimmune diseases, and the product which they've got approval has a US sales of around $306 million, and this will be produced in their Lupin's Goa facility.
Thank you, Vaisha, for the details. In fact, Avinash, coming to you, how are you looking at the pharma pack overall, the top gaining sector in today's session? You're talking about BOFA-ML, which is saying the 25% tariffs on Indian generic pharmaceuticals is very unlikely, taking into consideration the amount of exports that happen from here on. And you have Zydus and Lupin, which are on approvals of a particular drug. What would you have to say?
No, Hiral, I think, the 25% tariff, according to us also, is very much unlikely, considering the fact that a large part of exports go to the US and some of them are life-saving drugs. My sense is that, we will have to probably wait for the April to June quarter to get some clarity as to how the tariffs issue would begin, because April 2 is the deadline when the reciprocal tariffs actually start. So my sense is that it's probably going to be a wait and watch, from our side till then. But I think as far as Lupin and Zydus are concerned, I think these are both companies which have got very strong molecule kind of pipelines. And obviously the US market is a very large opportunity. So that is definitely going to...
But viewers, and Avinash, apologies for cutting you in, because my colleague is in conversation with Tulsi Gabbard, the Director of National Intelligence of the US, and its first ever televised interview to an Indian TV channel. Let's cut across quickly to that conversation.
To us. In terms of the strategic relationship and the intelligence arrangements between India and the United States, to what extent is it premised on perhaps an expansionist or an expanding China and the Asia-Pacific region?
The ties between our two countries, the United States and India, go very, very far back. And so what we're continuing to see is a strengthening of that partnership and recognizing that the mutual interests of both of our countries are centered around peace, prosperity, freedom, and security. So now as we see a new administration coming in with President Trump's leadership in the United States, of course, Prime Minister Modi's long-standing leadership here in India, we have two leaders of our two great countries who are very good friends and who are very focused on how we can strengthen those shared objectives and those shared interests.
So in a sense, it's taking forward what we already have in terms of the strategic partnership, and that's one of your primary goals, right?
It is.
And how were your meetings to that end?
It is. I've been having great meetings, and of course this began with Prime Minister Modi's visit to President Trump in Washington, D.C., very shortly after he was inaugurated back into office for a second term, where they really set the tone and set the vision for where a stronger U.S.-India partnership and friendship can lead to. And so my visit here is really predicated on the work that has already been done. And I've been having great conversations with my counterparts here in the Indian government. I just met with the Minister of Defense a few minutes ago, and looking forward to visiting with Prime Minister Modi here later today.
And you met the Prime Minister in Washington as well some time back. How did that go? I mean,
it was,
we saw the pictures.
It was great. I had the opportunity to meet him several years ago. It was good to see him again. And it was actually very perfectly timed, where it was maybe 1 or 2 hours after I was officially sworn into this position as Director of National Intelligence that he arrived in Washington, D.C. and had the opportunity to welcome him back to the United States.
Yeah. One of your primary concerns and one of your primary responsibilities is to deal with the threat of terror. And at the moment, we see a great deal of that out of Yemen. We see attacks on shipping taking place, and we see the United States being very much on the offensive. Is that a prelude for something larger, perhaps even a ground offensive going forward?
When you look at President Trump's leadership going back through his first term as president, he has been and remains very committed to combating and defeating the threat of Islamist terrorism that not only affects the United States, the American people, our own safety and security, but it is affecting so many people in different parts of the world. We can see different terrorist groups, the Houthis in Yemen being one of them, that President Trump has redesignated after President Biden took them off of the terrorist list, redesignated them appropriately as a terrorist organization, and taking action where the previous administration failed to.
Right.
The Houthis have been disrupting maritime trade and passage for a very long time, and no serious effort has been taken to stop that disruption. Our country and other countries should not be in a position to have to make a decision to reroute commerce going through that area simply because of the Houthi threat that exists. So President Trump has taken decisive action for our own safety, security, and prosperity. And I know we'll look to other affected countries, as there are many who are impacted by this, to similarly take action.
The other big international talking point is obviously the situation between Russia and Ukraine, and we're all optimistic, and I've covered the war 3 times, on seeing peace in the area. Tens of thousands of people, hundreds of thousands of people on both sides have lost their lives. Be that as it may, if President Putin doesn't come on the table with the peace agreement which has been proposed by the United States, can Washington indefinitely keep arming Ukraine and, in a sense, allowing them to continue their fight?
President Trump is seeing this ongoing conflict with very clear eyes. And he has made his position and his priority very clear, which is to bring about an end to this war. So he is focused on peace. The negotiations have just begun. He's looking forward to success in those negotiations, not for himself, but for the cause of peace and to stop the killing of innocent and taking of innocent lives there. So he has the best negotiators working with both the Ukrainians and with Russia and with Putin. And we look forward to seeing the continued progress that we've already seen over a very short period of time. I think it's important to point out that under the previous administration, during which this war began, there was no effort. There was no effort at all towards peace. There was no effort to have direct dialogue with Putin and with Russia to try to bring about an end to this war. So already, in a very short period of time, President Trump has made much more progress towards peace than any effort that has occurred by anyone previously. So we're very encouraged by this progress, and President Trump remains committed to the objective of peace.
How much of what you're talking about now is premised on a successful conversation between President Trump and President Putin? I believe that might take place tomorrow or day after.
Well, as you know, with any of these kinds of negotiations, there's a lot of work that goes between people representing both countries, or all of the countries involved in this situation, and at the appropriate time, I'm sure that President Trump will have a very productive conversation with Putin, once again, rooted in his unwavering commitment to peace.
Yeah. Closer to India, Bangladesh, the subcontinent, we've seen a lot of political changes over there, a lot of violence over there, and several reports of attacks on minorities. Is the United States concerned about the situation there and the need for stability at all levels, not just political stability?
Yeah, of course. The long time unfortunate persecution and killing and abuse of religious minorities, Hindus, Buddhists, Christians, Catholics, and others, has been a major area of concern for the United States government and, of course, President Trump and his administration. The talks are just beginning between President Trump's new cabinet coming in and the government of Bangladesh, but this continues to remain a central focus area of concern, once again, with the threat of Islamist terrorists and their overall effort, the global effort of all of these different groups that are really rooted in their same ideology, their same objective, which is to rule and govern with an Islamist caliphate. This obviously affects people of any other religion other than one that they find acceptable, and they choose to carry this out through very violent and terroristic means. President Trump remains committed once again to identifying this ideology that drives Islamist terrorism, helping to defeat that ideology and defeat their ability to exact that terror on people, the American people and others.
Right. Well, one final question to you. I know you've got a very busy schedule. You are a practicing and a devout Hindu.
Yes.
And you've just missed Holi in India.
Unfortunately.
What does Holi mean to you?
You know, it is a wonderful and colorful celebration of life and really the connection that we all share as people. And this is something from my home in Hawaii where we greet each other with aloha. Here in India, we greet each other with namaste, but really the deeper spiritual meaning of both of these words is the same in recognizing the eternal and divine spirit that exists within every one of us and that spiritual connection that we have. So for me, at a personal level, this is very, very meaningful, but it's also very practical once again, as our two countries and others in the world should remain focused on our pursuit of peace.
It's wonderful speaking to you. Thank you very much
nice
for
to
speaking
see
to
you.
you. Well, there you have it, Tulsi Gaba, the Director of National Intelligence over here in India. That's broader strategic relationship between India and the US, so very important. But the world is in a difficult situation now, whether it's Yemen, whether it is the situation in West Asia, and certainly Russia, Ukraine, and closer to home in Bangladesh as well. So her thoughts perhaps reflect where the US administration is looking at all of this, and perhaps there is peace in the horizon.
So that was Director of National Intelligence US, Tulsi Gabbard, in conversation with my colleague Vishnu Som, clearly talking about what is needed and the way they have been working overtime for peace from here on. But completely out of time. With that, it's a wrap on this edition of Profit Buzzers on NDTV Profit. Lots more lined up on the other side. Please stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Vixit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Vixit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view,
hello and welcome. You're watching KYC, which is Know Your Company. I'm Harsh Saita, and we're going to focus in on Advait Energy today. It's an interesting company from a perspective that the market cap is around 1100 crores, so quite small in terms of size. Large opportunity available. It's engaged in providing products and solutions for power transmission and renewable energy. Currently more focused on power transmission, less focus on renewable energy, but they're growing renewable energy on a fairly healthy clip in terms of the growth rate. It's established in 2010. Transition earlier was doing consulting and trading, now has transitioned to manufacturing since 2014, and lots of power components is what it manufactures. The intent of the management when it shifted focus in 2014 was to take care of import substitution, to basically try and plug that gap, that this is of course basis management con calls. But power transmission, substations and telecommunications infra is what the company is currently completely focused on. Renewable energy is the other focus area which has come into focus since 2023. 90% of the total revenue comes from transmission and related products. Let's pull up the business segments FY24 versus FY25, and what you will see, optical ground wire was 72% of the top line in FY24. FY25 9 months, that has shrunk to 44%. Let's focus in on what are those aspects therefore that have gained ground. You've seen power discom, especially with regard to EPC, which has gone up from 4% earlier to 23%. Which is part of the yellow part of the bar chart, the pie chart that you see in front of you. And the other piece is with regard to stringing tools. Stringing tools are basically used for both construction as well as servicing of power lines which go through, so largely into transmission again. And even within stringing tools, the market share of this company is very high. Nearly 30% market share is what it commands within this. So it's a great play if you're looking at power as a segment, and this could be one of those companies that you'll want to look out for because it has such a high focus on power. They're expecting renewable energy to surpass the transmission segment revenue in the future. So you'll largely see the growth coming in from renewable energy in a large fashion going forward. But let's try and break this one down. So this is about all that the company is doing. It's into EPC, just to try and break it up. It's into EPC, it's into transmission products and into renewable energy. So those are the three larger focus areas. But let's talk about what are the metrics that we look for today with regard to this particular company. One, we'll do an income statement check very quickly, look at how fast the growth of the company is, balance sheet, cash flows, all the regular metrics, and thereafter the return ratios. But this is a unique kind of a business, and I did break it down. And therefore, we'll have shareholding and street cred, which is fine. But we'll talk about guidance, because pure comparison, we won't have a absolute like for like in this particular segment. And because renewable energy is such a small component, not fair to compare it with other renewable energy players. And we'll also look at what the street coverage looks like. So those are the 8 metrics that we'll look at. And to try and break these down, we have with us Anushi Vakharia, who tracks the sector closely. Anushi, you've pulled out some of the numbers here. Talk to us about what comes out of the income statement in your view.
Right. So firstly, when we are looking at the revenue statement, the income statement and revenue, we are seeing a stronger footing. We've seen about growth of 101% in FY24. Even in last year also, we are seeing 43% of growth coming for the business. In fact, if you look the 3-year CAGR for income statement, we are seeing that the revenue growth has been in the range of 53%, while PAT we've seen in the range of 64% of a CAGR growth that we are looking in terms of where the PAT is concerned. In fact, if we talk about the margins also, now the company's margins stood in the range of 15% in FY22, which has moved upwards in the direction of 17% to 18% of range is what we are seeing. The company did mention that in the near 1 year or so, they expect to continue on a similar margin trajectory, which it has been maintaining. But after that, they might see some dip in terms of where the margins are, and overall margins would be in the range of 13 to 18%. So that's the kind of guidance that they've given in terms of how the margins are going to be, because non-renewable energy is going to be one of the biggest segments going forward, which we'll discuss about later. So with the segment being there now, it would be interesting to see the margin picture and also on the kind of contribution that the business has. Quickly, just talking about the 9-month picture, the revenue has seen about a 37% growth, while margins were down about 137 basis points to 15.3% as compared to 16.7%, and net profit we saw about a 26% of growth. So this is overall income statement check, Harsh, that we are looking at.
Yeah, clearly a thumbs up, because the kind of growth that it's clocked, 3-year revenue CAGR of 53%, 3-year PAT CAGR of 64%.
Absolutely.
And going into renewables, so positive on that count. Difficult to point or poke holes into these kind of numbers. But let's look at the balance sheet now. The fixed asset base has grown quite sharply, and they've invested well. From 14 crore in FY22, the fixed asset base currently stands at 35 plus crore. You're looking at how this is being funded. Equity, you're seeing nearly 11 crore of equity on the balance sheet, some bit of equity raise also. Reserves have also shot up dramatically, of course, on the back of decentish profitability, but also because other equity within the balance sheet has gone up. Debt is the other component which has gone up quite sharply. So it's gone up from nearly 6 crore to 43 crore. So the debt number really going up in a sharp fashion, because they are investing, and they're investing in renewable energy. They're investing in transmission. Those are the two pockets where they're putting a large part of this money in. Largely a thumbs up where balance sheet is concerned, because you're seeing debt which is not too high. You're not seeing equity which is a concern. Your debt to equity levels are quite reasonable, and the growth clip is quite substantial. And therefore, that balance sheet looks good. I'll also quickly take you through cash flows. Now, in terms of cash flow from operations, you've got a negative 10 crore there. And that's also because your inventory levels have gone up. Maybe not inventory levels, but your receivables, your trade receivables have gone up quite sharply when you're looking at it all across the year. So FY23 also they went up, but FY24 was more substantial. But your cash flow, your net cash flow is still positive because they've raised money. And we know that. We saw the kind of debt levels that the company has seen. And therefore, that the raising of money has helped it stay positive where net cash flow is concerned. So a neutral on this count, we'll have to wait and watch as to whether it can generate cash flow from operations. Once operations also start to normalize, once top line, which is growing at 100% in FY24, starts to normalize, whether they can continue to generate a healthy cash flow is what I would look forward to. But let's talk about return ratios on all the investments that they're making, Anushi.
So right, we did address about the 64% of CAGR growth that the company had in terms of where the PAT is concerned. That is clearly reflecting in the kind of return ratios that we are looking at. So if you see what has happened in FY22, their ROE, that's a return on equity, stood at about 21.6%, which eventually moved to 19.2%. But FY24 onwards, we've seen a sharp uptick in terms of where the ROE and the ROC numbers are. 28.7% is the ROE number that we are looking at, while for the capital employed, the return on capital employed, that stood at about 31%. We've not seen a lot of players in this field with the kind of numbers that we are seeing in the range of 25 20% plus ROE, ROCs that the company is making. So very healthy sort of ratios overall that we're looking in terms of where the return ratios are.
Yeah, whether sustainable or not is again something worth a watch, but difficult to poke any holes in this one either. So it's a thumbs up on that count. Let's look at shareholding. Shareholding has come off a little bit from the highs, but now at 69.5%, quite steady. It was 73+%, mind you, but it's come off slightly, maybe in this financial year, from the June quarter onwards, and therefore you're seeing that kind of number there. Also, no FIDI investment because it's a very, very small company, understandably so, and therefore meaningless in terms of the FII combination here in the shareholding, and the balance is largely held by public. That's how it is. Let's also quickly look at street cred, and I'll take you through that one. The last 6 months, you're looking at negative 40% returns. Last 1 year, negative 9% returns. This has underperformed both the Nifty small cap as well as mid cap indices. Therefore, a thumbs down on this one. But it's been a great compounder over the last 3 years. It's been 18x in the last 3 years. That kind of a sector, that kind of a space, a turnaround in the power segment is what we've seen over the last few years. And this one benefiting from that tailwind. But 18x returns, can that sustain? Well, what does guidance suggest?
You know, just on the quick point about shareholding, we've seen, you said 73% and then eventually that moving to 69%. The company did say that from now onwards, they're not looking for further dilution in terms of where the equity is concerned, in terms of where if there are any fundraising plans or so. So that was something which was interesting as well. But other than that, if you're talking in terms of where the top line is concerned, we are looking at a growth of around 50% in terms of the revenue which is there. The company has plans to maintain the kind of growth momentum that it has seen in the last 5 years as well. So they see, and this would be aided by the non-renewable energy segment, which is the big upcoming segment for the business. So there they are seeing about 40 to 60% growth coming for the business. Just quickly walking through what are some of these plans in the non-renewable energy that they're looking at. Now they're going to be setting up a manufacturing unit at Ahmedabad. This is for manufacturing 300 of megawatts of electrolyzer under the PLI scheme by SECI. Other than the initial production expected to start from FY26 onwards. Other than that, they're also in partnership. They've also entered a MOU with Teco Group to develop fuel cell products. So for the same fuel cell assembly and manufacturing facility, operations are to begin from 26-27 onwards as well. So once these facilities are on stream, we'll see a higher mix for the non-renewable side. The eventual plan is what Harsh said before also, power transmission currently contributing about 90% of the mix. But eventual plan is to see a 50-50 mix across these two segments. So it is interesting how the new segment is going to pick up and what is going to be the pipeline in terms of order opportunities for the business for these two segments which are there.
Okay, so that's one piece of it. Let's also quickly look at what the street coverage is like, and the street coverage currently not present. It's a 1200 odd crore company, so give it to them that likely the street not really interested, but also this leaves some bit of room open to the fact that because there is no coverage, you may likely not see the kind of rigor with regard to disclosures and corporate governance, and therefore you might want to factor that as part of your thesis, and therefore we don't give this a negative because company is too small to cover for many analysts, but at the same time it's not a positive, it's largely a neutral is what we give on this one. No street coverage. I want to quickly go across though to Suchita Datta, who's the executive director. Let's hear from the management themselves actually. We caught up with the promoter and MD Shalin Sheth, and here's what he had to say on the company's growth prospects going forward. Listen into a slice of that conversation.
Since we have been growing with a rate of 30 to 45% in last 3 to 5 years, so the main growth has came from our PTS division, that is Power Transmission and Solutions Department. We are finding a great opportunity in this segment itself. And we have got a manufacturing and EPC segment within this PTS part. And we are also innovative various products. So every second year we are coming with a new manufacturing line. So our strategy is that to create the entry barriers and to enter into the business where there is an entry barrier and look forward for the growth where we can sustain the business on its own. And we have been quite successful for adding the new product lines. And that's the reason our company has been able to give this growth. At the same time, from the NRE division, that is New and Renewable Energy, we put up the division in 2022-23, and our plan is to manufacture the green hydrogen equipments like electrolyzers and fuel cell. So that is one part of the NRE. We are also into battery energy storage and EPC solutions for the solar, and we are also providing the carbon solutions. So these three segments where we are looking forward for the growth of next 3 to 5 years, and we believe that in next 3 to 4 years we'll be able to have the equal revenue from the PTS and the NRE both the side.
So it is a 50-50 mix that you're looking from 90% mix which is currently there in power transmission to a 50% is the mix that you will be looking in the next 2, 3, 4 years. Want to understand, considering that there would be a 50-50 mix forward for the business, how would the margins shape up? Would they continue to remain in the 15 to 17% of range? Just want to get a perspective on this, because what we have seen from 2022 onwards, where the margins were in the line of 13%, and subsequently we are seeing it going upwards in the range of 17%. Want to get your sense on how the margins have shaped so far from the last 2-3 years, and what's the picture going to be forward?
Looking to the current order book and the market that is offering to us, we believe that we'll be able to maintain the same profit margin for our PTS division. And for the NRE, based on the product mix, initially for 2 to 3 years, we'll be having little down in the margins, but we'll be looking forward more into manufacturing side of the NRE too. So believe that after 3 years, our margin story will be continued for the NRE side also.
So, Mr. Sheth, while currently, if you look at the 9-month picture, your margin stood at about 15%. This is as compared to, if you take the last year in consideration, that was around the range of 16.7%. Want to understand the current blip which is there. Is that the reasoning that you're giving, that since the new energy division is still developing, in the next 1 year or so, we can see there could be some margin pressure, and then from there onwards, we'll see a gradual pickup?
For the next 1 year, we don't see much margin pressure, but maybe for in a short horizon of 2 to 3 years, if we need to take some of the projects, it may have little down in the margin for the NRE side, but overall, we'll be able to maintain the margin.
Okay, and can you give us a range as to what could be the range when you see in the next 2 to 3 years where there could be some pressure? What's the kind of margins that you're looking at?
Our range on a company basis will be about 13 to 18%.
Okay, so 13 to 18% is what we are seeing going forward for the business. Now, as we have seen in the last couple of months, there have been significant developments for the company in terms of the new and renewable energy. If you've cited out your future plans also, in 2027 is 1 year that we should be watching out for, when some of these key facilities would be on stream. Can you talk about the recent one, which is the PLI that you had recently announced, and this is for which you're also setting up a new facility in Ahmedabad. Want to understand more on this development, how this would lead to incremental revenues going forward for the company, and what could be the expectations here from the overall growth picture for the business?
Our new facility will start giving the manufacturing and revenue from the year 26-27 onwards. And we believe that the facility should be ready by that time. And we believe that we'll be also required to provide as per the market requirement, because slowly the market is also gearing up. As I told you that overall our NRE and PTS division will be having the equal market share, equal product mix in the next 2 to 3 years, maybe in 4 years. So we are looking forward with a growth of 40 to 60% with the NRE business in next 3 to 5 years.
So 40 to 60% is what we are seeing from the NRE business. But if we take the whole overall picture in consideration, considering the power transmission segment as well, what is the kind of overall revenue growth that you're targeting?
Looking to the order book and kind of orders that we're expecting, and looking to the deliverables of those orders, we believe that we'll be able to maintain this growth of last 5 years we've been maintaining in an overall company size.
Okay. Yes, please go ahead.
Or maybe in some year it may have little change, it may also exceed based on the market and requirements.
Okay, that's fair to understand. Mr. Sheth, considering that you're marking a foray here, NRE is still a smaller segment for the business wherein you're seeing about a 50% of a share going forward. I also want to understand, are there any challenges or concerns that could be upcoming in these next 2 to 3 years? Want to get a sense on how the competition is as compared to your business. Just want to see what could there be some of the concerns be.
Looking to the market and size it is offering, and looking to our ability and our cost structure, for next 3 to 4 years, for the numbers that we are working, we don't see a very fierce competition because the market has got enough to offer in terms of growth, in terms of opportunity. So we don't find a very fierce competition while achieving our numbers for next 3 to 5 years.
Okay, so if you take the current total order book into perspective, firstly, want to get your sense, what is the total order book going to be? What's the current order book and what is the kind of orders in pipeline which are already there across the segments? If you can give us a breakdown between the NRE and the power transmission as well. Want to understand from here on, in this order book division that we are seeing, how much of a role is from the government side also? Like how dependent are your inflows on the government tenders? If you can get a perspective on that as well.
Very interesting question. See, ultimately, we have been working in a field of power and power transmission. So government role is very important because as far as the government plans are concerned, our business is linked up with the plan of the government. But it is also offering the equal private opportunities as far as the various products, especially for the ERS segment, especially for the NRE segment. So we believe that our product mix will be 60 to 65% from the government projects and 30 to 35% will be the private business. That's what we are looking forward. Looking to the horizon of 3 to 5 years, we are looking forward about 800 to 900 crores business each side within Advait. And if you just look at the market size for the NRE side, by achieving these numbers will be hardly achieving less than 1 or 2% of the market. So we don't find a fierce competition, and we are building on capabilities, we are building on the team, we are building on company, so we are confident about this.
So, Mr. Sheth, considering that 60 to 65% is from the government side, in the fourth quarter, there were some concerns on there being some third quarter, there being some lag in terms of where the government tenders are in place. Did you also feel that there was a lag in terms of the tender approvals which were there? What is the current sense that we are making in terms of the order inflows which are there?
Looking to the current scenario, in fact, we are finding more and more opportunities, and we have not found any lag in the orders in the field where we are operating. So we are finding these quarters as most exciting quarters in terms of opportunities, also from government side and also from the private side.
Okay, so considering that you have strong plans for the new and renewable energy, which you just mentioned, the PLI one already there, there's also considerations of fuel cell assembly facility also coming on stream in 27 onwards. I want to get a sense on the Capex number as well for the next 2 to 3 years. How is the Capex going to be shaping like? What are the kind of cash flows and what is the debt picture also going to be building? Like if you can give us more details on this.
For the year 25-26, we are not looking forward for further equity dilution unless it is required on specific exciting opportunities. We may have some debt on expansion of the electrolyzer manufacturing. We are looking forward total Capex for the company about 200 crores in next 2 to 3 years.
Right, that's the management of Advait Energy talking to us exclusively with regard to all of their plans and what we can expect from them going forward. Let's look at the metrics once before we close the show. And, you know, we've spoken about all of this. Income statement, very strong growth, clear thumbs up. Balance sheet also robust in terms of debt to equity, low risk in that sense. And no further equity dilution also expected. So that's also a thumbs up. Cash flow, neutral, want to see better cash flow from operations start to trickle through, and some stability with regard to growth there. Return ratios very, very strong, you know, anything between 20 to 30% on the ROE and ROCE metrics over the last 3 years, and therefore a clear thumbs up there. The other four, shareholding is near 70%, and that's a positive. Street cred is a thumbs down because of the last year's performance lagging the street, and therefore can guidance translate to execution will be the big question here. Guidance, and that's the key. Very, very strong guidance. Large changes with regard to business model, and therefore we'll want to wait and watch as to whether this actually translates. And last point is with regard to street coverage. No street coverage, be cautious, therefore do your homework before you quickly look at how to invest and how much to invest. 5.5 on 8 is how the rating stacks up. And of course, we hope that this was helpful. From Anushi, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. Quick look at where markets are at. You're seeing largely 0.5% higher on the Nifty 50. Let's pull up the intraday chart on the Nifty, and we've been through a fairly range-bound day of trade. Just ignore that maybe first half hour or so, and markets have been fairly range-bound in that sense, and we're at the near highs of that range, and that's probably one key takeaway from here. We're around 70 odd points from the highs of the day. So going to be an interesting next hour and a half, and going to be interesting to see what the Nifty does at this point. So that's on the Nifty. Let's also look at how the advanced decline is shaping up, because that's one factor which has been in focus. Largely even Steven where the broader markets are concerned, but the Nifty is doing well with regard, and the Nifty 50 is doing well, and the benchmarks are doing well with regard to the breadth, 2:1 in that sense where the market breadth on the index is concerned. Let's look at it, because there aren't any meaningfully large contributors. You have pockets where there has been solid contribution, and ICICI, for example, some of the financial services, SBI Life, Bajaj Twins also contributing well. So some of the financials taking center stage today with regard to contributions on the Nifty. But outside of that, you're seeing a largely okayish set in terms of contributors. In terms of specific stocks, you're seeing some movement. A Trent is up 3, and M&M is up 2.5 nearly. A Coal India also up 2 odd %. Cipla also doing well. So pharma as a basket and financials as a basket is in focus today. And that's what we'll likely see even on our screens when we look at sectors. Let's pull up the sectors, and among the heavyweights, those are the two key ones in focus: pharma as well as finance. So the Fin Nifty and the pharma are doing well, 1.5% and 1% each. The Nifty metal outside of that, and the Nifty auto also chipping in. Mind you, there was an M&M on your screen, 2% higher, and therefore some bit of contribution coming in from those pockets as well. The PSU banking index largely flat, slight negative bias, but IT is where a large chunk of the pain is. FMCG as a defensive not doing well. So those two pockets are not exactly doing the best. IT, of course, on the back of sluggishness with regard to US economy and commentary coming through, that kind of underperformance, but it's off the day's lows for sure. So that's maybe a little bit of positive within that negative pocket as well. But broader markets, and I'll throw it across to Neeraj to kind of take us through that, because the advanced decline largely even Steven, but there's a bit of outperformance in broader markets. Neeraj.
Yeah, which is good to see. I mean, but it's very, very specific. I mean, so for example, if you look at order wins, like KEC has won a large order, it's up 6%. it's not the same for everything else like a GR Infra or a Seagull or anybody else. So therefore there's different kind of a move that is coming in into some of the other names, all of which have won an order. KEC International was 1,200 crores, but GR Infra have won 4,200 crore order. The stock is down about 5% in trade. So it's very, very relative for different firms. So that is part one. The Seagull is flat as well. Similarly, the US FDA clearances that came in, Shilpa Medicare, Alchem Labs, JB Chemicals, all of these in some fashion have gotten a US FDA inspection cleared, and some of the stocks could have moved, but it's not that these US FDA cleared stocks have really made a move. What has moved actually is some CDMO names like Senores Pharma, for example, which is I think up about 4.5 or 5% in the session today. So that's the variety of moves that we are seeing in the session today. Have some of the brokerage names reacted? Maybe not. I mean, we haven't quite seen, for example, a JSW Energy or an Adani Power or an Adani Green, or for that matter, Ambuja, etc., react massively in trade. It's in the green, most of them. Adani Green, okay, I stand corrected, it's actually perked up and now 3.5% in trade. So that's a good one, but otherwise it's been a quiet kind of a move. By the way, speaking of, I'd like to bring that Adani Green chart once up, because I think that note speaks about some fairly strong EBITDA numbers over a period of time. And I think that is what is getting the street excited. Last 5 days or last 7 days, if you can pull up the Adani Green chart, I think it's gotten some fairly decent moves done as well. Look at that. 1 week, it's about 8% or 9% if I'm not wrong. 3.67% today, but otherwise it's been fairly high. So decent going for some of these names. Let's get in our guest on the show today to try and understand what to do in a scenario like this. Akshay Bhagwat, Senior VP, JM Financial, with us on the show. Akshay, good having you. Thanks for joining in. 0.5% for the Nifty, even though the Sensex is flattish and banks are doing well. Is there a trade on the index, Akshay, that you have for us this afternoon? Are you trading the Nifty?
Good afternoon, Neeraj. Yes, so it's more of a range-bound day. The only takeaway is that we opened gap up, but somewhere, the gap ups have not sustained. Now, Bank of Japan and the Fed policy is what the market looks forward to. So obviously, it's going to be a slightly choppy session for the week, but the broader setup makes me believe that Nifty is most likely heading for the upper levels of 22,700 to 750 basis point. So yes, as a trade setup, you can be on the buy side in the Nifty. It wouldn't be a carry forward or a BTST trade, but you need to give it some time. For this week, I'm expecting upsides till 22,750. You can have a stop loss below 22,300 on the buy position you build in the Nifty index.
Okay. Your picks for this afternoon, Akshay. Harsh also joining in.
Yeah, good afternoon, Harsh. So, two trades I have. One is IEX, although 5% up, a major move in today's intraday session, but the setup is so good that this bounce back has come from a very massive support of around 160, which it has been building up since the last 4 weeks. Derivatives data is also hinting for significant buying positions being built in out of the money calls, which just gives you significant upsides. Roughly 181 is the upside we look forward to in the short-term scenario, and you can place 152 as a stop loss in IEX. Second trade recommendation is in Macrotech developers, which is Lodha developers. And this stock too has been beaten down and is highly oversold on tech parameters, making a comeback in today's trade, and a good setup from a risk reward payoff makes me believe that 1205 is where this stock may head for. You can place a stop loss of 1014 on this long position.
Akshay, also curious to know your view with regard to a trend. It's 3% up today. The stock from the highs has really taken it on the chin. So what next for this one, according to you? What are charts indicating? The 3% up move positive going forward?
Yes, this is more of a trading pullback move. And if you look at the charts, this stock has been building a base since last 3 weeks, as I see it on the weekly charts at the levels of 500. Your 100-day exponential moving average on the weekly charts also is at around 4,800 to 5,000 zone. So the momentum is catching up. There are small hurdles, small resistance at levels of 5,300 and then 5,500. So you have to take this trade in parts and parcels, because I do not see any major direction directional upside from here as of now. 5,600 is the best case scenario you can work with. That's the targets you can anticipate from a short-term trading scenario.
And the other one that's perked up in trade is the Nifty Pharma Index. Now, you look at some of the moves. Dr. Reddy's up 3.5, Natco Pharma up 3. You have a Biocon which is doing well, and a Ajanta that's doing well as well. Any of these on your radar, and you have the whole index doing very well. So any of those in particular that you're liking, at least in trade today?
Cipla is one you can look forward to from the pharma space. Now, this stock has been consolidating in a range since I think a couple of months, but has built a strong base at 1400. It's ready to launch itself up, and I believe the way the technical setups are, you might see the stock heading up for levels of 1600 to 1650 with a time horizon of 15 to 20 trading sessions. So more of a positional trade here. Divi's Lab is another stock from the pharma space you can look forward to. So technically, this too has a very strong structure from a longer term perspective. A base has been built at 5400, which is more of a 200-day moving average from where it has recovered. And positionally, you can expect targets till 6100 to 62,000 zone. So yes, as an index, pharma index looks promising. These two setups, Divi's Lab and Cipla, which I discussed, are the best out of this entire lot.
I have one last question. Before we get into management, really. And the reason I ask this because the management is in that space. I was looking at the 40-week equal weighted average prices and sectors which are doing well or have a large portion of their stocks in a higher zone. So I think one of the sectors that stood out was aerospace and defense. Now, my question is, do you like any of the businesses or any of the stocks on the charts from either aerospace or defense based on the charts?
Well, as of now, from the defense pack, BEL is one, Bharat Electronics is one stock. From the technical reading, it looks very promising. But this will be for traders who are keen to get positioned slightly from a medium to longer term horizon. Because if you look at the monthly structure of BEL, the correction from the levels of 330, 340 till 240, 250, it has kind of withstood the rough patch which the indices and its peer group have been. The recovery is pretty fast, which we have seen in the prior month. And the longer term price structure just makes me believe that this can be one interesting stock to look forward to, where from a longer term or medium term perspective, 340 should be the major target and can also head potentially for upsides till around 375 to 390. So BEL is one name from the defense space which I would be personally gung-ho on.
Okay. Well, speaking of that space, Premier Explosives is the company that I want to talk about. The stock, of course, the last few days and has had a bit of a pullback, as has been the case with a clutch of other businesses. But there are a few things that have happened. They had an exceptional Q3, wherein revenues, operating profit, net profit surged. And by surged, I really mean surged. They did really well for themselves. They've guided to an order book of 1,000 crores by FY26. They expect 80% of orders from the margin accretive defense segment. And of course, the idea of calling Mr. TV Chaudhary, who's the MD of Premier Explosives, today on the show, was to try and understand the new order book position, execution timelines, the JV with Global Munition that they have done, and more. Mr. Chaudhary, good having you. Thank you so much for taking the time out. I hope all is well. This is Neeraj Shah here. Good afternoon. I'm trying to think about how has the quarter been. We're about 17th of March, so nearly 2.5 months have gone. How has business been in the quarter gone by, sir? I think Mr. Chaudhary can't hear me. Mr. Chaudhary, can you hear me? Okay. I will just get back to you in a moment. I wonder if the charts look weak out here, Akshay, of Premier Explosives. It's not a very large name, 1,800 crores of market cap. But in case you can pull up the charts and tell me what you think about them.
Yeah, Neeraj, I agree with you that the price structure of premier explosives, at least on the price charts, are looking weak. Now, if you look from a short to medium term perspective also, there has been continuous supply or selling even on small recoveries, and broadly, at least the 200 moving day average on the weekly chart is working somewhere around the support zone of 260 to 270 zone. So that's the minimum downside one should look forward to. So at least going by the current chart reading, there is no evidence on the charts to suggest that bottom is in place. So at least chartically, the suggestion is to avoid the counter at the given juncture.
Until some reversal happens, I wonder if the commentary or the results in Q4 can actually help. Let's try and ask that to Mr. Chaudhary. Mr. Chaudhary, can you hear me? Mr. Chaudhary, can you hear me? Okay, no, I think we are not getting the luck with Mr. Chaudhary. But I want to have this conversation. So we'll try and, let's not rush into this. Let's try and ensure that the audio is going through to the gentleman.
Yeah, now I can hear.
Okay, he can. Mr. Chaudhary, can you hear me now?
Gone.
Can you hear me, sir? Okay. Let's try and get this going, because it's an interesting one. Viewers, just to tell you what Premier Explosives did in Q3, the revenue surged to 165.9, which is 166 crores, which was a 272% increase year on year from 44.6 crores. Operating profit 15.4 crores, which was about 4.9 crores. Operating margins about 9.3%. In fact, revenue for the first 9 months of FY25 has shown an 86% YOY growth, 343 crores. So I think they've done well. Their current outstanding order book at the end of the quarter in at the end of January and beginning February was about 739 crores, which is about what, 2.5 times FY24 revenue, if I'm not wrong. So by all means, the last few days and weeks have been actually pretty strong for Premier. The question only is, can they build on it? And that's the question that I'm hoping to ask Mr. Chaudhary as soon as he joins us. Keep in mind, the net profitability for the company also has done well. Okay, just while we wait for that, and since we're on the topic of defense and PSUs, maybe a lot of stocks are PSU stocks out here as well. The question that we were faced today, Akshay, was on railways, and somebody asked what's going wrong with some of the railway wagon manufacturers, right? And of course, Titagarh or Texmaco, etc., are not just manufacturing wagons anymore. They are doing a lot more. But much like defense, the stocks have completely come off. And while some of the defense stocks have surged, these guys are not surging. What's gone wrong here?
Yeah, so at least on the technical space, what I believe is a lot of expectations were built in the defense and the rail names, and this expectations has been building since the prior budget, which was somewhere in June, July times. And the way the markets were hot at that given moment, it was very easy to take or believe in a story where the promises were hard. So I believe the most of these counters have turned on a sour note, and what we see today is more of the expectations not being met. Most of the charts, if I look up to pull up stocks from the defense and rail spaces, are stocks where I get to listen from investors who have been caught on the wrong foot at very high levels, and somewhere the selling aggravates, and there is no sign of bottom in the, at least which is evident on the price chart. So there is no reversal which is evident on these price charts. Still the pain point might be more in the coming days. So till we have any evidence on the prices, I believe it's best at least to stay away from these sectors for the time being.
Yeah, okay, fair call. So stay away from railways as well is what Akshay is saying, and that pocket is not looking good. We'll try and of course connect base with Premier Explosives in moments from now. But I think in moments from now, my colleague Shrimi might also be joining in to talk about an NDTV Profit exclusive. We learned that government is likely to exceed the FY25 direct tax estimates. Shrimi joins in with these exclusive details. Shrimi, what are you learning?
Yeah, so what sources indicating us that, the momentum is continued as far as, direct tax collection is concerned. So revised estimate, as you remember, budget has revised it slightly higher than the budgeted target, which is now at 22.37 lakh crore for direct taxes. So what sources indicating us that as of March 16, net direct tax collection rose by 21.26 lakh crore, which is giving a clear signal that the government is expected to exceed its revised estimates for the current fiscal year. Also, because being a last month of the fiscal year, a lot of budgeting happens in the final month, and also the advanced tax collection, you see it's around 10.44 lakh crore as of March 16. So this is kind of the first time we have seen the advanced tax collection both from individual and corporate is exceeding and above 10 lakh crores. So the hopes in the tax department is that they are going to exceed even the revised estimate. The net personal income tax, as you see, it's at 11.01 lakh crore, and the corporate tax collection, if you see, as of March 16, 9.69 is what collection stood at. So overall, we will see that direct tax collection, the government direct tax kitty, is going to have, 22.37 lakh and slightly more than that in the current financial year.
Got it. Okay. Shimi, thanks. And well, the spate of good news continues on that front. This is actually good news for sure. I wonder if, like I said, managements are echoing that, because this is going to be my question, viewers, to all companies who come in on the show. And that's my question next to Premier Explosives as well, because Mr. Chaudhary, I believe, is now with us. And I'm hoping that this time around he can hear me. Mr. Chaudhary, can you hear me?
Yeah, I am able to hear you. Thank you.
Good to know that. Well, yeah. I was effectively talking about what a splendid quarter you had in Q3. The first 9 months have been good too. I'm wanting to know, because this is something I'm asking every company. It's 2.5 months gone into the current quarter. How has the quarter been, sir?
I am expecting it's going to be good. Only another half month is left.
Yeah,
I think we'll maintain the same trend.
You'll maintain the kind of trend you're talking about. Okay,
yeah.
Great. Now, fill us in on a few details, sir. I will come to your numbers and those other numbers in a bit. But you have a JV with Global Munition, if I'm not wrong. What is this about?
This is about the Global Munitions is a company which is going to produce the defense products mainly, including the rockets and missiles and all those. So you know very well that Premier is already is a leading player in the high energy materials and propellants and rockets. And with this JV, we are getting a strong partner who is into the hardware manufacture, launchers and all those. So we have a clear understanding that we will not duplicate the facilities, rather we will complement each other's capacities and then build a bigger this.
So what does this entail therefore? I mean, you will not, I heard you say that you will not use, you will not duplicate facilities, but I'm presuming this would mean orders of different kinds and for different clients will come in both for Premier as well as for Global Munition. Would that be a fair assessment?
Yes, please.
Okay, and what is the nature of the orders? What are the kind of numbers that we're talking about here?
No, present geopolitical conditions, you know that there is such demand has gone up like anything for all this. So this JV is supposed to take care of this increased demands from international business as well as domestic also. Domestic, the munitions and then rockets and then particularly the Pinaka and so many other things which are in the line. So we expect to do all those in the JV. And the Premier will continue to support by providing the propellants and high explosive warheads and all those to the JV.
Got it, sir. Okay, now fill us in on the current order book, because I think when you did the con call, sir, you were at maybe 740 odd crores in terms of order book. That would have been very spectacular based on FY24 revenues, but you've done so well in FY25. You're talking about a strong Q4 as well. So that's about 1.5 times FY25 order book, if I'm not wrong, the book to bill. Yeah. So tell us a bit about what the current order book situation is. What is the kind of order inflow that you believe you will get in general aside of global munition JV2? And are there some numbers that you can share with us about order inflow for FY26?
See, the current order book is at 806 crores.
Okay.
And there are several other are in pipeline and discussions are going on. So by the end, I think we'll be closing the year with another 50 crores. And also probably by first quarter, we'll be crossing 900 crores with the orders in discussion and negotiations.
Okay, but do you sense that the pace of order inflow will continue for FY26 as well?
Yeah, at least the coming 3 years, we are expecting the orders will continue.
Coming 3 years, okay, lovely.
3 years.
That's music to the ears. So let me try and ask you, sir, as somebody who is heading Premier Explosives, have you thought of a 3-year plan for where Premier Explosives might be from where you will be at the end of FY25?
Yeah, the plans are there, very much there. And I shared also earlier.
Okay.
By year 2030, we want to cross the 1,000 crore turnover, annual turnover.
Year 2030. So, but
Yes.
that's I think you will do what, 500 crores in FY25?
Yes, that is the target.
So you are talking of doubling revenues in 5
500
years.
was the target, budgeted target, but I think we'll be falling a little short of that because.
Yeah, but more or less, let's say 450
more or
crores,
less.
if at all, whatever. But from 450 to 1,000 over 5 years, are you being a bit conservative, Mr. Chaudhary?
Yeah, we are always conservative that way instead of talking about big figures and then. Definitely we will be doing that and we may be exceeding that also.
Okay. And the other question that I have is that while revenues have grown up quite substantially, the operational metrics haven't, right? In fact, over a 9-month period, if I'm not wrong, sir, the margins are down to 14% from 23% earlier. So is this the new normal, 14-15%? Could it be lower or could you recoup some of the margins?
So we expect an average of 14-15% average. It may go up to 18 also on higher side. But because we have a bouquet of different products, depending on the business in a quarter, that keeps on changing.
Yes.
So, but if you average it out, it will be in the range of 14 to 15%.
Okay. I'm guessing that now the FY25, the base would have been 14%, so it won't look so disparate in FY26. Yeah. But is there a reason why the margins are so low? Is it a change of business track, if you will? And because 23-24 was a great margin, you down 1,000 basis points from there.
Yeah. No, like I said, it is the product range. Suppose, in fact, the defense products have reduced in this quarter, and then commercial explosives have gone up where the margins are less. So
guiding to an average of 14-15% only for the next few quarters as well.
Yeah, because of the increase in other products, and moreover, with the competition coming in, we are also expecting some drop in the margins and the prices.
I get your point. Okay. Well, we wish you all the best for that, Mr. Chaudhary. Thanks so much for taking the time out and speaking to us today.
Yeah, thank you very much.
Right, that's Premier Explosives. Well, growth numbers look okay for FY25, but then not a very hunky-dory number is the point. But anyways, let's slip into a break, and maybe that's why the stock has done what it has done for the last few days, weeks. And Akshay Bhagwat saying that for now, it doesn't look like there's a big recovery in a hurry. So keep that in mind. We need to slip into a break. We come back. I request Akshay to stay on because we'd like to take one view from him before we wrap up the conversation. But we need to slip into a break. We'll be right back. Stay tuned, viewers.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Vixit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Welcome back. You're watching India Market Close. I'm Mahima Vachajani, and it's that time of the show where we get in my colleague Somit Sarkar, who joins us with all the chatter from the dealing room. Somit, what did you hear today?
Well, multiple stocks that remain in focus. Firstly, it's Dalmia Bharat and JSW Infra. That's what the dealers are indicating. Strong buy flows on institutional desks. Both FIs and mutual funds have been actively buying both these counters. For Dalmia Bharat, the potential buzz, one of the potential buzz is the fact that there could be a potential upgrade that could come in by an multinational broking firm. So keep an eye out for Dalmia Bharat in trade. Then there is Macrotech and Page Industries. Now both these counters have been actively bought on the large HNI desk. So strong buy flows from the large HNI desk for both these counters. For Page Industries, it could be a long-term trade as well from the HNI desk. That is what the dealers are indicating. And lastly, one of the stock that remains in focus is Asian Paints. We are seeing some strong sell flows, high sell flows on the large HNI desk on Asian Paints as well. The potential buzz that the dealers have indicated when it comes to Asian Paints, the fact that there could be a potential management change in Asian Paints. That's the buzz on the street, and hence Asian Paints is also reacting negatively to this potential buzz, and hence the Asian Paints is one stock that we should watch out for, because if at all at this moment there's a management change on the key role, then it could impact negatively for the stock.
Wow. So I mean, are the dealing rooms murmuring that because it's a family-owned business, so it has to be at the MD CEO level.
Right.
That is the level of change that we're talking about?
Well, that's what the street is indicating. Because last what I remember was he was appointed for 5 years back in 2023, and most likely he might exit. That's the potential buzz on the street. We have no confirmation on that. Neither we have reached out to the company, but that's what dealers are indicating, and hence we are seeing that negative pressure on the stock.
Wow.
Even in a day when markets are on the high note.
Very interesting. Somit, thanks. That's a very interesting buzz, and I'm glad you brought it out for us. Before we thank you, Akshay, can you come in with a word on Asian Paints as a trade?
Yeah. So technically the setup is weak, but if you look at the broader chart picture, it's been a one-way sell, which we have seen from the levels of 3,300. So maybe, yes, there may be the last round of pain, which is still in maybe left for Asian Paints. But really at this point, I would not say go for an exit, because this last round of pain can see 2,100 as the lowest or the worst case scenario. So the thought is that maybe 2,100, 2,150 is in fact a good levels to buy on the lower side. So yes, as of now, the trend is down, but 2,100 can potentially be the point if it makes one more low where a base building scenario can happen. So that's the view I would have on Asian Paints.
Okay, thanks a lot for that, Akshay. Really appreciate this. Thanks for taking the time out. Okay, now joining Mahima and me on the show now, on the technicals is Hemen Kapadia of PR Choksi FinServe, and on the fundamentals is G. Chokalingam, founder of and MD of Economics Research. Thanks so much both of you for joining in. And before we get to the big picture conversation, talk about the charts, etc., with Hemen as well on the charts. But Mr. Chokalingam, I want to come to you since we're on the topic of Asian Paints. If there is a management change, how do you think the street will take it?
Obviously, the street takes negatively in the short term. But my view is that there is no need to worry too much about these management changes, leadership changes rather. We have seen, a lot of big companies, including Infosys. There have been changes in the changes at the senior level, but then stock fell down immediately. But then from that level, many stocks have recovered and they gave even excellent return. So my point is that when a company emerges as an institution, there is no need to worry too much about change of leadership. Yes, I am not saying that leadership is not relevant or doesn't matter. It matters. But the market need not worry too much and react in a panic mode, because Asian Paint is an institution. It will be able to manage, the business very well. The only problem is that the whole industry is under stress now. Volume growth is in a poor single digit. On top of it, all of us know that the competition is heating up. The new capacity by these two new group, Jindal and Grasim, that alone is estimated to be around 50% of the existing capacity. So I would worry more about poor industry growth and the new competition rather than change of leadership.
All right, so there are more pressing concerns for Asian Paints, keeping aside the management change that might take place. Now moving on to some newsmakers, Ola Electric is one of them, because bad news keep finding Ola Electric. Now in terms of the recent update that has come in, Rose Mehta Digital Services has sought an initiation of insolvency proceedings against an Ola Electric subsidiary. What they're saying is that there's default in payment towards services that they had rendered, and Ola Electric, however, has said that they will take appropriate legal advice and then take action against it. But NDTV Profit previously also reported that there is dues that are still pending to be paid to this particular company of around 17 to 18 odd crores. So Ola Electric is down on the back of that news. There is SpiceJet, where promoter has sold around 3.15 crore shares, of which 1.15 crores were already sold. In terms of proceeds, this will be used for fund subscription of warrants. In terms of promoter holding, it has now come down to around 27.6%. KC International is another counter which is making it to the news. It has secured orders worth rupees 1,200 odd crores, and these are new orders in the T&D space. The cables business has received orders from various cables and conductors, which is in India and overseas as well. Few names that are also in focus include Vishal Megamart, where anchor lock-in period ends today for around 3% odd. MobiKwik, for that also anchor lock-in ends for around 6%. Sai Life Sciences is another counter which is in focus, where anchor lock-in ends for around 4% odd. So all of these counters are in focus on the back of news flow per se. Mr. Chokalingam, I'll come to you for Ola Electric. What's the view like? How are you reading each update that's coming in for this particular counter?
Yeah, so on same channel cover several times I cautioned on Ola. I continue to remain a little nervous about the company, because when the sales were quite decent, that time itself Ola was making losses. Now we have seen a very poor number for February, and the Q4 results could be very bad. And all the traditional two-wheeler players, they have emerged as a very strong competitor for Ola now. So I am a bit afraid that there can be more shock to the stock price of Ola from current level.
All right, so that's the view with respect to Ola Electric. Heyman, I'll come to you. How are you reading the markets? What are the levels that you're watching out for Nifty and the Bank Nifty?
A very good afternoon to you, Mahima. Thank you for having me on the show. It's always a pleasure. There is some resilience coming in finally. VIX is also docile, and 22,300 didn't break last week, which was nice. 22,526 needs to get taken out, and the swing high, which was around 22,676, would make a higher bottom on the daily chart. So things are stabilizing. I think many of the mainline stocks seem to have posted bottoms, at least from the short to medium term point of view. So, like I said, these levels are important. 22,300 needs to hold. I'm not that worried. The make or break level would be 22,000 now. So I don't believe that's under threat, at least as of now. So things are looking sanguine, things are looking better. And yeah, the base formation is in place. And yes, stock specific metals is something which is looking good. Banks are showing some resilience. So yeah, things are looking to look just a shade better.
Right. So things are looking better, Heyman. And what counters are looking, best for you right now? What are the topics for the day?
Metals, some have moved, but metals were a favorite. But otherwise, I'm looking for stocks which are deeply oversold. And we've seen some positive divergence, crossover buy, stability. So firstly, a buy on RT Industries at 384. Stop loss 370, target 412. Mechanical indicators are in a crossover buy, not only on the daily, but the weekly chart also. I believe 380 would not break. Rebound is on the anvil. Technically, the entire Adani group has posted a short-term bottom. I believe this has percolated to the weekly charts also. So I have a buy call on Adani Enterprises. I believe not only a short-term, but a medium-term bottom has been made. If not has been made, is being made. So a buy on Adani Enterprises 2250, target stop loss 2200, target 2350 is a very modest target. I believe we should be heading towards, if the markets stabilize, Adani Enterprises should be heading towards 2500 or maybe even more. Mahima.
Okay. I mean, interesting that you pointing that out, because there was going to be a question to Siddharth Khemka. He joins in on this conversation as well. Siddharth, good having you. Thanks for joining in. And the airports business, Siddharth, GMR Airports had a fairly decent clipping out for the month of February as well as January, if I'm not wrong. And yesterday, the Adani Group mentioned that the Navi Mumbai Airport will be operational from the month of June, and I'm presuming that's a shot in the arm for the Adani Airports holding business, which is a part of Adani Enterprises. So just trying to understand how you think about the airports businesses.
So yeah, Neeraj, good afternoon. If you look at the entire aviation industry, they have been witnessing strong growth across India, driven by the penetration in the tier 2, tier 3 towns. We have seen a lot of newer airports being developed, and a case in point being the recent Kumbh, where we saw a huge number of travel just to do one event, which is obviously once in several years, but definitely those kind of events do add to the overall connectivity to India. So I think aviation overall, we are very positive. That's the way going forward. And I think the newer development of newer airports within a city which has confined capacity. For example, Mumbai is not witnessing that kind of growth compared to Delhi, because the Delhi airport could expand and host a lot of international flights compared to Mumbai. And with that new airport coming in, I think that will only help the region grow in terms of the connectivity, and that should be positive for airport operators as well as some of the aviation stocks as well.
All right, so it's that's the view coming in on Adani Enterprises. It's now time to put the spotlight on the theme of the day, that is pharma pack. It is in focus as the sector has gained on US tariff tailwinds. Varsha joins us with more details on that. Varsha?
Thank you for that. So if you see, pharma is the sector of the day. Now this is on the back of Bank of America, which has came out with a report and their view on potential impact of tariffs on Indian pharmaceutical companies. So what they're saying is that the report analyzes the potential impact of tariffs imposed by Trump on pharmaceutical companies. Now tariff, what they're saying is a 25% tariff is considered unlikely due to US reliance on imported generics and the low profit margin of the manufacturers, and also a 10% tariff is actually possible according to BOFA, but this effects would be mitigated by whether these companies will pass on the increased tariffs, the increased cost to the consumers and the distributors, and also the shifting of profitability of US generics business to US subsidiaries. These are the two potential scenarios that may come out when 10% of tariff is impacted. Now what they're saying is that the tariff could lead to high generic drug prices and potential shortages, which will eventually lead to a good and favorable environment when it comes to Indian pharmaceutical companies. And they do come out, they do have a recommendation wherein, given the potential for market volatility, the report recommends investing in defensive healthcare companies, like they have a buy rating on Apollo Hospitals as due to its stable earnings. They are also bullish on Divi's Labs because of the lower impact when it comes to US business, and also they are also recommending Dr. Reddy's for its ex-US growth potential.
Right, Varsha, I think you've done more analysis on this. Tell us which pharma companies have the most US exposure and the impact of earnings per share on those companies.
Well, if you see, let's just highlight Aurobindo Pharma, which has almost 46% of business coming from US. Then you have Cipla, where 28% comes from the US. But if you see the Dr. Reddy's, almost 46% of the business comes from the US. And because of the BOFA report, wherein they are not seeing much impact of tariffs, this is the reason why, if you see, the Dr. Reddy's is up almost 3% in trade today. If you see, the Torrent Pharma has the least exposure to US business, that is 10%. But also, there was this HSBC report wherein they came out with, if the 10% tariff is to be implemented, what will be the impact on that will be on the EPS of these companies. So if I were to talk about Aurobindo Pharma, will have an impact of almost 5.5% of EPS to its 5.5% impact of EPS. If you see the Lupin will have almost 4.5% impact on its EPS. Dr. Reddy's will have almost 6.5% of impact on its EPS. And Zydus, if I were to talk about Zydus will have almost 6% impact on its EPS. So these are the potential US contribution of these Indian pharma companies and their impact on the EPS of these companies.
All right, Varsha, thank you so much for breaking that down for us. Mr. Chokalingam, I'll come to you. How are you reading this entire tariff imposition on these pharma companies, and which of these pharma companies do you think will still stand out for you, and you'll continue to see an upside potential in one of those stocks?
Yeah, very interesting question. US economy already at the receiving end ever since Trump has initiated aggressive measures in terms of trade war. The job layoffs have increased, consumer sentiments have come down, consumer inflation also has come down, partly due to the rising deflationary conditions. Stock market has given up all the gains in the US, and dollar index is down close to 6%. So what it means is that there is a limit to the intensity of trade war, and particularly for pharma, it will have a more adverse impact on the US economy. For people, living cost would increase. So therefore, I agree that there may be only a marginal hike in the tariff. So I would prefer Dr. Reddy, because a lot of acquisitions and marketing tie-ups have been executed in the last 10-12 months, and also the stock has fallen a lot. And apart from that, Dr. Reddy has around 45% of the exposure to domestic market, which would remain stable. And secondly, I would continue to recommend aggressive focus on domestic pharma companies which have got the least exposure to American economy or American markets rather. So that would be FDC Limited. 82% of sales are from the domestic markets. So that gives me a lot of confidence and comfort. And just as a disclosure, we also personally invested in FDC Limited.
All right, so that's the view coming in on pharma companies from Mr. Chockalingam. Siddharth, I'll come to you as well. Any of these pharma companies that you are finding attractive? I recently come across a report from Goldman Sachs, if I'm not wrong, and there they had Torrent Pharma as well as Aurobindo as their picks. But how are you looking at the entire space, and what are your picks?
No, definitely, Mahima. I think it's an interesting sector, and especially a lot of things going on. At the core, we also believe that it is unlikely that the US will put in a lot of tariffs on the healthcare products, because that is one space where they are struggling. And India is one of the niche countries where they are getting a lot of pharma supply. So they would not want to increase the healthcare expenditure at this juncture. So unlikely that we'll see a 25% tariffs on Indian pharma players. Nonetheless, if you look at segment wise, US generics, we are not that positive. Among the list, Sun Pharma is the only one which we like among the generic players. It is our preferred pick. It has a much more diversified presence across geographies, plus the India business also is doing well. The second space is the CDMO space, where we like the likes of DVs, which is a much preferred player, safer and better player. Growth is pretty strong. The regulatory hurdles are less, and again we see strong growth in that segment. So DVs is the second player, and the third segment is the domestic market. And I agree with Choka sir about Indian players being much more resilient in this global turmoil. So our pick there is Mankind Pharma. Almost 97% business comes from the Indian markets, plus the recent acquisition of Bharat Serum. That also kind of is very positive for the long-term growth. We see consistently almost 30% earnings growth in Mankind for the next 2-3 years, plus decent, comfortable valuation makes it an attractive buy at current levels.
All right, so that's the view coming in on the entire pharma space from Siddharth. Hemen, I'll come to you. You know, I was talking about the newsmakers, and KC International was one of them. The stock is buzzing on the back of an order win. How are the charts looking like, and what are the supports and resistance levels that you're observing?
Yes, Mahima. Some stability finally. As of now, it's on the daily chart. Support comes in at 650. I don't think we need to look for a support beyond 650. This is very strong. Resistance comes in at 737, followed by 763. Deeply oversold, Mahina. Recovery is on the way. And if you check out the volumes on last 2 trading sessions, today volume in the cash market, so not delivery marking obviously, but volume is 1 CR. And in the last 2 trading sessions, they are 35 lakh CR. So this volume, and this is the first day of the week. So this last week and this week, volume is higher in the last 5 trading sessions, and today's volume is highest in the last 13 weeks. So yes, simply put, looks good. Oversold levels have given, a bounce is underway. Can be considered a buy with 650 as stop loss. Fine.
Okay. We'll try and take the fundamental view as well from our experts. Actually, just before we maybe thank Mr. Chockalingam, a word on KEC International, Mr. Chockalingam.
Yeah, it's a good stock. Historically, it has proven its ability in securing the orders substantially from both the domestic market and the global markets, and also executing them properly. The stock also corrected a lot, and valuation is little stretched, but then this company always enjoyed a very good premium in the markets. So I would give buy call on KEC International, but preferably considering the weakness in the market, it would be better in case the stock stabilizes or even corrects. That could be a great opportunity to buy the stock.
Okay, well, so keep that advice in mind as well. Hemen likes it on the charts. Mr. Chockalingam likes it fundamentally as well. Mr. Chockalingam, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts. Really appreciate. That's the view from Mr. G. Chockalingam. Now, a bit of a global color to the show. Mr. Manish Singh, Chief Investment Officer at Crossbridge Capital, joins us on the line from London to try and give us his perspective of what's happening. And Manish, seems like for a lot of people, Europe is now a serious game in town. So for somebody like you who's investing across geographies, what's the current global landscape looking like? Is it Europe or is India featuring in the list too?
So, hi, good morning, Neeraj. I would say that Europe looks attractive only for the reason that the valuations are cheaper. There seems to be a change in policy in Germany, at least, in terms of the way they want to spend the money, or rather, let's say they want to spend more money and take on more debt. For those reasons. But there are structural problems that still remains in Europe, and that is about regulations and labor laws and government spending as a percent of GDP being one of the highest in France, 57%. And you compare that to US, that's 37%. So there's still a lot of questions that Europe has to answer. However, in the short term, given some of the policy changes, it looks attractive. But if you go back to the structural story, US is attractive and India will continue to be attractive for the reasons that we have better GDP growth in India, and US has a much better way of managing its economy. And I quoted one figure as government spending as percent of GDP. It's one of the lowest in the developed world. So those markets are not going to fall out of favor for a medium to long-term investor. But for short-term investors who have a very different mindset, for them, they might be jumping on the European train of defense spending and see how far they can go. But to me, that story still has questions to answer. And maybe this week in German parliament, they're going to pass the rule to take on more debt. But then that's just one piece. They have to then follow up and then spend that money and see earnings grow for people to get excited about the whole economy.
Right. Manish, Mahima also joining in. I just wanted to understand that, considering the FOMC decision which is due on Wednesday, how are you reading that and how do you think, how important is it for global markets as well as how do you think the markets will react to that?
I would say that, I don't think anybody is expecting a rate cut this FOMC meeting. So if there isn't a rate cut, and most likely there won't be, then it will not surprise anyone. If you look at the CPI print that came out for last month and which came out a week ago, that CPI print was in line all week. But if you look at the CPI print forecast for next month, i.e. the March print that comes out in April, that looks flat or almost zero from the forecast that I'm seeing. So if you take that into account, then you know that inflation is not a big story, and that is very encouraging. What is happening, and as we all know very well, is that President Trump's tariff, the stop and start nature of it, or the remaining aspect of there being a reciprocal tariff on April the 2nd, is what is holding people back or holding investors back. So you've seen a 10% move in S&P, but people are not going to invest, not going to buy back into it unless you see more clarity in what the tariffs are going to be. Once the tariffs are set, then I think you will see people going back in because tariff exists globally. I mean, India puts tariff on U.S. imports. China puts tariff, and Switzerland puts tariff, and Canada puts tariff, and the world continues. So what people don't like is the uncertainty of what it's going to be, and once that becomes certain thing, then people are going to move on. And I will say one final thing. I've said this before as well. The net result of this trade war is going to be positive for everyone. Because you are going to see tariffs come down everywhere as part of a deal. And you have seen this in India saying that they're going to take tariff off some of the US exports. Same thing is going to happen everywhere. And that definitely is a good news for every investor.
All right. Well, Manish, thank you so much, for giving us those insights. And thank you so much for taking our time and speaking with us at NDTV Profit.
Thank you.
All right, with that, let's slip into a short break. On the other side, we'll get you top buy today and sell tomorrow fix as well, and vice versa. Well, stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various firms.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various firms.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both
Welcome back. You're watching India Market Close. Now, LTI Mindtree is in focus as Citigroup is planning to slash its tech outsourcing and expand in-house hiring. We are now joined by my colleague Puneet, who will tell us more details as to what's working for the counter and what's not. Puneet, what are you picking up?
Well, thanks for that. So we're definitely looking at a bull as well as a bear case scenario for this particular counter. Now, Nifty IT has been affected across the last 6 to 8 weeks, and we're seeing downward pressure on all stocks. But today, the trigger for LTM entry, as you rightly said, is the Citi. As a client, they mentioned that they will be, looking to cut down on outsourcing of IT function and looking to develop that internally. Roughly around 7% of LTM entries revenues come from Citi itself. So definitely a bear case scenario for that. On the other hand, the client concentration has been something that LTM entry has spoken about in the past as well, and they have been diversifying as well as increasing client concentration. So revenue from the top 40 clients is only at 58%, and this is in favor of the company versus other legacy players as well. When you look at the other second bull and bear case, of course, all the IT sectors counters have been affected because of discretionary spending, which has been muted and has moved across from quarter to the next couple of quarters as well. It has been delayed, and that's largely because of the tariff function in the US as well. So because of the volatility of tariffs, there is lesser income in terms to spend on consumer discretionary, and that's been hurting all the IT counters as well. In the bull case specifically, if we can go back, it is better placed versus its peers specifically, and that's because that LTM entry does not have any kind of legacy business currently, and that's why it's better placed versus its other peers. When you finally look at the valuations as well, while the stock is currently trading at roughly about 23 times its FY26 EPS, that's below its average of the last 5 years, where it traded around 35 to 36 times because of the higher growth as well. It's still not done very well in terms of the return ratios as well. And while there is no guarantee as to the increase in spending going forward by the US counters, it might still be, something too difficult to take a bet on versus legacy players that are also trading at similar valuations as well. Finally, on the brokerage coverage as well, while we have 24 buy calls on something like an LTM entry, we might see some downward revisions tomorrow or in the days to follow as well because of this new news of Citi as well as it's cutting down on IT spending. So overall, there is concerns that most other counters such as and other companies like Citi might look to insource some of these functions, and that's something to watch out for. But the task is cut out for its new CEO that just joined in January this year.
Okay, thanks for that. And it's clearly that one large IT name which has been under some serious stress in the session today. I just wonder though if this is something that will not hurt some of the other IT vendors too. By the way, just before we ask our guest about IT, the rupee strengthened a little bit. This 24 paise is not, has to be some intervention. It's not normal course of business, I would suspect. The dollar index, of course, has been on the way down, so that is something you keep in mind. But be that as it may, 24 paise in a single day is not something that just happens usually on the rupee, so bear that in mind. 103.7 odd for the dollar index per se. 24 paise, very, very strong. Okay, Siddharth and then Hemen both. So first, Siddharth, to you. The fact that one bank has gone ahead and said that they want to change the way they are doing business per se, right? What stops other companies doing the same thing, and therefore other IT companies also suffering from this?
Yeah, Neeraj, I think definitely that's a indication about what could come going ahead from the key markets of US. While it's difficult for everybody to just start switching out from outsourcing to hiring contractors in the way that Citi plans, it needs to be it definitely needs a long drawn plan and a process. But the difficult times we are in, the volatility in the economy, especially in the US markets, will force a lot of these large institutions, corporates, to rethink or rework on the way they do the models in terms of spends. And I think that is just a trailer of what can come. But in the interim, I think that's definitely a negative read-through for a lot of other large IT players, IT services companies in India, because the likes of Infosys, where BFSI is a large segment out of US, that could be another that could hurt as another stock as well. So I think it is early to say that this is the new normal, but we'll have to wait and watch how this pans out. Will they be successful? Will others follow or not? But in the interim, I think some of the other, at least the sentiments for IT services will remain weak in the near term.
All right, so that's.
No, I just thought if, Mahima, one is that, but two also thought we'll get Hemen's view, but quite interesting that ER&D may be separate, but IT services certainly seem to have a pressure point.
Absolutely, yeah. So we take Hemen's view as well on the IT space. Hemen, anything that you are finding attractive right now in the entire IT space?
As a forebearer of bad news, Mahima, I would suggest we talk about IT seriously next year. And why I'm saying this, we've posted a medium-term top, maybe even a longer-term top. IT has, the market's been that way. It's not standalone IT. But if you look at the Nifty IT index, Mahima, if I can take 30 more seconds from you, 10,991, Mahima, to a high of 46,000 in 4.5 years. It's phenomenal. Negative divergence crossover sells. I am not saying it will not bounce back. If the market stabilizes, IT is oversold, it will recover. But if you are expecting the IT index to make a new high in this calendar year, one can never say with surety. The market is always right, but I'd say next to impossible. So I have a feeling that after a 4.5-year-old scintillating up move, I think a year or year and a half should be taken for granted as a time price retracement. So I have a feeling that in this calendar year, I would be unpleasantly surprised if we make a new high by the IT index, whether it's TCS or whether it's LTM Mindtree. They've all entered a correction of a greater degree. Once again, a recovery is not ruled out, but it'll be a bounce, not a rally. Maybe.
Okay, bounce and not a rally. Okay, and well, maybe there's a brokerage called Boost, if not for IT, then for something else. JSW Energy, I believe Mihika Johnson with that note. Mihika.
They've maintained their buy rating on JSW Energies, and Jefferies has actually hiked the target price from 680 rupees to 700 rupees. Jefferies does say that the power demand of 6% growth is visible, and the locked-in capacity limits by JSW Energy does limit the earnings downside. They also expect JSW's capacity to end at 10.2 gigawatts by FY25 end versus 8.1 gigawatts in Q3. The net debt to EBITDA is expected to peak in FY25 at 8.7 times the KSK acquisition once the debt comes in by March 2025, and the net debt trajectory as a whole will improve post FY27 and stabilize at around 2.3 to 2.4 times. And they lastly expect a forecast of 36% EBITDA compounded annual growth rate in FY24 to FY27 and a 24% CAGR in FY24 to FY30 as a whole. And lastly, key triggers do include the capacity addition updates, the annual power demand trending 6% year on year so far, as well as stable merchant prices.
Very interesting. Mihika, thanks for that. Thanks a lot for that call. Hemen, any thoughts here? Power companies have had a splendid 2024. The recent pullback has been fairly stiff too.
Yes, if you were to take a slightly longer term point of view, Neeraj, yes, one can nibble. If you're looking at it from an investment point of view, I'd say buy 1/3 now and wait to buy the 2/3 later. I don't mean too much in terms of price erosion, but yeah, time is something which is going to take its course. I'll just talk briefly about Tata Power, Neeraj. The stock moves from 27 to 490. It'll be unexpected if the stock consolidates, corrects, moves up to make a new high without a 2-year correction. So it's something like that. A PFC has moved up phenomenally. Everything is good. It's all hunky-dory, but its relative strength hasn't retraced much. The move has been shallow compared to the time. But all these will make or give new highs or give good moves in the next calendar year, not this year. So yeah, JSW Energy also looks like a buy at current levels, oversold, downside limited, above the 55-day exponential moving average, Davy, MACD, stochastics, RSI buy. I could give you a list of stocks while looking good for short to medium term, but longer term, I'd say wait. It's not going anywhere in a hurry.
Point well noted. Okay, 528 and counting on JSW Energy right now. But Siddharth, what's your view on some of these power companies? Because they've had a fabulous run, except for the stumble and the flatness for select names in the last 6 months, maybe. Actually, if viewers, sorry, just before I get Siddharth's viewer, I'll just request my producer. We have the chart wherein we show the 1 month, 3 month, 6 month, and 12-month returns for various stocks. So let's pull up JSW Energy, let's pull up Tata Power, let's pull up Inox Wind, let's pull up Suzlon, and just get all of those stocks up, just to show how the power ecosystem is done before we request Siddharth Khemka's view on the same. So here's what's happened. JSW Energy, like I was saying, right? The last 6 months has completely gone awry. Otherwise, the last 5 years was very good. I'm guessing Tata Power would look similar, may not be too different. Yep, red on all the 4 quadrants. So the last 12 months, 6 months or 12 months, not that great. Otherwise, okay, Inox Wind, maybe last 3 months or 6 months will not be looking good. Exactly. Otherwise, it's done okay. Similarly for Suzlon, I think. The last 6 months returns would not be looking good, but otherwise would be looking okay. So, yep, a bit of a stall, Siddharth Khemka, the last 6 months, as has been for the markets per se. Would love to know, how do you think of the ecosystem?
So definitely, Neeraj, see, there are two parts to the entire power space. One is the renewable energy, which has done well, and the market did a lot of fancy for the renewable. So valuations went up across segments, and we saw even the IPO of NTPC Green coming in. Most of these names, Tata Power has a renewable subsidiary, JSW Energy, they have a lot of renewable energy projects, and that led to a lot of re-rating. But post Trump coming to power, I think around last part of the last year, I think that is where the lot of valuations de-rating started happening, with Trump talking more about the traditional fuels and removing a lot of benefits for renewables. So clearly that was a big change in terms of sentiments. If you look at the results, or per se, they have not been that strong. The merchant power prices had gone down towards the end of last year. That impacted costs. OPEX was high, and I think new capacity addition led to higher debt, and that also led to impact in numbers. But so that's the near term. I think the demand is improving with the summer season. We are seeing in the Feb month record energy demand, which is again helping the prices recover. The long-term trend, I think, is positive because power demand, a lot of these companies are setting up newer projects. For example, JSW Energy just recently acquired KSK, their brownfield expansion by FY29. That will lead to growth. Plus, I think the long-term visibility or viability for renewables, that continues to remain positive. Yes, the market had seen a bump up in valuations, and that is now normalized. From here on, I would say maybe next 3 months, 6 months, we could see some consolidation. But I would remain positive on the power stocks, some of the utilities, be it JSW Energy, Tata Power, NTPC. I think the current valuations are very attractive, and the long-term trend or growth in the business that should revive.
Okay. Now the other aspect would be auto ancillaries. Before we get in closing strategies, and I also want to ask Siddharth, what does he like per se? But let's try and talk about auto ancillaries for a moment. A large pre-buying of about $3 to $4 million maybe, or is expected by the chairman and MD at Forgings, Vidya Shankar, in 2026, if the US EPA norms come into play by 2027. Listen into what he has to say on this.
If the EPA norms went into existence or go into plan as anticipated by 2027, there will be a pre-buy in 2026, and that would lead to at least a couple of $3 to $4 million of improvement in sales, as far as we are concerned. The other side is that if the norms don't come into effect in 2027, pre-buy will not be there, or if the norms come delayed, then the industry will go on per regular standards. In one way, that is also good. There is no negativity, because what happens is that if 2026 there is a pre-buy, 27 there will be a slump due to pre-buy. Now, if the pre-buy is not there, well, the demand will be evened out over a couple of years, which is also good. It's not a bad thing by any stretch.
Interesting. Okay. Siddharth Khemka, any thoughts on the forging companies or auto ancillaries by and large?
I think auto companies have been struggling, and that is also showing in the auto ancillary space. That a big part of the business growth was driven by US, Europe, which is also struggling. We heard the forging company business dependent on a policy change which may happen, may not happen, and a lot of ifs and buts are there. Even for Bharat Forge, I think the growth driver in the near term has been the defense business and not the auto ancillary or the forging business, which is the core business of the company. Hence, I think some of these names we have a neutral rating. For example, Bharat Forge, we have a neutral rating. Earnings growth are likely to grow, but largely driven by the defense space, and valuations had reached highs, and hence we see limited upside until clarity in some of these markets, especially US, Europe. The tariff war becomes a big overhang on these some of these exports oriented auto ancillary names.
Okay. Okay. Siddharth, what do you like in a market scenario like this?
Yeah, so I think if you look at some of these companies which has fallen, that is making definitely looking good and attractive from a long-term opportunity. If you look at clearly from a near-term, short-term perspective, what we like, I would say to play this summer, Varun Beverages is something that we like. We believe that the temperatures already risen in Feb, March to May. We will see above the normal temperature as forecasted by the IMD, which should help companies like Varun Beverages. The stock has come down because of the competition fear from Reliance launching the Campa Cola, but on ground we have not seen that kind of fierce competition taking place. This is the availability is limited to fewer channels where Reliance has access, and we believe that even Pepsi recently talking about bringing more food business into India bodes well for VBL, where they have recently added to the product portfolios a lot of other food products, which is driving growth. And as I said, valuations are comfortable. Next 2-3 years, earnings growth in the range of 18-20% looks good with the added advantage of attractive valuation. One can look at Varun Beverages. We have a buy rating there. Some of the other names, I think, if you look at again from the technology space, clearly avoid. You look at EMS, I think consumer durable, another way to play the AC segment, Amber, Voltas. These are the two preferred players that one can look at from a 2 to 3 quarter perspective as well.
Hemen, you like these Amber, Voltas and that cooling solution pocket, and couple that up, of course, Hemen, with your top BTST or STBT trade.
I think there is some sort of stability coming in as far as Amber and Voltas. Voltas has fallen off a cliff, Neeraj. So relatively safer because it's technically cheap because it's gone down so much. Even a corrective bounce, okay, the corrective bounce has already been more than 10%, but I believe there is more headroom there. So yeah, if you were to take a near-term trade, near-term would probably be 2 weeks, nothing lesser than that, maybe 2 to 4 weeks. I think my preference would be Voltas and then Amber. So not much to lose. We are in a short-term uptrend, and I believe this is almost on the verge of converting into a medium-term move. So things are looking better. Oh, and as far as the BTST, STBT call, I have a buy call on BTST on Jubilant FoodWorks at 616, stop loss 611, target of 626. Risk reward ratio 1:2. Jubilant FoodWorks, BTST. Here.
BTST on Jubilant FoodWorks. So bear that in mind. Siddharth Khemka, before we thank you, you spoke about how you're playing discretionary through the summer stocks? What about the QSRs? A base effect of FY or calendar year 24 will help if the consumer gets more money, maybe she or he spends on pizzas, burgers and more. Do you like the QSRs?
Definitely, that's a space which has been interesting and with a lot of events lined up. I think that is another space QSR could do well. Among the names, I think Jubilant has done a lot of efforts, is trying to improve the growth rate with the newer menu and price points. I think that is also helping. They are planning to expand the Domino's stores to 3,000 across 700 cities over the next few years. Some of the newer brands they have acquired, Popeyes, that will focus on improving unit economics because again are not yet profitable. So overall net, I think they have some of the strong long-term plans. Near-term numbers are still to pick up, and hence I think one needs to definitely have a wait and watch. The upcoming IPL season could also boost demand in the near term. So that's one stock that one can look at. Some of the other names in that space, Devyani International and RBA, I think the entire pack should start doing well with the consumption theme starting to pick up from this year onwards.
Siddharth, we'll leave it on that note. Thank you so much for taking the time out and being with us. Really appreciate your time. Himen, trying to play a bit of a rapid fire with you on a few stocks which are buzzing in trade. LG Equipment is the first one on my list, almost at the day's highs. Anything that you like here?
Oh, high volume, 2 crores. That's massive. Looking good. Turnaround, I believe, not a high risk, but yeah, it's a buy at current level here.
Okay, so LG Equipment is first one. The other one is Adani Green. Decent move today. You spoke about Adani Enterprises. Do you like the charts of Green?
In fact, I would suggest make a Adani basket, Neeraj. Every Adani stock looks good at the height, without exaggerating. Adani Green, Adani Ports, Adani Enterprises, Adani Total Gas. And there's technical logic for all of these. But yeah, simply put, Adani Green is a buy, looks good. High tops, high bottoms, turnaround on the weekly chart, indicators running positive, high volume, levels held. I can give you 7 technical reasons why one can make a basket and hold it for 2 months.
Your call on KEC is already working, Himen. Should one still go long there?
I think so. Frankly speaking, Neeraj, a mini breakout comes in on a close about 730, 750. So I believe this is just a starter. The main course and the dessert are left.
Okay. What about IEX? After a while, there seems to be some spunk here.
I would have a caveat on the stock because it tends to misfire and treats technicals like a football and kicks it out of the stadium every time. But that's on a lighter note. Stability, good above 165. Slow moving stock. Every 6 months there is some announcement and the stock tanks miserably in years. But having said that, downside is limited. A recovery is underway and I believe this recovery could recover more. So not much to lose. 165, 176 two levels above which the stock should start doing better, Neeraj.
I don't think I should ask on NACL Industries because it's locked on a circuit, but it's had such a phenomenal run that I was kind of tempted to ask you, but I'll leave that out. Let me ask you on Dhanuka Agritech. Big move today, reasonably big move, let's put it that way. Any thoughts here?
Dhanuka Agritech. I mean, it's like very many stocks in the market itself. Oversold, downside limited, short-term turnaround at play. Medium term could take some time, had a run-up, time price retracement. It's like you're doing a U-turn, Neeraj. You're from third gear, second gear, first gear. Now the U-turn and we are into first gear, something like that. It is trying to turn. I believe a turnaround is on the anvil, but all the positives right now seem to be restricted on the daily chart because it's the first day of the week. But yeah, the volume action seems to suggest that things are beginning to pick up, Neeraj.
The acquirer of NSCL, Coromandel, is up 5.5%, Heyman. Big mover, almost back to its highs, if you will, if I'm not wrong. Any thoughts here?
3, 6, 8 months of a correction, Neeraj. market gets hammered 4,500 points. Coromandel International doesn't do that. So there is resilience, there is strength. There is a swing high which could provide some resistance at around 1915, but looking good. The daily picture is nice, but if the stock moves like it has moved in a market like this and a swing high close at hand, I'd view it with a little bit of trepidation. Maybe some resistance, but above 1915, there's 1980 and then clear blue sky. Looks good. There is clear relative strength here. Like I said, the retracement has been shallow compared to the time taken.
And lastly, JSW Holdings, Emin. That's my last question to you today. But it's doing well for the last few days. Today, too up in trade. Any thoughts here?
24,000 coming.
4,000, did you say?
24,000 coming, Neeraj.
Wow. Okay. Himen, we will leave it on that note. Thank you so much for taking the time out and being with us. Much appreciate your time in the session today. Really appreciate. 5% higher for JSW in the session today. Okay. And now I've walked to the wall. Let's start wrapping up the markets and try and tell you what's happened today. So bring up the heat map very quickly first, and then we'll get the point contributors for all indices. So Wipro, ITC, BPCL, Hero, not too many losers really dramatically, even though the IT index is looking slightly sluggish today. Not large losses, but Reddy's has climbed a wall of worry. Bajaj Finserv up 4%. Strength in SBI Life, Trent, Cipla, M&M bounces back after a while, so that is good to see, as does ONGC. So those are a few names, but a fair degree of green today on this day. Let's get the market breadth, advanced decline ratio very quickly, and then just get the BSE 500. If you can get the worms, just the line graphs, just to see how is the crisscross been. Just a bit of widening, but nothing dramatic. And then let's get the BSE 500 top gainers and losers. So almost all of these stocks we kind of spoke about on the show today. So you got some idea about most of these in trade. What's not done well? First Source, Mastec. So in some sense, some of those chemical IT companies not doing well. RKN from the chemical space, Aether Energy not doing well, Mishra Dhatu, and JM Financial from the brokerage space. Actually, just one last thing. All brokerage names are suffering. You see JM Financial down 5%, you see MK down 5%. So the capital marketplace, people are not having too much of confidence. So bear that in mind. Just before we wrap up, things to watch out for. I mean, yesterday it was the China consumption numbers. In today's session, the US retail sales, India balance of trade numbers come out. Remember, WPI numbers have already come out. Shares to exit lock-in. Tomorrow, IGI will exit the lock-in up to the tune of about 5%. So that's to be kept in mind. Some dividends for Castrol India as well. So to keep that in mind. And EGM for Dhanalakshmi Bank on March 18th. So that's to be kept in mind. With that, it's a wrap on this leg of India Market Close. Thanks so much for tuning in.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very integral part of the market.
private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various firms.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various firms.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.